Good morning to all. Now we are going to discuss about GST here. This particular GST marathon videos are applicable for November 2022 attempt. And whereas with respect to November 2022 attempt, this video is 100% helpful to you. And whereas the persons who are studying May 2023 attempt, along with this marathon videos, you need to refer the amendments videos, which will be uploaded soon in our Masterminds channel. So now without further any delay, now we will enter into the concept of our GST now. So the first chapter will be here, GST in India and introduction part. GST in India and introduction part. In this, first of all, we need to know the basic things like what is meant by the word tax, what is meant by the word duty, and what is meant by the word cessma. So tax is levied on other than goods like transaction, and duty is levied on goods, and cess is levied on other than goods like transactions. Cess is levied on other than goods like transactions. Okay, ma'am. So in this case, what is meant by the word duty? Duty is levied on goods, and tax is levied on other than goods like transactions, and cess is levied for a particular purpose. Cess is levied for a particular purpose. Okay, ma'am. So these are the three things one need to learn before starting our GST, ma'am. And next one is types of taxes. There are two types of taxes, ma'am: direct taxes and indirect taxes. Here there are so many number of differences are there, but if at all you are able to remember four differences, that is more than sufficient, ma'am. The four differences that will be between direct taxes and indirect taxes will be: with respect to direct taxes, tax burden can be shifted, and with respect to indirect taxes, tax burden cannot be shifted. And second difference is direct taxes are progressive in nature, indirect taxes are regressive in nature. What is meant by the word progressive taxation, ma'am? With every level of increase in income, tax rate also increases. It is known as progressive taxation. Irrespective of your income level, if the tax rate remains consistent or constant, it is known as regressive nature. Direct taxes are progressive in nature, indirect taxes are regressive in nature. And the third difference is direct taxes are levied on persons, indirect taxes are levied on goods and services. Direct taxes are levied on persons, indirect taxes are levied on goods and services. And the next point is here. Fourth difference you need to remember. With respect to direct taxes, collection cost is high, and with respect to indirect taxes, collection cost is low. These are the four differences that are there between direct tax and indirect tax. So these are the basic level questions. This question was asked in the year 2017, as far as I remember, for 2 marks. At that time, the GST was new now. That's why those basic questions we can expect. But now in the year 2022, we cannot expect these questions will be asked in the exam. But as far as the basics are concerned, we need to learn them. That's it. Not from the examination point of view. The next one is, this is also the basic level question here. Features of indirect taxes. With respect to features of indirect taxes, first one is tax on commodities and services. That means indirect taxes are levied on goods and services. That's why another name for indirect taxation will be commodity taxation. Another name for indirect taxation will be commodity taxation. And next one is important source of revenue to the government. Because more than 50% of revenue to the government comes from indirect taxes. That's why it is an important source of revenue to the government. That's why it is the important source of revenue to the government. And next one is no perception of direct pinch. That means with ignorance, we will pay the indirect taxes. That means without knowing that we are actually paying the tax, we will pay the indirect tax. This concept is technically known as no perception of direct pinch. And next one, wider tax base. Why indirect taxes will have a wider tax base, ma? Why indirect taxes will have a wider tax base? The indirect taxes will have a wider tax base here because there is no discrimination of rich and the poor with respect to indirect taxes. There is no discrimination of rich and the poor with respect to indirect taxes. That's why there is no basic exemption will also be there in our indirect taxes. That's why in that case, what is the position, ma? Definitely indirect taxes will have a wider tax base in comparison with direct taxes. Next one, tax burden shifting. That means the burden will be shifted to the final consumer of the goods, ma, whether it may be of the goods or it may be of service. That means a tax burden will be shifted from one person to another person until the goods reach the hands of customer, manufacturer to distributor, distributor to wholesaler, wholesaler to retailer, and retailer to consumer, until the goods reached the hands of the consumer. Until the goods reached the hands of the consumer, the tax burden will be shifted from one person to another person. Next one, inflationary nature. How indirect taxes will cause inflation? What can be the reason? What can be the reason? Let's say, for example, with respect to our indirect taxes, let us assume that the value is some 10,000 and the tax is some 1,000. Total now it will be 11,000. Total it will be now 11,000. Okay. The point is here, with respect to that 11,000, if at all there are no indirect taxes, how much amount you need to invest, ma? How much amount you need to invest? 10,000. Because of indirect taxes, how much amount you need to invest now? 11,000. So that means 1,000 additionally you need to invest, ma. So that is additional investment. That is additional investment. Because of indirect taxes, additional investment will increase. When additional investment increases, automatically our working capital will increase. When working capital increases, maybe there is a possibility that the borrowing cost will increase. When the borrowing cost increases, it may increase the total cost. When the total cost is increased, in that case, what is the position, ma? Sale price will be increased. When the sale price is increased, it may lead to inflation. Okay, ma. Because of indirect taxes, additional investment is needed. Because of additional investment, working capital will increase. Because of working capital, borrowing costs will increase. Because of borrowing costs, total cost will increase. When the total cost increases, it may lead to increase in the sale price. Ultimately, it may lead to inflation. But keep it in mind, indirect taxes are one of the reasons for inflation, but not the one and only reason. Indirect taxes are one of the reasons for inflation, but not the one and only reason. Next feature is regressive nature. What is meant by the word regressive nature, ma? Indirect tax does not differentiate the persons based on their ability to pay. That means there is no discrimination of rich and the poor. Whether your income level is high or your income level is low, it does not make any difference in our indirect taxes. There will be a flat rate for all type of people, ma. That type of taxation is known as regressive taxation. And last but not the least, social welfare promotion. What is meant by this social welfare promotion, ma? In which way the indirect taxes will promote the social welfare? In which way the indirect taxes will promote the social welfare? Anybody? In indirect taxes, on sin goods like tobacco and alcoholic products. On sin goods like tobacco and alcoholic products. What is the position, ma? By taxing more, the government will reduce its consumption, thereby promoting the social welfare. Thereby promoting the social welfare. On sin goods like tobacco and alcoholic products, by taxing more, the government will reduce its consumption, thereby promoting the social welfare. So that is the point you should remember. Okay, ma'am. These are the features, ma. These are also the basic level questions. Generally, nowadays, these questions can't be asked in the exam, but from the subject point of view, you need to learn that. And now, this is the structure of our indirect taxes, ma. Whereas under old indirect tax structure on the goods, excise duty, customs duty, VAT, CST, on services, service tax, like that will be there, ma. Under new GST, new IDT tax structure, on the goods, definitely GST will be there, as well as customs is also there, ma. On services also GST will be levied. This is the new indirect tax structure. Okay. And with respect to our GST, GST is a destination based tax. What is meant by the word destination here, ma? What is meant by the word destination? Destination means the place where the goods are ultimately consumed. Destination means the place where the goods are ultimately consumed. Got the point, ma? So, previously, that means the taxation systems are here divided into two types. One is origin based and second one is destination based. With respect to origin based taxation, the revenue generally will go to the place where the seller resides. With respect to destination based taxes, the revenue will go to the place where the buyer resides. Okay. Our GST is a destination based tax. That's why the revenue will go to the state where the consumer resides. What is meant by the word consumer? The person who purchases the goods for his personal use. There ends the supply chain, ma. When the goods reach the hands of final consumer, the person who purchases the goods for his personal use, that particular place will be treated as destination. That's why that particular state government will get the revenue. So GST is a destination based tax. And in the same way, the ultimate burden of the tax will be there on final consumer. Just now we discussed. Being an indirect tax, the tax burden will be shifted from manufacturer to distributor, distributor to wholesaler, wholesaler to retailer, and retailer to consumer. When the goods reach the hands of consumer, automatically tax burden will be there on the final consumer. And GST is also a value added tax. What is meant by the word value added tax? In every process, what is the value addition? On that value addition only, we will pay the GST. Like manufacturer to distributor, distributor to wholesaler, wholesaler to retailer, and retailer to consumer. In every process, definitely there will be a value addition. On that value addition only, we will pay the GST. That's why GST is a value added tax. When this concept of value addition was followed, automatically it will eliminate the cascading effect. Because you are paying the GST only on the value addition that was done by that particular process, thereby eliminating the cascading effect to the maximum possible extent. And India is following this dual GST concept. Why India is following dual GST concept? Before discussing this, how many GST models are there worldwide? There are 4 models worldwide. National GST, state GST, non-concurrent dual GST, and concurrent dual GST. Like that, worldwide, there are 4 models. GST models worldwide, total 4. National GST, state GST, non-concurrent dual GST, concurrent dual GST. Like that, 4 models are there. Okay, ma? The first one is national GST. In that, there will be only CGST, ma. There will be only CGST. And state GST. In that, there will be SGST. Generally, republic countries like China will follow this national GST, ma. Whereas federal countries like United States of America will follow this state GST. And third one is non-concurrent dual GST. On services, CGST will be there. On the goods, SGST will be there. In non-concurrent dual GST, on services, CGST will be there. On the goods, SGST will be there. But no country is following this approach because it may lead to cascading effect. That's why this non-concurrent dual GST model was not followed nowadays. Next one, concurrent dual GST. In this, both center and state will levy tax on both goods and services, ma'am. India is following this concurrent dual GST model. India is following this concurrent dual GST model. Sir, why India is following this concurrent dual GST model? Because India is a federal republic country. India is a federal republic country. It is neither the federal country nor the republic country. That's why India is a mixed economy. So, therefore, some powers are there to the central government as well as some powers are there to the state government. Some powers are there to the central government as well as some powers are there to the state government. That means both the governments will have their powers as well as their respective obligations also. In order to give financial independence to both the governments, India is following this concurrent dual GST model. Because in India, central government will have some powers. State government will also have some powers. Central will have some powers, as well as state will also have some powers. The question arises here, in that case, both the government should be financially independent. In order to make it happen, India is following this concurrent dual GST model. Okay, ma'am. And based on this, how many types of GSTs are there might present in India? 4 types of GSTs are there. CGST, SGST, IGST and UTGST. There are 4 types of GSTs, ma'am. India has adopted dual GST model. Center and state simultaneously will levy the tax. If at all it is the intrastate supply, CGST plus SGST will be levied. If at all it is the interstate supply, IGST will be levied. IGST rate is equal to CGST rate plus SGST rate. That is the point. And based on that, with respect to the point here, what are the taxes that are subsumed under GST? Okay, sir, India is following this concurrent dual GST model. That is okay. The next point is here. What are the taxes that are subsumed under GST? What are the taxes that are subsumed under GST? Like some central items as well as some state items are merged in GST. Central items like excise duty, additional duty of excise, CVD, special CVD, customs duty. Sorry, customs duty was not merged. Service tax, CST and their relevant surcharge and cess are merged in GST. In the same way, some state levies like VAT, entertainment tax, luxury tax, advertisement tax, entry tax, purchase tax, state surcharges and their respective cess. All these items are merged in SGST. All these items are merged in SGST. Okay, ma'am. So, with respect to this, that means the question arises here. Sir, some central items are merged in GST as well as some state items are also merged in GST. But my question is here. That means each and every indirect tax is merged in GST. Each and every indirect tax is merged in GST. Answer is no. The taxes which are part and parcel of supply chain or the taxes that are merged in GST. What are the indirect taxes that are subsumed under GST? The indirect taxes which are paid part and parcel of supply chain or the indirect taxes that are merged in GST. Sir, that means what is meant by the word supply chain first of all? What is meant by the word supply chain, ma? Manufacturer to distributor, distributor to wholesaler, wholesaler to retailer, and retailer to consumer. This process is known as supply chain. The taxes which are part and parcel of supply chain are the taxes that are merged in GST. If those items are not merged, not part of supply chain, those taxes are not merged in GST. Any example for that? Any example for the taxes which are not merged in GST? Alcoholic liquor for human consumption, petroleum products like crude petroleum, diesel, petrol, natural gas, ATF, aviation turbine fuel. All these items, there is no GST material. And in the same way, with respect to the taxes which are not merged, petrol, apart from these two, road and passenger tax, toll taxes, property tax, stamp duty, all these taxes are also not merged in GST, because generally these are not part of supply chain. That is the point we need to remember. And benefits of GST naam ke vaste. That means it will eliminate the cascading effect. Thereby, definitely it will eliminate the double taxation. When the double taxation was avoided, automatically the cost will be reduced. Automatically, it will give boost to the Indian economy, as well as Make in India program will be successful, and it will give incremental revenue to the government. Naam ke vaste, generally these things you can ignore them straight away. And now we are going to enter into this constitutional provisions on GST. Constitutional provisions on GST. In order to levy any tax, constitutional authority is needed. This point was laid down in article number 265. What does article number 265 says, ma? No authority, no tax. Without constitutional authority, no government is able to levy and collect any type of tax. This point was specified in article number 265. What is the next one? Okay, sir. Without constitutional authority, without authority of law, no government is able to levy and collect any type of tax. That is okay. The next question is here, who are having the authority to make the laws in India? Who are having the authority to make the laws in India? So, who are having the authority, ma? This point was specified in article number 245. This point was specified in article number 245. What does article number 245 says? If the matter is of national importance, then central government will have the authority to make the law. If the matter is of state importance, state legislature will have the authority to make the law. If the matter is of national importance, central will have the authority to make the law. If the matter is of state importance, state legislature, assembly will have the authority to make the law. Sir, if at all it was like that, then there is a possibility for the dispute now between central and the state. There is a possibility, because central will say it is of national importance and state will say it is of state importance also. Definitely there is a possibility for the dispute between them. There is a possibility for the litigation between central and the state. In order to avoid that, article number 246A was created. 246 was created. In article number 246, there are three types of list. List 1, list 2, list 3. List 1, union list. List 2, state list. List 3, concurrent list. Whereas in list 1, union list, exclusive power is there with central. List 2, state list, their exclusive power is there with state. List 3, concurrent list, both the governments can administrate the matter. Sir, here also concurrent list is there, na? Here also concurrent list is there, na? In that both the governments can administrate the matter, na? That means both the government can levy the tax also? Answer is no. Because this concurrent list covers non-taxation matters only. This concurrent list covers non-taxation matters only. That means taxation matters are either covered under list 1 or covered under list 2. List 3 concurrent list covers non-taxation matters only. Taxation matters are either covered under list 1 or covered under list 2. That means as per article number 246, it was designed in such a way that only one government at a time can levy the tax. Article number 246 was designed in such a way that only one government at a time can levy the tax. This is a speciality of article number 246 because taxation matters are covered either under list 1 or under list 2. That means at a time only one government is able to levy the tax. That is the point. Okay, ma'am. And in order to introduce the GST, there was a significant amendments are needed for the introduction of GST. For that sake, Constitution Amendment Act 101 just came into scene. The question arises here, sir, why significant amendment in the Constitution is needed for the introduction of GST? The reason is, just now we discussed, article number 246 itself is the problem there. Because article number 246 gives authority only to the one government at a time. But in GST, both the governments should simultaneously levy the tax. That can't be done by using the power that is given by article number 246. In order to overcome this difficulty, Constitutional Amendment Act 101 was placed, and by using that power, article number 246A was created. By using that power, article number 246A was created. This article number 246A has an overriding effect on article number 246. Why, ma? Because article number 246 gives only one government at a time to levy the tax. But in order to levy the tax simultaneously by both the governments, article number 246 was overridden by article number 246A. So as per article number 246A, both the governments will simultaneously levy the tax. If at all it is the intrastate supply, CGST plus SGST will be levied. If at all it is the interstate supply, IGST will be levied. And on the 5 petroleum products, whenever the GST Council approves, from that particular date, GST will be levied. This is the point. Next article number is article number 269A. Sir, why article number 269A was created? Power to levy the tax on interstate supply is there exclusively for the central. No issue with respect to that. But whereas in GST, only central government taxes are merged or state government taxes are also merged, ma'am. Central as well as state, both the government's taxes are merged in GST. The question arises here. But what about the IGST revenue? Who is levying the IGST? Central. Who is collecting it? Central. That means 100% of the revenue is going to central only, na? Is it fair? No. Definitely the share should be given to the state government. For that sake, based on this article number 269A, IGST Act was created. As per IGST Act, now the ratio is 1:1. In the ratio of 1:1, that means in the IGST revenue that was collected, 50% revenue will go to the central government and remaining 50% revenue will go to the destination state government. This point was there on article number 269A. And next one is article number 279A, which deals with GST Council. We will discuss that matter later in this particular class. Here, as per article number 246A, supplies can be divided into two types, intrastate and interstate. What is meant by the word intrastate, ma? Within state. If at all the supply is intrastate supply, what can be levied, ma? CGST plus SGST. What is meant by the word interstate supply? Between the states. Between the states. On interstate supplies, what will be levied, ma? IGST. And imports and exports are deemed to be interstate. This point was laid down in article number 269A that imports are deemed to be interstate supplies. Therefore, on the imports, along with customs, IGST will also be levied. Next point is here GST Council, which was established by article number 279A. What does this article number 279A will say? What is meant by GST Council, ma? It is a decision-making body in relation to GST. That means whatever the matter that is there in relation to GST, that every decision will be taken at GST Council only. Sir, who can be the members of this particular GST Council? Who can be the members, ma? Sorry, who can be the chairman first? Central Finance Minister or Union Finance Minister will be the chairman of this council, ma. And who can be the members? State Finance Ministers or any other minister that is nominated by the state can become members of this GST Council. Sir, how the decisions are taken at the GST Council? Based on majority. Sir, how much majority is required to take a decision in GST Council? 75%, in our language, 3/4. 3/4 majority is required in order to take any decision in the GST Council. Sir, in that case, the voting power is there, sir. Yes, central will have the voting power of 1/3 and state government will have the voting power of 2/3. Central will have the voting power of 1/3, ma. States will have the voting power of 2/3. That means a central government cannot dominate the state government there. In the same way, state governments also cannot dominate the central. Why, sir? In order to take any decision, what should be the majority? 75%. That means even all the states come together, what is the majority? 2/3. In terms of percentage, 67 max. But to take the decision, what is required? 75. That means central cannot dominate the state. State also cannot dominate the central. The discussion should be on a mutual cooperation basis. And sir, what are the matters generally that will be discussed in GST Council? That means what should be the tax rate? To which products exemptions should be given? What is the threshold limit for registration? Any disputes arises, then how to resolve them? All these matters will be discussed in GST Council. And in the same way, another point also I told you that point is also there in article number 246A. Whenever GST Council approves, from that particular date, GST will be levied on 5 petroleum products like crude petroleum, diesel, petrol, natural gas and ADF. With respect to them, whenever GST Council approves, from that particular date, GST will be levied. This point was there in the year 2017. Now we are there in 2022. I hope so, at least this point will not come. So because the government is, not only this government, any particular government is not willing to include this particular petrol in the scope of GST. Ma. Why, ma? What can be the reason? Because if it was included in the scope of this GST, per liter petrol will be approximately some 55 to 65 rupees per liter. Ma. Thereby almost 50 rupees per liter revenue will be foregone for the government. Now the government is not willing to lose that much of revenue from petrol. That's why I think in the near term as well as in the long term, So these things will not be included in the GST. And next point is, this is non-KYC, you can ignore it. Functions of GST network. What are the functions of GST network? What is meant by the word GST network? What is meant by the word GST network? It was a non-profit oriented company that was established by the government. In that, 50% of the share capital was held by central government. Remaining 50% of the share capital was held by state government. That means it is 100% owned government company. Sir, what this GST network will do? It will operate GST common portal, in our language, GST website. So what this GST network will do, the GST network generally will operate this GST website or GST common portal. What the GST common portal will do generally? It will facilitate the registration, and whatever the return we files, it will forward it to the government. In the same way, various MIS reports, that means monthly information reports, it will generate to the government. All these functions are performed by GST common portal or the work of GST network, which is actually now 100% owned by government. So from the examination point of view, in this particular first chapter, the important areas you need to keep focus. Generally, constitutional aspects, please keep a focus on these constitutional aspects. And what are the taxes subsumed? You need to keep focus on taxes subsumed and constitutional provisions on GST, especially Article number 246A and Article number 279A. And last but not the least, functions of GST network. These are the areas you should keep focus while studying chapter number 1. So there ends chapter number 1. Okay, ma'am. Now, after completion of chapter number 1, we need to discuss chapter number 2, which deals with the topic here, supply. So in any act, there will be a taxable event, whereas with respect to GST also, there will be a taxable event. That particular taxable event is known as supply. So what is meant by the word taxable event? What is meant by the word taxable event? When tax is levied, when tax is attracted, or what is the triggering point of taxation, it will be treated as taxable event. Okay, ma. Every act has its own taxable event. In the same way, our GST is also having a taxable event. That particular taxable event is known as supply. That particular taxable event is known as supply. Okay. So, with respect to supply, which section deals with here, ma'am? Section 7 here deals with the word supply here. The scope of the supply will be decided by this particular supply chapter, ma'am. Scope of the supply we need to discuss in this chapter number 2 now. So, in that section 7, which deals with this particular taxable event of GST, there are 3 subsections, 7.1, 7 subsection 1A and 7.2. Whereas 7.1, there are 3 clauses, 7.1A, 7.1B and 7.1C. 7.1A deals with general meaning of supply. 7.1B deals with importation of service. 7.1C deals with deemed supplies. 7 subsection 1A deals with classification, and 7 subsection 2 deals with negative list of GST. So these are the topics what we have discussed, we need to discuss here. As per 7.1A, there are 6 parameters or 6 conditions that are required to be satisfied. In that, the first one is it should be a supply. Second one is the supply should be of goods and services, and it should be done for a consideration, and it should be done in the course or furtherance of business. If all these points are satisfied, then as per section 7, subsection 1, clause A, definitely we are liable to pay the GST. First one, it should be a supply. Second one, that supply should be of goods or services. Third one, it should be done for a consideration. Fourth one, it should be done in the course or furtherance of business. So first we need to discuss about what is meant by the word supply. There are 8 forms of supplies that are here. One is sale, transfer, barter, exchange, lease, rentals, license, disposal, etc. What is meant by the word sale? Where the ownership is going to be transferred, it is known as sale. What is meant by the word transfer? Even though the ownership is not transferred, but physical possession is transferred, it is known as transfer. Generally, it covers stock transfers, hire purchase transactions, like that. Barter. If two parties exchanges non-monetary consideration, it is known as barter. Exchange. What is meant by the word exchange here? With respect to barter, two parties exchanges non-monetary consideration, and whereas at least some part of the consideration involved therein is in terms of money, it is known as exchange. And next one is lease. Lease means generally if any movable property is given on rental basis, it is known as lease. And any immovable property is given on rental basis, it is known as rental. And permission to use the IPR is known as license. At the end of the lifetime, if the asset is sold as scrap, it is known as disposal. These are the 8 forms. In those 8 forms, definitely with respect to goods, 5 forms are applicable. So how many forms are applicable with respect to goods? 5. Sale, transfer, barter, exchange, and disposal. These are the 5 forms that are applicable in relation to goods. And how many forms are applicable in relation to services? 6 forms will be applicable. Instead of sale, provision of service will be there. Provision of service, transfer, barter, lease, rentals, and license. These are the 6 forms that will be applicable for the service, whereas exchange and disposal is not applicable for service. These forms of supply should be of either goods or service. The question arises here, what is meant by the word goods? Goods means every kind of movable property. Sir, what is meant by the word movable property? If the item can be shifted from one place to another place in the same condition, it is movable. If it requires dismantling and re-erection, it is known as immovable. What is meant by the word movable property? If the item can be shifted from one place to another place in the same condition, it is movable. If it requires dismantling and re-erection, it is known as immovable. Every kind of movable property is a good. And it includes actionable claim also. Sir, what is meant by the word actionable claim? The claim on which we can take legal action even though there is no security is known as actionable claim. The claim on which we can take legal action even though there is no security, it is known as actionable claim. The point is here, sir, that means what are the examples for actionable claims? Betting, gambling, lotteries, every negotiable instrument is actionable claim, arrears of rent. All these are the examples for actionable claims. Sir, that means on every actionable claim are we liable to pay the GST? Answer is no. Because as per section 7, subsection 2, negative list of GST, only betting, gambling and lotteries we are liable to pay the GST, whereas rest of the actionable claims we are not liable to pay any GST. So, is every actionable claim is a good? Yes. That means on every actionable claim are we liable to pay GST? No. Only betting, gambling and lotteries are liable to GST, whereas rest of the actionable claims are out of scope of supply as per section 7, subsection 2. And in the same way, growing crops, gross and the things attaching to or forming part of the land which can be separated before supply. That means whatever the things that can be separated before supply, definitely they can be treated as goods. That means carrot, beetroot, onions, diamonds, gold, like that. Whatever the things that can be separated from the land before making a supply, everything is a good. But agro-based items are exempted. That's why on beetroot, carrot, etc., we are not liable to pay any GST there. In the same way, goods excludes money and securities. We will discuss it later on at the time of service. So after the completion of the goods definition, we need to see service. Service means anything other than goods is a service. That means practically everything other than the goods is a service. It was a tricky definition. If at all it was not a good, automatically it will become service. And generally, money and securities are neither the goods nor the service. Money and securities are neither the goods nor the service. But whereas, sir, what is meant by the word money first? Money means legal tender money. The money which is in circulation. Except old currency or old coins, the money which is in circulation, which is legal tender money, is known as money here. And securities like shares, debentures, etc. So money and securities are neither the goods nor the service. But whereas use of money or conversion of money, those are definitely comes under the word supply of service. So what is meant by this use of money? For using others' money, what is the consideration generally you will pay? Interest. What is the consideration generally you will pay? Interest. Okay, with respect to that, interest can be divided into here two types. Interest on credit cards, whereas other interest incomes. So interest can be divided into two types. Interest on credit cards, all other interest incomes like interest on personal loan, interest on housing loan, interest on term loan, like that. So practically interest on credit cards only taxable, all other interest incomes are exempted. So money and securities are neither the goods nor the service. But use of money for a consideration, definitely it is a supply of service and GST is attracted. For use of money, what is the consideration generally we will pay? Interest. Interest here can be divided into two types. One is interest on credit card. Second one is other interest incomes. With respect to interest on credit card only, it is taxable. All other interest incomes are exempted. And in the same way, conversion of money from one form to another form, one currency to another currency, one denomination to another denomination, if at all there is a separate consideration that was charged, what is the position, What is the position? In those cases, one form to another form, one denomination to another denomination, one currency to another currency. If at all separate consideration was charged, then also it is a supply of service and GST is needed to be paid. And in the same way, facilitating transaction in securities is also a supply of service. That means securities are neither the goods nor services, but whereas transaction in securities like stockbroking services, definitely they are taxable. That is also another point. So what is the topic we are discussing? 7, subsection 1, clause A, general meaning of supply. In that first one, supply word we just completed. Second one, goods and services, just now we completed. What is the third one? Supply should be done for a consideration. The next question arises here. Sir, what is meant by the word consideration? Consideration means here, any payment made or to be made, whether in money or otherwise. That means consideration here can be divided into two types. One is monetary consideration. Second one is non-monetary consideration. Sir, what is meant by this monetary consideration? The consideration which is in terms of money and in kind will be treated as non-monetary consideration. But anyway, whether it is a monetary consideration or a non-monetary consideration, in both cases, what is the position, ma? Definitely it will be treated as a valid consideration. This is the first point. Second one, the monetary value of any act or forbearance, that means to do something or refraining from doing it, both are also treated as valid considerations. Sir, act means to do something, that is okay. Forbearance means not to do something. Sir, doing something is a valid consideration, that is okay. But not doing something, how it can be treated as a consideration? Like the best example for that is non-compete agreements. In them, the other party will promise by taking some consideration, he promises something not to do, like he will not do the business for 10 years in that prescribed area. Here he is promising to do something or not to do something, not to do something in non-compete agreements. Those are treated as forbearance technically. So anyway, whether it is act or forbearance, that means consideration can be either positive or consideration can be negative. Both are valid. Positive consideration means to do something. Negative consideration means not to do something. Like forbearance, both are treated as valid considerations. And in the same way, subsidy excludes subsidy from government. That means what is the position here? Subsidy from government excludable. Subsidy from any person other than government includable. Subsidy from government excludable. Subsidy from any person other than government includable. So, any example? Let's say Covishield vaccine is there. Let us assume that its price is 720 rupees. Serum Institute is supplying it to the citizens, let's say for example for some 500 rupees. Remaining 220 was paid by central government. Let us assume like that. In that case, what can be the consideration? What can be the consideration? Is it 720 or 500? Here 200 rupees subsidy was given by whom? Is it government or non-government? Government. Subsidy by government includable or excludable from consideration? Excludable. In that case, what can be the consideration? 720 minus 220, 500 will be the consideration. If at all this 220 was given by any person other than government, in that case, that amount is also includable. Then what is the taxable value or what is the consideration then? Is it 500 or 720? It will be 720. Subsidy will also be includable. Same point will be applicable to security deposit also. Generally, security deposit is not a consideration unless otherwise it is adjusted for the payment. Security deposit is not a consideration unless otherwise it is adjusted for the payment. That means, what is the point, ma'am? Let's say, for example, when the BSNL was there in limelight, the security deposit to take the BSNL connection was 2,500 rupees. Okay. At the time of making that particular security deposit, it is not in relation to supply. Therefore, there is no need to pay any GST on it. But let's say, for example, in the last month, you did not make the payment of the bill. For that bill amount, this security amount was forfeited. The month in which that security deposit was forfeited, in that particular month, it will be treated as consideration and you are liable to pay the GST. So, security deposit is not a consideration unless otherwise it is adjusted for the payment. Okay, ma. This is the point. What we have to remember with respect to this consideration topic, ma. And in the same way, consideration can be, what we can say is, can flow from either the recipient or from any other person. That means it is not mandatory that recipient should pay the consideration. In simple terms, it is not necessary that the consideration should always move from the recipient. Even it can be moved from a third party also. Sir, any example for that? You students who are actually the recipient of service, students. but who are paying the money? Your parents. So in that case, consideration is given by the recipient or by the third party? By the third party. But still, it is treated as valid consideration as long as it is given in relation to supply. So these are the points what we have to remember with respect to consideration, ma'am. Now we need to move to the topic of donations now. Okay, ma'am. After completion of 7 subsection 1 clause C deemed supplies, now we need to see 7 subsection 1A, which deals with classification. 7 subsection 1A, which deals with classification. So 7 subsection 1A read with schedule 2 deals with classification. That means 7 subsection 1A does not say whether any activity amounts to supply or not. If at all it is a supply as per section 7 subsection 1, then whether it is a supply of the goods or a supply of service will be decided by 7 subsection 1A. Okay, ma. 7 subsection 1A does not say whether the activity amounts to supply or not. If at all it is a supply as per section 7.1, whether it is a supply of the good or a supply of service will be taken care by 7 subsection 1A read with schedule 2. In that the first word is transfer, ma. So here with respect to transfer, 3 points are there, ma. First one, transfer of title, and second one, transfer of title in the future, and third one, without transfer of title, only right in the goods is transferred. Here you can observe that what is meant by the word title, ma? Ownership. When the ownership is going to be transferred, whether immediately or at a future date, in both cases it will be treated as supply of the goods only. Okay, ma. What is the point here? Whether the ownership is going to be transferred immediately or the ownership is going to be transferred at a future date, whether it is the supply of the goods or not. Yes, because where the ownership involved, where ownership is going to be involved therein, definitely it will be treated as supply of the goods only. Without transfer of ownership, only right of possession is going to be transferred. It will be treated as supply of service. That is the first point. And second one, land and buildings. Sir, already land and buildings are covered under negative list now, 7 subsection 2. Then why again the classification is needed? 7 subsection 2 covers only sale of the land and sale of the building. It does not cover tenancy of the land or letting out of the building. Those tenancy of the land or letting out of the building can be treated as supply of the goods or supply of service, ma. Supply of service. Why, ma? Because here the ownership is not going to be transferred. That is the point, ma. Okay. Next point is here. Treatment or process. What is meant by this treatment or process, ma? This treatment or process applied on another person's goods. It is technically known as job work. What is meant by the word job work, ma? Doing some process on the goods relating to the others. Here the ownership is not going to be transferred. Na? For example, you are having the problem with your mobile. You went to a service center. In that case, what is the position? Na? With respect to that service center, he will do the repair service on your mobile. That means here the ownership is not going to be transferred. Na? That's why what is the position? Is it a supply of the goods or a supply of service? Supply of service. Simply, when the ownership is involved, then only it will be a supply of goods, ma. If the ownership is not involved therein, is it a supply of the goods or a supply of service? Supply of service. In the same way, transfer of business asset. See this, with respect to the first case, it is a permanent transfer. Goods forming part of the assets of the business are going to be transferred permanently. When the business assets are going to be transferred permanently, is it a supply of the good or a supply of service, ma? Supply of the goods. In the same way, when the business goods are given for personal use on a temporary basis, let's say travel car was used by the owner for his family trip. Or Travel's car was used by the owner's friend for his family trip. Here, ownership is not going to be transferred. Only right of possession is transferred. In that case, is it a supply of the goods or a supply of service? Supply of service. And in the same way, when the business is closed down, when the person is ceased to be a taxable person, when the business is closed, whatever the closing stock that was there, at the time of closing down the business, it is deemed to be sold. When it is deemed to be sold, is it a supply of the goods or a supply of service? Supply of goods. When it is deemed to be sold means automatically it will be classified as supply of the goods only. And in the same way, with respect to few cases, temporary transfer of IPR, that means KFC brand name, iBaco brand name, was given to those franchise owners on a temporary basis to use their brand name. In that case, is it a supply of the goods or supply of service? Supply of service. If the brand name is transferred permanently, then it is a supply of the good. For example, Nokia brand name was sold to Microsoft on a permanent basis. Is it a supply of the good or a supply of service? Supply of good. But when it is transferred on a temporary basis, it is a supply of service. In the same way, renting of immovable property other than land and buildings, because land and buildings is already covered under point number 2. So other than land and buildings, what can be the immovable property? Plant and machinery. If plant and machinery is given on rent, ownership is transferred or not transferred? Not transferred. Then is it a supply of the good or a supply of service? Supply of service. And in the same way, construction. While the property was under construction, some part of the consideration was paid, then it will be treated as a service and you are liable to pay the GST. But whereas the total consideration was paid after the certificate of completion, in that case, it comes under sale of building, which is outside the scope of supplying. While the property was under construction, some part of the consideration was paid, it will be treated as supply of service and you are liable to pay the GST. But whereas total consideration was paid after the certificate of completion, in that case, what is the position? Definitely it comes under sale of building, which is outside the scope of GST. And in the same way, development of IT software. Here, software can be divided into two types. One is pre-packed software. One is pre-packed software. Second one is tailor-made software. Sir, what is meant by this pre-packed software? Pre-packed software means ready to install. That means simply you have to purchase your CD and you can install it. Example, antivirus software. Yes, you need to purchase it and definitely you can install it straight away. And second one is, those pre-packed softwares which comes in your CD is treated as supply of the good or a supply of service, supply of goods. But whereas tailor-made software, that is customized software, software that is designed as per the needs of the customer, is it a supply of the good or a supply of service? Yes, definitely it is a supply of service. Next one, tolerance or forbearance, supply of service. And without transfer of ownership, only right to use is transferred. That is also supply of service. And next one is composite supply. Here, goods plus service, both will be there. What is meant by the word composite supply? Where goods and service, both are there. Where goods and service, both are there. In that case, it will be treated as composite supply here. Even though goods and service, both are there, law specifically says it is a supply of service. What are the activities that are covered under composite supply? First one, works contract. What is meant by the word works contract? Construction of immovable property is known as works contract, like dams, bridges, canals, like that. And second one is restaurant. So one is works contract, second one is restaurant service. Those two are covered under the word composite supply under section 7, subsection 1A. Even though some element of goods were involved, But still, law specifically says that it is the supply of service only. And last but not the least, AOP to member. That means association of persons, or BOI to member, that means club to the member. Any items are supplied, any goods are supplied, automatically it will come under supply of goods only. This is 7 subsection 1A, which deals with classification. Next point is we need to see 7 subsection 2, which deals with negative list. That means the activities that are specified in 7 subsection 2 are neither the supply of the goods nor the supply of service. Simply, they are out of scope of supply. In that, the first point will be services by employee to employer in the course of his employment. Already this point we discussed in deemed supplies concept. Whatever the benefits, whatever the facilities, the employer will give to the employee as a part of employment agreement, it is taxable under income from salaries but not under GST. But whatever the benefits that are given by the employer to the employee, which is outside the scope of employment agreement, in that case, definitely it comes under supply ma, GST is payable. Here, what is there in the negative list? Whatever the things that were done in the scope of employment agreement, because they are taxable under income tax, that's why they are excluded. That is the point. Second one, whatever the services that are done by the court or tribunal, that means justice should be provided equally to all. In order to happen that particular thing, whatever the services that are provided by the court or tribunal, what is the position? Are they out of scope supply or not? Yes, they are out of scope of supply. In the same way, functions performed by members of parliament, MLAs, panchayat ward members, corporators, JP chairmen, like that, simply people elective members. In that capacity, whatever the functions they will perform, they are outside the scope of GST. Let's say, for example, whatever the functions that are needed to be performed by MP, in the MP capacity are not liable to pay GST. But if the MP purchases a car, on that he is liable to pay GST. Because that function is not in the capacity of MP. In his individual capacity, is purchasing a car. So whatever the things that are needed to be done by the MP as per the constitution, whatever the functions that are entrusted to him by the constitution, those functions are out of scope of supply. There is no need to pay any GST. In the same way, duties performed by any person in the capacity of constitutional post holder. So what is meant by this constitutional post holders concept? Like President of India, Governor, Chief Election Officers, and Chief Justice of Supreme Court. All these people are actually appointed by the Constitution. So whatever the things they will do in the designation, they are out of scope of supply. There is no need to pay any GST. In the same way, any person as a chairman, as a member, as a director of governmental regulatory bodies like SEBI, IRDA, RBI, like that. Let's say any person who is appointed as a SEBI chairman, as a SEBI member, or a SEBI director. In that capacity, whatever the functions he will perform, they are out of scope of supply. There is no need to pay any GST on it. In the same way, so burial, crematorium, mortuary, generally they are linked to the emotions of the people. That's why government don't want to touch it. Therefore, on these activities like burial, mortuary, crematorium, all these activities, you are not liable to pay any GST. They are out of scope of supply. In the same way, sale of land and sale of building. I already told you those things. Sale of the land and sale of the building are outside the scope of supply. But construction service is within the scope of supply. And already this point also I told you that actionable claims other than betting, gambling and lotteries, we are not liable to pay any GST. That is the thing you need to remember. There ends section 7. And now we need to see section 8 composite and mixed supplies. Sir, if at all any item is supplied individually, in those cases section 7 is applicable. If any items are supplied as a bundle, in those cases, Section 8 is applicable. Any item which is supplied individually, then Section 7 is applicable, ma. Any items are supplied as a bundle, in those cases, Section 8 will come into C. So, as per Section 8, supplies can be divided into two types, ma. It can be a composite supply or it can be a mixed supply. Okay, sir, what is meant by the word composite supply then? First one, minimum 2 or more taxable supply should be there. Second one, they should be naturally bundled. And third one of the supply should be a principal supply. If all these conditions are satisfied, then it is a composite supply. First one, minimum 2 or more taxable supply should be there. Second one, they should be naturally bundled. Third one of the supply should be a principal supply. If all these three conditions are satisfied, it is a composite supply. Sir, minimum 2 or more taxable supplies. That means if at all one of the supply is an exempted supply, in that case, it is not a composite supply, ma. Automatically it will become mixed supply. In order to treat any supply, any bundle as a composite supply, in that bundle, all the supply should be taxable supplies only. Second one, they should be naturally bundled. What is meant by the word naturally bundled? There is no clear-cut formula for this natural bundle, but whereas depending upon the facts of the case, if the customers expect them in such a way, then it can be a natural bundle. Or there is a tradition in that particular business to supply them together, then it is also a natural bundle. And without the other, the total bundle is purposeless or useless. In those cases also it can be termed as natural bundle. For example, customers expect them in such a way. Let's say hotel accommodation with breakfast is example for that. If you are staying in a particular hotel, then you will expect breakfast from that hotel only. Then it is a natural bundle. And TV with remote, TV with warranty, they are supplied as a tradition of business together. They are also natural bundle. And lens with frame. Without the other, the total bundle is useless. You can't only carry the lens as well as frame only. By combining together only, it will serve the purpose. Then also it is a natural bundle. If at all it is a natural bundle, then only it is a composite supply. And last but not the least, the supply, one of the supply should be a principal supply. What is meant by the word principal supply? Purpose of the contract. For which purpose you enters into the contract, that is known as principal supply. For example, TV with remote. In that case, what is the principal supply? TV. You can't expect by purchasing a remote a TV. You will expect by purchasing a TV a remote. So here, what is the purpose of the contract? TV. TV will be the principal supply. If all these three conditions are satisfied, it is a composite supply, ma'am. With respect to composite supply, what is the rate that will be applicable, ma'am? Principal supply rate. Composite supply rate is equal to principal supply rate. And in the same way, second case is mixed supply. With respect to mixed supply, the first condition is minimum 2 or more supplies, that is okay. They can be taxable or exempted. Second one, they are artificially bundled. Third one, and they are supplied for a single price. If all these conditions are satisfied, then it is a mixed supply. Minimum 2 or more supply should be there. They should be artificially bundled and they should be supplied for a single price. If all these three conditions are satisfied, it is a mixed supply. The best example for that is celebrations box. In that celebrations box, dairy milk, 5-star gems, they are artificially bundled and supplied for a single price. In that case, it is a mixed supply. Sir, what is the rate that is applicable to mixed supply? Highest rate. What is the rate that is applicable to mixed supply, ma? Highest rate. So these are the points you should remember with respect to composite and mixed supplies, ma. There ends chapter number 2. Okay, ma'am. After completion of this chapter number 2, supply, now we need to enter into chapter number 3, levy and collection of GST, ma'am. The question is here, what is meant by the word levy? And what is meant by the word collection, ma? What is meant by the word levy? Levy means imposition of tax. Collection means recovery of tax. Levy means imposition of tax, and collection means recovery of tax. This levy and collection, generally levy will be done by the charging section, ma. So here we are going to discuss in this particular chapter what is the charging section of our GST here. And in the same way, from whom actually we will collect the GST here. That means whether we will collect the GST from the supplier or whether we collect the GST from the recipient. All those things, that means RCM, FCM, all those concepts we are going to discuss in this particular chapter, ma. And in the same way, along with the composition scheme. So these are the major areas what we are going to discuss in this particular chapter. Now, without any delay, I am going to proceed into this, ma. First one is here. Section 1 is here, ma. Section 1 is here. What is meant by this section 1, ma, here? Scope, extent, and commencement. In any act, whatever the act it is, in every act, section 1 deals with title, extent, and commencement. Title means name of the act. So in our syllabus, we are having the CGST. That's why, what is the name of the act, ma? CGST Act 2017. And commencement, from which date it just came into enforcement. From which date our CGST Act came into enforcement, ma? Anybody? From 1st July 2017, this particular act came into existence. And in the same way, extent, up to which area, that means to which places this particular section 1 will be applicable. So here it applies to whole of India, including Jammu and Kashmir. It applies to whole of India, including Jammu and Kashmir. That is the point, ma. It applies to whole of India, including Jammu and Kashmir. Okay. Okay, fine. The question is here. Sir, what is meant by the word India? What is meant by the word India, ma? Generally, India means land area as well as sea waters and airspace also. By combining all these boundaries, the India was defined, ma. It was defined in Article number 1 of the Constitution. That territory of India, that means land area of India and its territorial waters. What is meant by the word territorial waters, ma? From the baseline up to 12 nautical miles. From the baseline up to 12 nautical miles is known as territorial waters. And the land underlying that particular territorial waters is known as seabed and subsoil. Okay, ma. From the baseline up to 12 nautical miles is the territorial waters, and the land below that particular territorial waters is known as seabed and subsoil. And in the same way, airspace above its territory and territorial waters. And in the same way, exclusive economic zone. What is meant by this exclusive economic zone, ma? From the baseline up to 200 nautical miles, it is known as exclusive economic zone. Sir, why, sir, sea waters were divided like this? Because from the baseline up to 12 nautical miles, from the baseline up to 12 nautical miles is a part and parcel of India. That means anyone who enters into these territorial waters is deemed to be entered into India. Those 12 nautical miles is a part and parcel of India. And why this exclusive economic zone was created? It is created for the sake of exploration of natural resources. It is created for the exploration of natural resources. Up to 200 nautical miles, it is the exclusive economic zone. Why so? The reason is simple, ma. Let's say, for example, in 170th nautical mile, American satellite finds some oil resources there. Even though it was found out by American satellite, but still exclusive economic rights reserved to India only. That's why from the baseline up to 200 nautical miles is the exclusive economic zone. It is created for the exploration of natural resources. And in the same way, sir, what is meant by this nautical mile here? In the land area, we will actually measure the distance in kilometers, whereas in sea waters, we will measure the distance in nautical miles. 1 nautical mile is equal to 1.85 kilometers. 1 nautical mile is equal to 1.85 kilometers. Okay, that is the point. And the point is here, all these places, what we have discussed, like territory of India, that means land area, that means territorial waters, seabed and subsoil, and airspace above its exclusive economic zone. To all these places, Section 1 of the CGST Act is applicable. That is the point. This is the definition of India. To all these places, our CGST Act will be applicable. The next point is, sir, if at all it is a, previously while discussing about article number 246A, we have a discussion on intrastate supply and interstate supply. What is meant by the word intrastate supply, within the state supply? What is meant by the word interstate supply, between the state supply? If at all it is the intrastate supply, then what is the position? If at all it is the intrastate supply, we need to see here with respect to that. Okay, ma'am. Now we are going to discuss about this intrastate and interstate supplies here. If at all it is a intrastate supply within state, then CGST plus SGST will be levied, ma. If at all it is the intrastate supply within UT but with state legislature, in that case also CGST plus SGST will be levied. And if at all it is the intrastate supply within UT without state legislature, in that case CGST plus UTGST will be levied. And if at all it is an interstate supply, then IGST will be levied. That is the point, ma. Got it? So, if at all it is intrastate supply within the state, CGST plus SGST will be levied. And if at all it is intrastate supply within UT with state legislature, CGST plus SGST will be levied. If at all it is intrastate supply within UT without state legislature, then CGST plus UTGST will be levied. And if at all it is interstate supply, IGST will be levied. Okay, this is the point. Now we are going to discuss about the charging section here. Section 9 is a charging section in relation to our CGST Act. In that, as per the charging section, on the alcoholic liquor for human consumption, GST Act is not applicable. That means Section 9 specifically excludes that. Section 9 specifically excludes that alcoholic liquor for direct human consumption. If at all alcohol was used for direct human consumption, then GST Act will not be applicable. But if at all this alcohol is used in medicinal and toilet preparations, then definitely it is within the scope of GST. And on the HP man, that means diesel, crude petroleum, petrol, ATF and natural gas. On these 5 petroleum products, whenever GST Council approves from that particular date, GST will be paid. That is the point. And in the same way, imports and exports are deemed to be interstate supplies, already we know. So except these items like alcoholic liquor and 5 petroleum products, for the rest of the cases, Section 9 will be applicable. Okay, ma. So if at all it is a taxable supply and intrastate CGST plus SGST, just now we discussed, will be applicable. If at all it is the interstate supply, IGST will be applicable. And the next point is here, okay sir, definitely if at all it is intrastate supply, CGST plus SGST will be levied. On interstate supply, IGST will be levied. The question is here, who will pay the GST there? Levy of tax, who has to pay the GST there? That means here tax paying mechanisms are of two types. One is FCM, second one is RCM. Under FCM, forward charge mechanism, who will pay the GST? Supplier will collect the GST from the recipient and will pay the amount to the government. Whereas under RCM, recipient will pay GST directly to the government. That is the difference between FCM and RCM. So who has to pay the GST? As per 9 subsection 1. As per 9 subsection 1, FCM will be applicable and RCM is covered under either 9 subsection 3 or 9 subsection 4. So with respect to FCM, who will pay the GST? Supplier will collect the GST from the recipient and will pay the amount to the government. Under RCM, who will pay the GST? Recipient will directly pay the GST to the government. That is the difference. So under FCM, you can follow two schemes. One is regular scheme, that means normal provisions of GST will be applicable there. And second one is composition scheme, further section 10 will be applicable. And whereas RCM is applicable to notified cases only, whether it can be of the goods or it can be of service. But goods is not in our syllabus. That's why we covers only services under RCM. Okay. So now we are going to enter into the concept of RCM now. That means on which type of notified services the recipient is liable to pay the GST is the topic what we are going to discuss now. Services taxable under RCM. In that the first point will be supply of services in respect of transportation of the goods by road. Transportation of the goods by road. Simply, who is the supplier there? GTA. What is the full form of GTA? Goods Transport Agency. What is the full form of GTA there? Goods Transport Agency. Here, GTA is having two options. One is GTA can follow FCM or GTA can follow RCM. GTA is having the two options. One is GTA can follow the FCM or GTA can follow the RCM. If the GTA wants to follow the FCM, then the rate of tax will be 12%. If the GTA wants to follow the RCM, the rate of tax will be 5%. There are two options that are there to the GTA. One is you can follow FCM or you can follow RCM. Under FCM, the rate of tax will be 12%. Under RCM, the rate of tax will be 5%. 12% means CGST 6% and SGST 6%. And in RCM, 5% means 2.5 CGST and 2.5 SGST. So, if he wants to follow the RCM, what is the rate of tax that will be applicable, ma'am? 5%. Sir, that means in which cases, if the supplier is the GTA and RCM is applicable, if the recipient is this notified category of people, if the recipient is this notified category of people, then only the concept of RCM will be applicable. The first point will be factories, society, cooperative society, registered person, body corporate, partnership firm, CTP, all these people are the notified persons. If the recipient is these notified persons, then only what will be applicable, RCM is applicable. So, if the GTA wants to pay GST at the rate of 5%, then RCM will be applicable. That too, if the recipient is a notified person. Who can be the notified persons? Factory, society, cooperative society, registered person, body corporate, partnership form and CT. If any of these people are the recipients, then only the concept of RCM will be applicable and the rate of tax will be 5%. Second one is legal services. So what is meant by the word legal service here? What is meant by the word legal service? Advice, consultancy, assistance in any branch of law, it is known as legal service. Advice, consultancy, assistance in any branch of law, it is known as legal service. And who will provide the legal service there? Junior lawyer, junior advocate, senior advocate and partnership firm of advocates or the suppliers. And who can be the recipients? Business entity located in the taxable territory will be the recipient. Then RCM is applicable and that business entity is liable to pay the GST under RCM. So, if the individual, that means junior advocate, senior advocate and partnership firm of advocates, these people are the suppliers. And who can be the recipients? Who can be the recipients? Business entity. That too practically the business entity should be a registered person. Then only it is taxable and under RCM. Whereas if the business entity is an unregistered person, then it is exempted. There is no need to pay any GST at all. Okay. So what is the service? Legal service. Who are the suppliers? Junior advocate, senior advocate and partnership firm of advocates. And who is the recipient? Registered business entity. Then only RCM is applicable. Recipient is liable to pay the GST. But sir, if the CS are providing legal service, then it is covered under FCM or under RCM. Legal services by advocates only is covered under RCM. If legal services are provided by a CS, it is covered under FCM or RCM. It is covered under FCM. In the same way, advocates providing other than legal service. Advocates providing other than legal service, FCM or RCM. If advocates are providing other services in FCM or RCM, FCM. Next one. Next one is supplier arbitral tribunal. What is meant by the word arbitration? Settlement of a civil case outside the court through a legal mechanism, it is known as arbitration. The tribunal which will do the arbitration is known as arbitral tribunal. Is known as arbitral tribunal. If the supplier is the arbitral tribunal and the recipient is a registered business entity, then only the concept of RCM is applicable and that business entity is liable to pay the GST. So, any services that are provided by the tribunal to other than these type of services, then definitely FCM will be applicable. Next one, sponsorship services. Supplier can be any person and if the recipient is notified persons, only two people are covered here. One is body corporate and second one is partnership firm. Then only RCM is applicable. If the recipients are any other recipients, in those cases, FCM will be applicable. With respect to sponsorship services, supplier can be any person. But whereas recipient can be only two category of people. One is body corporate and second one is partnership firm located in the taxable territory. Then only RCM concept is applicable. If at all recipients are other than these people, then FCM is applicable. Supplier is liable to pay the GST. Sir, in every case, this point taxable territory is coming. What is meant by the word taxable territory? Taxable territory means the place for which Section 1 of CGST Act is applicable. To which places Section 1 of CGST Act is applicable, all those places are treated as taxable territories. If the recipient is there in taxable territory, then only the concept of RCM is applicable. If the recipient is not there in the taxable territory, then RCM is not applicable. In those cases, FCM is needed to be followed. Next one. Services. Any services by government. Who can be the supplier, ma? Here, government. Who can be the supplier, ma'am? Government. And what is the service, ma'am? Business, and the recipient is business entity located in the taxable territory. In those cases, RCM is applicable, recipient is liable to pay the GST. RCM is applicable and recipient is liable to pay the GST. Any example for supplier government and recipient is business entity, ma? Firecrackers license, mining license, all these licenses are given by the government to the business entity, na? So definitely with respect to them, RCM is applicable and recipient is liable to pay the GST. But whereas with respect to renting of immovable property, this one is covered later on. That's why separate entry was there. That's why it was excluded. But whereas in few cases, even though the supplier is government, but still FCM is applicable. What is the general rule? If the supplier is government, then RCM will be applicable in majority cases. But in few cases, even though the supplier is the government, but still FCM will be followed. What are those cases, ma'am? Postal Department services, ma'am. With respect to Postal Department. With respect to Postal Department, 4 services are there, ma'am, which are taxable. For them, FCM will be applicable. So what are those specified services that are provided by the Postal Department or taxable? Speed Post, Express Parcel Post, Life Insurance and Agency Services. Speed Post, Express Parcel Post, Life Insurance and Agency Services. With respect to these 4 services, they are taxable ones, ma. The 2 they are taxable under FCM. Government is liable to pay the GST there. Government is liable to pay the GST, ma. Next one. Services in relation to aircraft or vessel, that means whether within the premises of the port or airport, if any repairs and maintenance activities are done by the government, then also FCM is applicable. Government is liable to pay the GST. In the same way, in relation to transportation of the goods and passengers also, FCM concept is applicable. Government is liable to pay the GST. And next one is, this is exclusive one, renting of immovable property by the government, and if the recipient is a registered one, then only RCM is applicable. Any example for renting of immovable property by the government? Any example for renting of immovable property by the government? Let's say for municipality, hoardings will be there, na? Those hoardings are given on a rental basis to the business entities by the municipality. Like on the dividers also, road dividers will be there, na? In between of those dividers, hoardings will be there, na? Those hoardings are given on rental basis by the municipality to those business organizations. In that case, is it a renting of immovable property or not, ma? Yes. In those cases, FCM is applicable or RCM is applicable? RCM is applicable if the recipient is a registered person. Okay, ma'am. Okay, ma'am. If the recipient is a registered one, then only the concept of RCM will be applicable. If the recipient is an unregistered person, in those cases, FCM applicable or RCM applicable, ma'am? Definitely FCM will be applicable. Next one. Directorship services. Who is the supplier there? Director. And who is the recipient there? Company or body corporate. In that case, FCM applicable or RCM applicable? RCM is applicable and recipient, that company is liable to pay the GST. But if the director is a non-employee, then only the concept of RCM will be applicable. If the director is an employee, in those cases, the concept of RCM will not be applicable. If the if the director is an employee, then no GST at all. Then the question of whether it is FCM or RCM will not arise. Like whole-time directors, managing director, executive director, like that. Those people are treated as employees of the company. That's why no GST at all. If at all there is no GST, in that case, what is the position, ma? Yes, ma, that is the point. RCM is not applicable. If at all he is the employee of the company, then there is no need to pay any GST at all. If at all there is no need to pay any GST, then the question of RCM will not arise at all. If at all he is a non-employee, the director is, then only RCM is applicable, like independent directors, nominee directors, non-executive directors, like that. Sir, how to decide whether a person or whether a director is an employee or not? It will depend upon under which section the TDS was deducted in your income tax. If the TDS was deducted under section 192, definitely it will be treated as salary, that remuneration, and the director will be treated as employee. On that remuneration, there will not be any GST. But whereas if the TDS is deducted as per section 194J, then it is not a salary at all. If at all it is not a salary at all, then he is not an employee, then RCM concept will be applicable. Under which section the TDS is going to be deducted will decide whether the director is an employee or not. If the TDS was deducted as per section 192, then salary, no GST. But whereas if the TDS was deducted as per section 194J, in that case, what is the position, ma? Definitely it is not a salary. Then definitely RCM concept will be applicable. Sir, what about the sitting fee? Generally, director sitting fee is not a salary, ma. That's why RCM liability will not be applicable. If the director sitting fee is not treated as salary as per the law, in those cases, on that sitting fee also RCM concept will be applicable. Where the director's sitting fee is not treated as salary, in those cases RCM liability will also be there on sitting fee also. This is the point. And next one is agency services. With respect to agency services, two types of agents are covered under RCM. One is insurance agent and second one is recovery agent. Insurance agent will provide service to insurance company. Recovery agent will provide service to bank, financial institution, NBFC, etc. Okay. In those cases, this particular agency service is covered under RCM. Then the insurance company and the banks or financial institutions or NBFCs are liable to pay the GST. Except these two, that is insurance agent and recovery agent, all other agency services are taxable under FCM. Only insurance agent and recovery agency services are taxable under RCM. Why, ma? Because they are there in unorganized sector. If the supplier is there in unorganized sector, it is difficult for the government to collect the tax from the supplier. In those cases, government will shift to the recipient. That's why the concept of RCM is there. Okay, that is the point. Next one. Supplier, music composer, photographer or artist, and the recipient is music company or producer. So music composer to music company, photographer or artist to producer. In those cases also, definitely the concept of RCM is applicable. Music company or producer is liable to pay the GST. And next case is author of the books is a supplier, publisher is a recipient. Who is the supplier, ma'am? Author of the book. And who is the recipient, ma'am? Publisher. Here also there are two options that are there to the author of the book, ma'am. One is FCM and second one is RCM. This point is there with respect to GTA. After GTA, again the facility is there to this particular service. Author of the book is the supplier and the recipient is the publisher who is there in taxable territory. In those cases, there are two options that are there to the supplier. He can follow either FCM or RCM. But in order to follow the FCM, three conditions are required to be satisfied. In order to follow the FCM, three conditions are required to be satisfied. What are the three conditions that are to be satisfied? First one, supplier, that is author of the book, should be a registered person. Second one, he should give intimation to the department that he is willing to pay GST under FCA. Third one, once the option was exercised, he shall not withdraw the option for a period of 1 year. And last but not the least, that is paying the GST under FCM should also be specified on the invoice that is issued to the recipient. If all these four conditions are satisfied, then FCM. What are the four conditions that are required to be satisfied, ma'am? First one, author of the book should be a registered one. Second one, he should give intimation to the commissioner. Third one, once the option was exercised, he should not be withdrawn for a period of 1 year. And last but not the least, he should intimate that he is paying GST under FCM on the invoice that is issued to the recipient also. If all these points are satisfied, then FCM will be applicable. Otherwise, RCM you need to follow. This is the point. And next one is services of supplier, members of overseeing committee, and recipient is Reserve Bank of India. In that case, RBI is liable to pay the GST. Sir, what is meant by this overseeing committee? To give suggestions with respect to NPS and all these things, one committee was framed by Reserve Bank of India. These members of overseeing committee will give suggestions to Reserve Bank of India in relation to NPS and its speedy recovery of money and all these things like that. In those cases, the concept of RCM is applicable and recipient RBI is liable to pay the GST. In the same way, services of individual direct selling agents, DSAs. What is meant by the word direct selling agents, Rima? They are the authorized representatives of the bank to sell the product of banks, that is bank loans. They are the authorized representatives of the banks to give bank loans, that is the point. Okay. If the supplier is a individual DSA and the recipient is bank or NBFC, in those cases the concept of RCM is applicable and bank or NBFC is liable to pay the GST. Keep in mind, if the DSA is an individual, then only the concept of RCM is applicable. If the DSA is a body corporate or partnership firm, in those cases, FCM will be applicable. Next one, supplier, any person, recipient is a promoter and the service is actually transfer of development rights or floor space index. Let's say, for example, any landowner who is transferring the land development rights to the builder. In those cases, the concept of RCM will be applicable. The person who is the supplier, landowner, what he is doing? Transfer of development rights to whom? Promoter, that is builder. In those cases, the concept of RCM is applicable. The promoter or builder is liable to pay the GST under RCM. Same point will be applicable to lease also. If the lease is for a period of more than 30 years, more than or equal to 30 years lease period, then who is giving the lease? Lessor. And who is the recipient there? Lessee. That person is liable to pay the GST under RCM. Next one, supplier, business facilitator and recipient, bank. In those cases also, RCM concept is applicable and the bank is liable to pay the GST. And in the same way, who is the supplier? Agent of business correspondent. Who is the recipient? Business correspondent. In those cases also, RCM concept is applicable. Business correspondent is liable to pay the GST. And next one is security services. Next one is security services. With respect to security services, who can be the supplier? Any person other than body corporate. Any person other than a body corporate. And recipient is a registered person. In those cases, RCM concept is applicable. Recipient is liable to pay the GST. Sir, if at all security services are provided by a body corporate, then FCM is applicable or RCM is applicable? FCM. If the body corporate is providing security services to any person, in those cases FCM is applicable. That is the point. Next one. Renting of motor vehicle designed to carry the passengers. Here also two options are there. Just like GTA and other of the book, with respect to renting of a motor vehicle that is designed to carry the passengers, in those cases also what will be applicable, ma'am? There are two options. One is FCM or RCM. If the supplier, that is a person who is giving the motor vehicle on rental basis, if he wants to follow FCM, the rate of tax will be 12%. If he wants to follow the RCM, the rate of tax will be 5%. 12% means 6 plus 6, 5% means 2.5 plus 2.5. If he wants to follow FCM, what is the rate of tax, ma? 12%. If he wants to follow RCM, what is the rate of tax, ma? 5%. But if the recipient is a body corporate, then only the concept of RCM is applicable. Supplier can be any person other than body corporate, and recipient should be a body corporate. Then only the concept of RCM will be applicable. Sir, if the supplier is a body corporate, then FCM will be applicable. If the recipient is other than body corporate, then also FCM is applicable. Supplier is any person other than body corporate. Recipient is a body corporate, then only RCM. If the supplier is a body corporate, then FCM. In the same way, if the recipient is other than body corporate, then also FCM. So, if the body corporate renting the motor vehicle, then FCM or RCM? Body corporate is renting the motor vehicle, FCM or RCM? FCM. In the same way, renting of motor vehicle to the recipient who is other than body corporate, then also FCM. This is the point. In those cases, 12% rate of tax will be applicable. Last but not the least, in 9.3, lending of securities. Generally, with respect to lending schemes, generally what will happen, some people will short sell the securities. If they short sell the securities, means they don't have the delivery of those shares. Even though they are not having the delivery of the shares, they will sell the shares first. In those cases, they will borrow the shares from the lenders and will give it to the buyer. Later on, when the prices actually reduces or something like that happens, then the person will purchase those shares and will again give back those shares to the lender. This concept is known as lending of securities. But they will charge some interest or commission like that for lending those shares. Okay. Here, who is the supplier? Lender of shares. Who is the recipient? Borrower of shares. In those cases, FCM applicable or RCM applicable? RCM is applicable. Borrower is liable to pay the GST. There ends 9 subsection 3. Okay, ma'am. After the completion of 9 subsection 3, we need to see 9 subsection 4. With respect to 9.3 and 9.4, there is one difference, ma'am. Under 9.3, supplier can be a registered one or a unregistered one. But whereas with respect to 9.4, supplier will be always unregistered. Under 9.3, the supplier can be a registered one or a unregistered one. But whereas with respect to 9 subsection 4, the supplier will be always unregistered. So, this is the concept with respect to 9.4. RCM on the supplies from unregistered to specified registered persons. If any unregistered person supplying to a registered person these items, then those items are covered under RCM. First one, cement. With respect to cement, with respect to cement, definitely it should be always purchased from a registered supplier. Let's say I am the builder. I purchased cement from unregistered person. I purchased cement from unregistered person. In those cases, RCM concept is applicable. that builder who is a registered person is liable to pay the GST on that. So, what is the general logic there? Cement should be always purchased from the registered person. If cement was purchased by the promoter from the unregistered person, then the concept of RCM is applicable. That promoter or builder is liable to pay the GST to the government. This is the one. Second one, capital goods. Like if any person who is purchasing the capital goods like plant and machinery like that, those goods should be always purchased from a registered person only. If they purchase it from unregistered person, then also the recipient is liable to pay the GST under RCM. With respect to cement and capital goods, they should be always purchased from the registered suppliers. If those goods are purchased from unregistered suppliers, in those cases, 9(4) will come into scene and the registered recipient is liable to pay the GST. And with respect to that, generally this point is applicable to real estate sector only at present. That's why the word promoter was used. Promoter means here builder, construction contractor. For them only at present this 9(4) is applicable. Okay. And other inputs are services. So other than cement and capital goods, what are the remaining inputs or services that are required for that construction? They can be procured up to 20% from the unregistered persons. That means 80% should be from registered suppliers. 20% can be from unregistered persons. If at all any shortfall is there, let's say you had made purchases of some 30% from unregistered suppliers. What is the shortfall there? 10%. On the 10%, that promoter is liable to pay the GST under RCM. So, with respect to cement and capital goods, 100% purchases should be made from registered suppliers. Otherwise, RCM 9(4) is applicable. Promoter is liable to pay the GST. But whereas with respect to other inputs or services, 80% should be from registered suppliers, 20% should be from unregistered. But if it any exceeds of the 20%, for that shortfall, he need to make the payment under RCM as per 9(4). That is the point. Now we are going to enter into our composition scheme concept here. So the question is here, sir, section 10 is applicable for this composition scheme. Section 10 is applicable for this composition scheme. So what is meant by this composition scheme? To whom this particular composition scheme will be applicable? To whom this particular composition scheme is applicable? Generally, composition scheme is applicable for small scale players. This particular scheme is designed for cottage industries generally. Cottage industries generally. For them, in order to do the business or encourage them, a very lower rate of tax will be applicable to those people. That's why the composition scheme was designed. There are two types of composition schemes which are actually there under section 10(1) and 10(2), and second one is section 10(2)(a). There are two composition schemes. One is normal composition scheme under section 10(1) and 10(2). Second one is concessional rate scheme under section 10(2)(a). Second one is concessional rate scheme under section 10(2)(a). Okay, these are the two types. With respect to this 10(2)(a) or 10(1), first we need to discuss about 10(1) and 10(2). Those are actually combined in normal composition scheme. With respect to this normal composition scheme under section 10(1) and 10(2), who are the persons that are eligible for this normal composition scheme? The person will be eligible for this normal composition scheme under section 10(1) if at all his aggregate turnover in the preceding financial year is less than or equal to 1.5 crore, then in the current year he is eligible for this composition scheme. Who are the persons that are eligible for normal composition scheme? The persons whose aggregate turnover in the preceding financial year is less than or equal to 150 lakhs, then in the current year he is eligible for this composition, normal composition scheme. But whereas with respect to few states, this 150 lakhs or 1.5 crore limit was reduced to 75 lakhs. What is the general aggregate turnover, ma? In the preceding financial year, the turnover should be less than or equal to 150 lakhs. But whereas in few states, instead of this 1.5 crore limit, what will be applicable, ma? 75 lakhs will be applicable. Sir, what are the states like Manipur, Mizoram, Tripura, Sikkim, Meghalaya, Arunachal Pradesh, Nagaland, Uttarakhand? With respect to these 8 states, special category states, instead of 1.5 crore, 75 lakhs limit will be applicable. What is the general turnover, ma? In the preceding financial year, if the turnover is less than or equal to 1.5 crore, in the current year, you are eligible for composition scheme. But whereas with respect to these 8 special category states, this 1.5 crore limit is to be reduced to 75 lakhs. Okay. The question is here, sir, what is meant by the word aggregate turnover? First question is here, what is meant by the word aggregate turnover? Sir, what is meant by the word aggregate turnover? We need to see first. This is meant by the word aggregate turnover. What is meant by the word aggregate turnover? All taxable supplies, exempted supplies, exports, interstate supplies, minus GST and minus RCM purchases. What is the amount we will get? It is known as aggregate turnover. So, how to compute this 150 lakhs limit, ma? That is known as aggregate turnover. We need to add all taxable supplies, exempted supplies, exports, interstate supplies, and we need to deduct 2 items. One is GST and second one is RCM purchases. So, we need to add all taxable supplies, exempted supplies, exports, interstate supplies, minus GST, minus RCM purchases. What is the amount we will get? It is treated as aggregate turnover. That is the point, ma. Okay. So, if the aggregate turnover is less than those limits of 1.5 crore or 75 lakhs, in the current year he is eligible for this composition scheme. The next question is, okay sir, if at all this composition scheme is eligible for them, then what are the composition rates that will be applicable? What are the composition rates that will be applicable, ma'am? With respect to manufacturer, 1% of aggregate turnover. With respect to trader, 1% of taxable turnover. And with respect to restaurant, 5% of aggregate turnover. What are the rates that are applicable, ma'am? With respect to manufacturer, 1% of aggregate turnover. With respect to trader, 1% of taxable turnover. With respect to restaurant, 5% of aggregate turnover. But keep it in mind, I use the word with respect to trader, 1% of taxable turnover. But whereas with respect to manufacturer as well as with respect to the restaurant, I use the word aggregate turnover. Whereas what is meant by the aggregate turnover there, ma? All taxable supplies, exempted, exports, interstate supplies, minus GST, minus RCM purchases. And what is the amount we will get? It is known as aggregate turnover. But whereas with respect to the trader, he is liable to pay GST of that 1% only on taxable supplies. Trader is liable to pay GST of that 1% on taxable supplies only. But whereas with respect to manufacturer or restaurant or catering service provider, they are liable to pay the GST on the aggregate turnover, ma'am. Okay, ma'am. After the completion of this composition tax rates, generally what are the rates that are applicable here, ma'am? With respect to manufacturer, 1% of aggregate turnover. With respect to trader, 1% of taxable turnover. With respect to restaurant or catering, 5% of taxable turnover. So these are the points, ma'am. Now the question arises here. Sir, that means this 10.1, that means normal composition scheme. this particular composition scheme is applicable to supply of the goods only or to supply of service also. Can we apply it? What is the answer for that question mark? Whether this particular 10(1) is applicable to only the supplier of the goods or supplier of service can also enjoy this 10(1) benefit. Answer is no. This particular 10(1) normal composition scheme is designed only for the supplier of the goods. This composition scheme is not applicable to supplier of service, but whereas the one and only exception to that is restaurant service. That means a restaurant service provider can opt for normal composition scheme under section 10(1). This is the point. Okay, ma. So, if at all that person is an exclusive supplier of service, he is not eligible for this composition scheme. Okay, ma. The one and only service provider who is eligible for this composition scheme will be restaurant service. Sir, okay, just now you said that exclusive service providers are not eligible for this composition scheme. The one and only service that was eligible will be restaurant service. My question is, sir, here, along with supply of the goods, is it possible to make supply of service there? Just now I said that exclusive supplier of service is not eligible. In that case, along with supply of the goods up to a specified limit, that means service can also be done, or it is also not possible. Previously, it is not possible, but after the amendments that were made to this 10(1), now along with the supply of the goods up to the specified limit of service, we can do the supply of service. Sir, what is that specified limit, sir? The specified limit will be services can be provided up to a limit of 10% of aggregate turnover of the particular person, registered person, or 5 lakhs, whichever is higher. In the preceding financial year, what is your aggregate turnover? In the 10% or 5 lakhs, whichever is higher. Whichever is higher. Up to that limit, definitely what we can do, ma? Along with supply of the goods, supply of service can also be done. So, this normal composition scheme under section 10(1) is designed only for the supplier of the goods. Exclusive supplier of service is not eligible except restaurant service. But along with supply of the goods, you can make supply of service up to a specified limit. What is that specified limit? In the preceding financial year turnover, 10% or 5 lakhs, whichever is higher. Up to that limit, you can make supply of service also. Okay, fine. The next point is, sir, each and every person is eligible for this normal composition scheme. That means you said that manufacturers and traders are eligible. Na? That means manufacturer of every item is eligible for this normal composition scheme. Answer is no. There are few ineligible persons. The ineligible persons will be, first point is manufacturer of notified goods. Sir, what are those notified goods of manufacturers who are not eligible for this normal composition scheme? Ice cream, pan masala, aerated water, and tobacco related products. These are the 4 notified goods manufacturers that are not eligible for this normal composition scheme. So, what is the notified good here? What are the items that are listed here? Ice cream, pan masala, tobacco, and aerated water. With respect to them, the manufacturers are not eligible for this normal composition scheme under section 10(1). Okay, the next one is CTP or NRDP is also not eligible for this composition scheme. Sir, what is meant by the word CTP? Casual taxable person. What is meant by the word NRDP? Non-resident taxable person. So, what is the concept of this CTP here? Casual taxable person means the person who is having a fixed place of business in one state and making occasional supplies from some other states. The states where he is making occasional or temporary supplies, in that particular state, he will be treated as CTP. Say for example, a person is having a fixed place of business at Mumbai. He just want to make occasional supplies at Guntur. In that case, with respect to Andhra Pradesh, he will be treated as a casual taxable person, an NRTP. That means the foreigner who wants to make occasional supplies in India, that person is known as NRTP. The foreigner who wants to make occasional supplies in India, that person will be treated as NRTP. These people generally will do for a very short period of time, practically number of days only. That's why if the government allows them any composition scheme, obviously every CTP and NRDP will become eligible for this composition scheme. That's why government don't want to lose the revenue because of these issues here. That's why CTP and NRDP are also not eligible for this normal composition scheme. Next one, supplier of the goods wholly not taxable. That means the person who is making non-taxable supplies. Sir, if at all is making a non-taxable supply, there is no need to pay GST at all now. In those cases, why you are specifically saying that the person who is making a non-taxable supply is not eligible? The reason is there is one slogan everybody should remember with respect to composition scheme. That slogan is, if you want to go for composition scheme, go for all or go for none. If you want to go for composition scheme, go for all or go for none. That is the theme. Sir, that means, say for example, you are having 2 units or 2 places of businesses. In those 2 units, if you want to go for composition scheme, you should take composition scheme for these 2 units, all the 2 units. Otherwise, you should follow normal scheme as per section 9 to these 2 units. That means you cannot go for like this. Let's say unit 1, section 9 and unit 2, section 10. You can't go like that. If you want to go for composition scheme, go for all or go for none. Say for example, you are having 2 units. One unit is making taxable supply. Another unit is making non-taxable supply. In that case, you cannot take composition scheme for both the units. Na? That's why automatically the taxable unit also becomes ineligible for this composition scheme. That is the point what you want to write there. The person who is making a non-taxable supply means you are having 2 units. One unit is making taxable supply. Another unit is making non-taxable supply. Even though one unit is making taxable supply, but still it also becomes ineligible for composition scheme. That is the point. Next one, interstate outward supplier. That means if at all you are liable to pay any GST on interstate sales, simply if at all you are making any interstate sales, you are not eligible for this composition scheme. Because if at all you are having that much name and fame, that means you are able to sell the goods outside the state, then why I should give you this composition scheme? Because you are having that much name and fame now. Your goods are going to be sold outside the state also. Then you are not the person for this composition. Please keep outside your business. That is what the law says. So, if at all any person who is making interstate sales, that person is also not eligible. Sir, by using it as a loophole, nowadays many people are going to supply the goods through ECO then. If at all you are making the direct interstate supply, then you are prohibited from composition. If at all you are doing those sales through ECO, then easily you can bypass the law. That's why law says that if at all any person is making supplies through ECO, those people are also not eligible. So the government wants to keep it simple and straight. So don't use any bypass. I will cut that one also. So the first one is you should not make any interstate sales. As well as the second one is you should not make supplies through ECO. All these people have become ineligible for this composition scheme. Who are the ineligible persons? First one, manufacturer of notified goods. Second one, CDP or NRDP. Third one, the person who is making non-taxable supplies. Fourth one, interstate sales. Fifth one, supplying of the goods through ECO. These are the people who are ineligible for this composition scheme. Okay, sir. If at all the person is eligible, are there any conditions that are required to be satisfied? Yes, as long as you are a composition supplier, you cannot collect the tax from the customer. That means that previously I told you composition rates of 1%, 5% like that. Those composition taxes like 1%, 5% should be paid out of his own pocket. Should be paid out of his own pocket. That means simply you cannot collect the tax from the customer, that 1%. That is the thing. But practically what they will do, they will increase the price. Instead of saying it is a tax amount, they will increase the sale value. In practical. But as per the theory, you cannot collect the tax from the customer, that 1%. In the same way, the major drawback for the composition supplier is he cannot avail the ITC on the purchases made. Whatever the purchases the composition supplier will make, on those purchases, composition supplier cannot claim the ITC. Second one. Sir, in which way? That means what is the period of payment of tax in relation to composition scheme? Quarterly basis. If at all you are following section 9, you need to pay GST on a monthly basis. If at all you are following the composition scheme, either under section 10.1 or 10.2a, two composition schemes are there now. Whatever the composition scheme you are following, you need to pay the tax on a quarterly basis. And you need to file a statement also. That particular statement is known as CMP 08. It is also needed to be filed on a quarterly basis next month 18th. Okay, ma. That means what is the point, ma? Say what is the first quarter? April, May, June. With respect to them, what is the due date of filing CMP 08? July 18th. Quarter ending next month 18th. Second quarter, October 18th. Third quarter, January 18th. Last quarter, April 18th. These are the due dates of filing this CMP 08 also. And along with that, the composition supplier is required to file GSTR 4 and GSTR 9A. That means composition supplier is required to file along with quarterly statements 2 returns also. One return is GSTR 4 and second return is GSTR 9A. With respect to GSTR 4, it is required to be filed in the next financial year on or before April 30th. And with respect to annual return 9A, it is required to be filed on or before December 31st of next financial year. And in the same way, you should specify the words, I am a composition supplier at the place of business as well as on the document that is issued by him. What is the document that is issued by the composition supplier, ma? Bill of supply. Whereas section 9, a taxable person will issue a tax invoice, and whereas with respect to this composition supply, the document issued is known as bill of supply. The word I am a composition supplier should be specified on the bill of supply as well as at the place of business also. These are the conditions that you need to satisfy. And in the same way, sir, what about this 10.2a here? This 10.2a is exclusively designed for supplier of services generally. Along with that, if the limit exceeded in that normal composition scheme, those people can also be eligible in this 10.2a if the required conditions are satisfied. So, who are the persons that are ineligible in this normal composition scheme? Exclusive supplier of service. Those people can be eligible in 10.2a concessional rate scheme. Okay. In the same way, along with supply of the goods, you can make supply of service up to the specified limit. What is that limit? In the preceding financial year, 10% or 5 lakhs, whichever is higher. Up to that limit, you can make supply of service. If the limit exceeds, you are not eligible for normal composition scheme. Those people can also be eligible in this 10.2a. So, this 10.2a is designed for the people who cannot take the benefit of 10.1 generally. The people who cannot take the benefit of this section 10.1 normal composition scheme, those people can be eligible for this 10.2a concessional rate scheme if at all the required conditions that are there in 10.2a are satisfied. So, sir, what is the condition in this particular 10.2a here? The 10.2a condition will be here. What is eligibility turnover for 10-1? In the preceding financial year, the turnover should be less than or equal to 1.5 crore. But whereas with respect to this 10-2A, the eligibility limit will be, in this case, the eligibility limit will be 50 lakhs. The eligibility limit will be 50 lakhs. That means the service provider whose aggregate turnover in the preceding financial year is less than or equal to 50 lakhs, in the current year, he can be eligible for this 10-2A concessional rate scheme. Okay, ma. Previously in 10-1, it is 1.5 crore. But in 10-2A concessional rate scheme, the eligible aggregate turnover will be 50 lakhs. Okay, ma. Remaining conditions remains the same. That means the ineligible persons will become the same. And in the same way, conditions to be fulfilled remains the same. And tax rates will differ. Sir, what are the tax rates that are applicable? 6%. Ma. That means CGST 3% and SGST 3%. In total, it will be 6%. Those tax rates are applicable for the people who are eligible for this 10-2A. Okay, ma. This is the point. Next point is, sir, how to opt for this composition scheme? That means here, this point can be divided into two types, ma. The persons who are applying for fresh registration. That means first time you are going to get the registration. The question arises here, whether it is 10-1 or 10-2A, whether you are eligible or not will depends upon previous year turnover. Say for example, in this year only we just started the business. Are we eligible for this composition scheme or not then? That means we started the business in this year only. In that case, there is no previous year. There is no previous year means turnover is 0. 0 is less than 1.5 crore. In that case, are we eligible or not, ma? Yes, the year in which we started the business, the year in which we are applying for fresh registration, definitely we are eligible for this composition scheme. Okay. In that case, there is no need to apply in a separate form, ma. What is the application form for registration? REC 01. What is the application form for registration, ma? REC 01. Intimation in REC 01 is sufficient to get the composition scheme there. That means while you are applying for fresh registration, there is no need for a separate application. Intimation in REC 01 is sufficient for that. Okay, this is first point. Sir, if at all it is a running business, that means he is already a registered person. Previously, he was there in normal scheme, section 9. Now, he just want to shift to composition scheme on satisfying some conditions. The question arises here, in this case, is there any separate application form is required? Yes, ma. The form number will be CMP02. So, the person who are already registered, they should file the intimation prior to the commencement of financial year in CMP02. That means, in order to apply this composition scheme in the current financial year, on or before March 31st of the previous financial year, you should decide whether to go for composition or not. So, you should give intimation to the department prior to the commencement of financial year. Current financial year commencement. Before that, you need to intimate it to the department. What is the form number for that, ma? CMP02. That is the point. And if at all you just want to go for composition, if at all you are able to recollect ITC chapter, in that 18 subsection 4 will be there. Anybody remembers that one? 18 subsection 4. When you are shifting from normal scheme to composition scheme, then there is a need for ITC reversal. There is a need for ITC reversal. So, along with the details of closing stock, you need to submit the form number ITC 03 to the department. Because when you opted for this composition scheme, whatever the ITC that is in relation to the closing stock of raw materials, semi-finished goods, finished goods and capital goods should be reversed. In order to do that, department should know the details. That's why, what is the position, ma? Definitely, ITC 03 is needed to be submitted when you are going to opt for composition scheme. Sir, that means in every state we should give intimation, or one intimation is sufficient for total country. We're having place of businesses in multiple states. That means in every state we should give the intimation, or is it not required? Intimation is given pan-wise. That means one intimation that is given pan-wise is sufficient. No state-wise intimation is required because it is going to be given in online. So once it is given in online, it is deemed to be given for all. So there is no need for separate intimation for every state. That is the point. My question is here, sir, in year 1, we are eligible for this composition scheme. Year 2 also we again actually eligible for composition scheme. Year 1, we are eligible for composition scheme. Therefore, we opted for composition scheme. Year 2 also we eligible. Our turnover is less than those limits. The question is here, again in year 2 also I need to file CMP 02. Answer is no. Intimation in CMP 02 is not required to be filed every year for the continuation of composition scheme. In the previous year, already you are a composition supplier. In the current year also you are eligible. There is no need to file again CMP 02. That will be continued until you violated the turnover limits or conditions. When the turnover limit crossed, automatically you should be shifted to the normal scheme. That is the point. And in the same way, for determining the aggregate turnover, sir, say for example, we are taking registration in this year only. Say for example, you are a supplier of service in AP, Andhra Pradesh. With respect to Andhra Pradesh, in relation to service, what is the specified limit for registration? 20 lakhs. When your turnover crosses 20 lakhs, a service provider is required to get himself registered in Andhra Pradesh. Okay. So in this year, we just made a turnover of 70 lakhs. In this year only, we just started the business. In this year, we just made 70 lakhs turnover. And we are eligible for this 10-2A. Because for 10-2A in the preceding financial year, the turnover should be less than 50 lakhs. There is no previous year, that's why the turnover will be 0. We are eligible. In the current year, how much amount we need to pay? How much amount we need to pay? In the current year, our turnover is 70 lakhs. And I already told you, the rates that are applicable to 10-2A will be 6%. Now, anybody in the class can tell me, in the current year turnover, if at all it is 70 lakhs, what is the tax amount we need to pay? This, in the current year, sir, up to which extent these composition rates are applicable? 50 lakhs. So, in the current year, what is the total turnover? 70 lakhs. In that, up to 50 lakhs, composition rates are applicable. And what is excess amount? 20. On the 20, what is the general rate of GST? 9%. 9% CGST and 9% SGST. We combine them, it will be 18% general. So, GST rate. So, on that 20 lakhs, 18%. That means CGST 9 and SGST 9. It will be some 3,60,000. Sorry? 3,60,000 it will be. Along with that, the next question is, sir, up to 50 composition rates are applicable now. On how much amount do we need to pay that 6%? Only 30. Why, sir? First 20 lakhs you made in the capacity of unregistered person. In AP, up to 20 lakhs, you are not liable for registration. That's why up to 20 lakhs, you need not pay any GST. And excess 30 will be there now. On that 30 lakhs, you need to pay 6%. This is the difference. While computing the turnover that was done in the capacity of unregistered person will also be counted. That means while calculating the 50 lakhs limit, the turnover that was done in the capacity of unregistered person, that will also be counted. But while paying the GST, that turnover which was made in the capacity of unregistered person will not be taken into account. I am repeating the sentence once again with respect to composition scheme. Computation of aggregate turnover. The turnover that was made in the capacity of unregistered person will also be considered. While calculating the aggregate turnover, the turnover that was done in the capacity of unregistered person will also be considered. But for the payment of GST, that turnover means the turnover that was done in the capacity of unregistered person will be excluded. On the remaining turnover only, we will pay the GST. This is the point we should remember. But as usual, while computing the aggregate turnover, exempted interest will be excluded. Exempted interest as well as discount. We discussed this point in supply chapter. Interest on credit cards only taxable. All other interest incomes are exempted. So those exempted interest or discounts will not be considered while making the computation. Okay, ma'am. Okay, ma'am. There ends our this composition scheme topic. There ends chapter number 3 also. Okay, ma'am. Now we are going to discuss about exemptions chapter now. With respect to exemptions, only few, actually it is a vast syllabus, whereas with respect to exemptions, but whatever the exemptions we are going to discuss in this particular class that are 100% sufficient from the examination point of view, if at all you are able to study those exemptions, then that is more than sufficient from the examination point of view. Okay, ma. Now we need to see here. First one is healthcare services. With respect to healthcare services, what is meant by the word healthcare services here? What is meant by the word healthcare services, That means who will provide these healthcare services? Who will provide these healthcare services, Who will provide them? Clinical establishments, authorized medical practitioners, and paramedics. What is meant by the word clinical establishment? Hospitals, nursing homes, like that. What is meant by the word authorized medical practitioner? That means whatever the prescribed experience, prescribed knowledge that is required for the Indian doctor, all those things will be there, except the approval of Indian Medical Council. Those people can also be termed as authorized medical practitioners and paramedics. What is meant by the word paramedics, What is meant by the word paramedics here? Paramedics means the persons who are providing pre-hospitalization or post-hospitalization services. The persons who are providing pre-hospitalization or post-hospitalization services. Those people are treated as paramedics, like what we can say nursing homes, nurses. Pre-hospitalization services means lab technicians. And post-hospitalization services means physiotherapist, like that. Okay, Those are the things you should remember. All these people generally will provide the healthcare services, All these people will generally provide the healthcare service. The question arises here. So that means every type of healthcare service is exempt? Answer is no. The government recognized system of medical system is only exempted. If at all it is not recognized by the government system, in that case, is it exempted or taxable, Definitely it is, yes, taxable. Say for example, what are the government recognized systems? The government recognized systems are allopathy, homeopathy, Siddha, Unani, Ayurveda, like that. Whatever the government recognized system of medicines are there, those are exempted. If at all those medical treatments are not recognized by the government, in that case, what is the position, Definitely, yes. Is it exempted or taxable, Taxable. Like any example for that? The example for that will be, what we can say is, like acupuncture. Acupuncture is nowadays is popular for back pain. That means needles. With needles, they will do the medical treatment. By prickling those needles in the affected areas or pain areas, they will do their medical treatment by using needles. That one is known as acupuncture. It is famous for back pain, but whereas it is not recognized by the government, therefore it is taxable. In the same way, pranic healing treatment, just like they will do some miracles in the air. Okay, they will say, okay, now the positive energy came to you, now your problem is resolved. like that. So those things are also not recognized by the government. Those pranic healing are also taxable. In the same way, urine therapy or color therapy, Rudraksha therapy. Rudraksha therapy is generally popular for migraine problem. They will use some 5-mukhi Rudrakshas to make the crown, and you have to wear it for 41 days. They are saying that then definitely what will happen, ma? Your migraine problem will be cured, but it is also not recognized. So all these activities, even though they are medical activities, they are not recognized by the government. In that case, are they exempted or taxable, ma? Definitely they are taxable. In the same way, sir, what about the what about the room rent that is paid to the hospital? Is it exempted or taxable? Room rent as an inpatient, whatever the amount you will pay, definitely it will comes under healthcare services. It is exempted, including the food. Not only room rent, whatever the food that is provided to the patient as per the directions of the doctor, it is also a healthcare service. On that also there will not be any GST, it is exempted. But any food that is given to the helpers or attenders who comes with the patients, and any food that is provided to the visitors, all those things are taxable. And in the same way, ambulance services. Ambulance services, including air ambulance services, are also exempted. Ambulance services, whether it is provided by the hospital or provided by any third parties, all ambulance services are exempted, including air ambulance services. And next one will be whatever the services that are provided by the veterinary doctors or veterinary hospitals are also exempted. In the same way, common biomedical waste treatment services, that means all these surgical items, all these needles which are used for the medical treatment, those recycling activities that are provided to these clinical establishments is exempted. There is no need to pay any GST there. In the same way, stem cell storage banks. When the baby is there in the mother womb, there will be a connecting tube between the baby and the mother in order to take the food. But when the delivery of the baby was done, then that particular tube will be disconnected from the baby, and it will be stored in minus 190 degrees centigrade. Okay. In that case, why it is stored, sir? In order to cure some genetic diseases. That means if any person who is suffering from a genetic disease, the stem cells which are there in this particular cord, it will be injected to the person who is suffering with the genetic disease. Thereby, that particular genetic diseases will be cured. So for this purpose, these cord blood stem cells are stored in a storage bank. All those services are also exempted. There is no need to pay any GST on it. In the same way, whatever the charitable activities that are done by the charitable trust is exempt. Whatever the charitable activities that are done by the charitable trust is exempt. That means not all the activities that is done by the trust are exempted. Only the charitable activities that are done by the trust are exempted. Sir, that means apart from charitable activity, what the trust will do? Sometimes the trust will give any immovable property on rental basis. In those cases, definitely it is taxable. So whatever the charitable activities that are done by the trust, those are only exempted. Other than charitable activities, any other activities are done by the trust, then also it definitely is taxable. Next one is the process of conducting a religious ceremony is exempt, like Ganga Harati, or conducting the marriage. All these things will come under conducting a religious ceremony. Definitely they are also exempted. And in the same way, next one is with respect to a religious place like this TTD. So in our Telugu, it will be called as Tirumal Tirupati Devasthanam. With respect to these TTDs, if any rooms are given on rental basis and the room rent is less than 1,000 rupees per day, it is exempted. Any rooms at a religious place are given on rental basis and the room rent is less than 1,000 rupees per day, it is exempted. There is no need to pay the GST. In the same way, In relation to mandap keeper services also, in relation to a religious place, if the rent is less than 10,000 rupees per day, it is exempted. And in the same way, with respect to the shops, in relation to a religious place, if at all they are given on rent less than 10,000 rupees per month, then it is exempted. With respect to a religious place, any rooms are given on rent and the rent per day is less than 1,000, it is exempted. In relation to mandap keeper services, in relation to a religious place given on rent less than 10,000 per day, it is exempted. Any shops given on rent per day less than 10,000, per month less than 10,000, it is exempted. This is the point, man. Okay. And in the same way, the services that are provided by Uttarakhand state government in relation to Manas Sarovar Yatra is also exempted. Amarnath Yatra or Manas Sarovar Yatra, whatever it is called as, that activity is also exempted. The services provided by Uttarakhand state government in relation to pilgrimage of Manas Sarovar is exempt. There is no need to pay GST. In the same way, the services provided by the Hajj committee to the religious people in relation to pilgrimage of Makkah is also exempted. There is no need to pay any GST there. Generally, this Hajj committee will gather the list of the poor people and will give that particular list to the government, whereby government on a lottery basis, they will select few people and will sell them to Makkah on a subsidy basis. Here the activities that are done by the Hajj committee are on service motive. Therefore, the services that are provided by this Hajj committee is exempted. There is no need to pay any GST. And in the same way, recreational activities like sports, music, painting, all these activities are exempted. Their coaching and training. So the coaching or training in relation to recreational activities like sports, music, painting, etc. are exempted. There is no need to pay any GST. In the same way, skill development programs conducted in association with NSDC, National Skill Development Corporation, or SSC, Sector Skill Council is exempted. There is no need to pay any GST. Skill development programs, like what is meant by skill development programs? In order to develop some communication skills between them, and in the same way, self-employment skills. In order to make them self-reliable, the programs will be conducted. Like one of the most popular scheme is DDU GKY, Deen Dayal Upadhyay Gramin Kaushalya Yojana. Like that, in those schemes, skill development programs like cell phone repair, TV repair, hardware repairs, like that. Some self-employment courses provided to them, computer courses, how to face the interview. All these things will be provided based on skill development programs. So, this is the thing you should remember. With respect to these skill development programs, NSDC, that means these are provided in association with NSDC, National Skill Development Corporation, and in the same way, SSC, Sector Skill Council. Definitely these things are exempted or taxable, exempted. And in the same way, the services provided by news collection agencies like PTI, Press Trust of India, is also exempted. The services provided by news collection agencies like PTI are also exempted. There is no need to pay any GST. In the same way, with respect to the renting of hotel, now it is rent received. So with respect to that renting of a hotel, inn, guest house, club, campsite, if at all they are given on a rental basis, and the room rent is less than or equal to 1,000, it is exempted. If the room rent is less than or equal to 1,000, it is exempted. And with respect to few general insurance services in relation to majorly agriculture, in the same way life insurance policies are also exempted. You can study those things. Those names are there. The list is there in the material. You can refer them. Few life insurance schemes, few general insurance schemes. Majorly they are in relation to agriculture and farmer or the rural background people. Those insurance schemes are exempted. There is no need to pay GST on them. In the same way, services provided by incubator or incubate. Services provided by incubating. Sir, what is meant by the word incubator and what is meant by the word incubatee? Incubator means the person who is providing the financial assistance. Incubatee means the person who is receiving the financial assistance. In simple sense, in future, these incubatees will become startup companies. Okay. So incubator means just like Google. Those people will provide finance to a startup company. Then Google is known as incubator. The startup company which received that financial assistance is known as incubatee. Here exemption is given to the services that are provided by the incubatee. Sir, up to which extent it is exempted? Up to 50 lakhs. In the current year, the turnover is up to 50 lakhs. It is exempted from GST. Sir, for that, any condition is required to be satisfied. Yes, what is the condition? In the preceding financial year, the turnover should be less than 50 lakhs. In the preceding financial year, if the turnover is less than or equal to 50 lakhs, then in the current year, what is the position, ma? You can get exemption up to 50 lakhs. Who will get the exemption here? Incubatee. What is meant by the word incubatee? The person who is receiving the financial assistance. So what is exemption is getting? In the current year, up to the turnover of 50 lakhs, exempt from GST. And what is the condition for exemption? In the preceding financial year, the turnover should be less than or equal to 50 lakhs. Then in the current year, he will get the exemption. Sir, for how much period he will get the exemption? Up to 3 years. So up to 3 years from the date of entering into the agreement with the incubator, within 3 years, he can claim this exemption. And in the same way, whatever the activities that are generally done by the government, or definitely they are also exempted. That means generally whatever the things generally will do constitutional entrusted functions like printing of currency, maintaining international relations, making the whole laws for the country and maintaining post offices, defense, all these are the requirement of the central government. In the same way, state government will also has to do give some licenses, build the highways and protecting the animals. These are the responsibilities of the state government. In the same way, local government has to raise money to build the local parks and provide the services like garbage pickup and all these things, fire and police stations, building the public schools, ZB schools like that, and licenses for the animals. All these are the responsibilities of the local government. These things are generally entrusted to them as a part of constitutional duties. Therefore, those things are also exempted. There is no need to pay GST on them. In the same way, whatever the services that are generally done by the GST network is also exempted. What is meant by the word GST network, ma? It is a non-profit oriented company that is established by the government. Non-profit oriented company that is established by the government. 50% of the share capital was held by central and 50% of the share capital was held by state. Okay, ma? With respect to that, these services are provided by the GST network, ma. So the services provided by the GST network is exempt. Then definitely you are not liable to pay any GST. That is the point you should remember. Okay, ma'am. And in the same way, services provided by business facilitator or business correspondent in relation to bank or insurance in rural areas, it is exempt. There is no need to pay the GST. Services provided by the business facilitator or business correspondent in relation to bank or insurance in rural areas, it is exempted. There is no need to pay the GST. And in the same way, event management services in relation to a business exhibition which is conducted outside India is also exempt. There is no need to pay the GST. Event management services in relation to a business exhibition which is conducted outside India is also exempt. There is no need to pay the GST. And in the same way, generally as per 7 subsection 1 clause B, importation of service is taxable, whether it was done for business purpose or it was done for personal use. But whereas few exemptions are there in relation to importation of service. If the recipient is these 4 category of people, then importation of service is exempt. Who are those people, sir? If the recipient is government, if the recipient is trust, if the recipient is individual for personal use, if the recipient is also located in non-taxable territory. In these 4 cases, definitely it is exempted. There is no need to pay any GST, even though it is the importation of service. Who are the recipients, ma? If the recipient is government, if the recipient is trust, if the recipient is individual for personal use, if the recipient is also located in non-taxable territory like special economic zones, in all these cases, on that importation of service, you are not liable to pay any GST. It is exempted. In the same way, with respect to few events like circus, drama, dance shows, circus, drama, dance shows, music shows, and award functions and sports events. With respect to them, if the ticket price is less than 500 rupees, it is exempted. More than that, full amount will be taxable. Circus, drama, dance shows, music shows, award functions, sports events, like that. If the ticket price is less than 500, it is exempted. More than 500, full amount will be taxable. But whereas with respect to national parks like safaris, like that, and zoo, museum, and tiger reserves. So, national park, zoo, museum, tiger reserve, irrespective of the ticket price, it is exempted. That means entry fee will be there now in order to enter into those premises. That entry fee, the ticket price is whether it is more than 500, less than 500, does not make any difference. With respect to these 4 cases, national park, zoo, museum, tiger reserve. With respect to them, irrespective of ticket price, definitely it is exempted. And in the same way, any person from outside India, is providing services to Reserve Bank of India in relation to foreign exchange management services is exempt. Any person from outside India providing services to Reserve Bank of India in relation to foreign exchange management services also it is exempted. And in the same way, next one, any transactions done through point of sale, in our local language it will be called as swiping machine. Any transactions done through point of sale or swiping machine, if the amount is less than 2000 rupees, it is exempted. There is no need to pay any GST on it. Okay, ma'am. So, any transactions done through point of sale, if the amount is less than 2000, it is exempted. There is no need to pay any GST on it. In the same way, with respect to vegetables and fruits, packing, repacking, labeling, relabeling, preconditioning, pre-cooling, grading, sorting, all these activities are exempted. There is no need to pay any GST. With respect to vegetables and fruits, packing or repacking, labeling or relabeling, grading or sorting, Preconditioning or pre-cooling. All these activities are exempted in relation to vegetables and fruits. We are not liable to pay any GST on it. In the same way, storage of rice and sugar is also exempt, even though they are not agricultural produce. Generally, storage of agricultural produce is exempt. But whereas storage of rice and sugar is also exempted, even though they are non-agriculture. In the same way, public library services are also exempt. There is no need to pay any GST. Public library services are also exempt. There is no need to pay any GST. Okay, ma'am. After the completion of this particular activity, public library services, now we need to see legal services, ma'am. Whereas with respect to legal services, generally who will provide the legal services, ma'am? Junior lawyer, senior lawyer, and whereas arbitral tribunal and the person representing arbitral tribunal. These are the people who are providing the legal services, ma'am. And with respect to them, see, these people are the service providers: junior advocate or partnership firm of advocates, arbitral tribunal, person representing arbitral tribunal, and senior advocate, like that. So here, what is meant by the word arbitral tribunal, ma? First point is, what is meant by the word arbitration? What is meant by the word arbitration, ma? Settlement of a case outside the court. Settlement of the case outside the court through a legal process, it is known as arbitration. And that particular organization which will do this particular arbitration is known as arbitral tribunal. Okay, ma? These people are the service providers and these people are the recipients, like this person, individual for personal use, business entity with the turnover up to either 20 lakhs or 10 lakhs or 40 lakhs. In simple sense, unregistered persons, unregistered business entities. And whereas third one is business entity with the turnover exceeding 20 lakhs in the preceding financial year. That is a registered person. And fourth one is arbitral tribunal. And the fifth one is junior advocate or partnership firm of advocates. If at all these people are the recipients, in those cases, what is the position we need to check now? Supplier is a junior advocate. So junior to individual for personal use, it is exempt. And whereas junior to unregistered business entity, exempt. Junior to registered business entity, taxable. Junior to tribunal, not applicable. Junior to junior, it is exempted. Okay, ma. Junior to individual for personal use, any legal service was provided, it is exempted. And junior to unregistered business entity, exempted. Junior to registered business entity, taxable. Junior to tribunal, not applicable. Junior to junior, it is exempt. And second one is arbitral tribunal. Arbitral tribunal can be a sole arbitrator or it can be a panel of arbitrators. Okay, ma. That means if only one person is there in the tribunal, it is known as sole arbitrator. More than one person is there in that arbitral tribunal, it is known as panel of arbitrators. So this arbitral tribunal is providing service to individual for personal use, exempt. If this arbitral tribunal is providing to unregistered business entity, it is exempt. Arbitral tribunal providing service to registered person, exempted or taxable. Definitely what is the position, ma? It is taxable. So tribunal to individual for personal use, exempt. Tribunal to unregistered business entity, exempt. Tribunal to registered business entity, taxable. Tribunal to tribunal, not applicable. Tribunal to juniors, not applicable. Next, third one, being an artificial person, there must be somebody to represent the arbitral tribunal, ma. That's why person representing arbitral tribunal is providing service to arbitral tribunal only. Definitely it is also taxable because arbitral tribunal is a private entity. It is not a government organization. And next one is senior advocate to individual for personal use. Is it exempted or taxable, ma'am? Exempt. Senior to unregistered person, exempt. Senior to registered person, taxable. Senior to tribunal, not applicable. Senior advocate to junior advocate, is it exempted or taxable, ma? Taxable. So what is the position, ma? Senior advocate to individual for personal use, exempted, ma. Senior to unregistered person, exempted. Senior to registered person, definitely it is taxable. And senior to tribunal, generally not applicable. Senior to junior also taxable. This is the way how the legal service will be there, ma. And next one is services provided by the educational institutions. With respect to educational institutions, what is meant by the word educational institution as per the exemption notification, ma? As per the exemption notification, educational institution means only three. First one is preschools and schools. First one is preschools and schools. And second one is occasional training centers like ICAI, Polytechnic and engineering colleges like that. And third one is courses recognized by Indian law. These three are treated as educational institutions, ma. Preschools or schools, occasional training centers, and courses recognized by Indian law, like our ICAI, Institute of Chartered Accountants of India. These are the three categories, ma. These are the three categories of organizations which are covered under educational institution. Okay, ma. So the first one is, who is the service provider here? Educational institution. And who is the recipient there, ma? Students, faculty and staff. And any consideration is received from the students by the school. Say for example, it is exempted. There is no need to pay any GST on the school fee. Not about the college fee I am talking about. Whether it is school fee or the amount paid to occasional training centers like ICAI, Polytechnic. In the same way, the registration fee is just paid to your ICAI. The registration fee that was paid to your ICAI was exempted, ma. That's why there is no GST on your registration fee. Okay. Next one is supplier, any person, and the recipient is educational institution. And in that case, if at all these services are there, along with that some fifth service is also there, online educational journals. If at all these five services are provided by any person to the educational institution, it will be exempted, ma. What are those five services, ma? First one, transportation. Second one, catering and food facility. Third one, security or housekeeping. Fourth one, admission test. Fifth one, online educational journals. These are the five activities, ma. First one, transportation. Second one, food facility. Third one, security and housekeeping. Fourth one, admission test. Fifth one, online educational journals. In these five activities that are provided by any person to the educational institution, then it is covered under the exemption notification, ma. But whereas with respect to transportation, food, security and housekeeping, with respect to these three, it is exempted only with respect to school, ma. It is exempted only with respect to school. Whereas admission test is exempted to all. And online educational journals, it is exempted only to the courses which are recognized by Indian law. So supplier can be any person and the recipient is educational institutions. In those cases, what is the position, ma? Total five activities are there. First one, transportation. Second one, food facility. Third one, security and housekeeping. Fourth one, admission test. Fifth one, online educational journals. In these five activities, transportation, food, security and housekeeping, these three activities are exempted to school, ma. Whereas admission test is exempted to all these educational institutions, and online educational journals, it is exempted in relation to the courses that are recognized by Indian law. That are recognized by Indian law. That is the point, ma. Okay. So this exemption is in relation to educational institutions, ma. And next one is IIMs. What is meant by the word IIM, ma? Indian Institute of Management. Indian Institute of Management. Generally, it will provide courses like 2 years management programs that are MBAs, And whereas fellowship programs that are known as PhDs and 5 years integrated programs, that means from the degree onwards you can study in IIM. These type of programs are exempted. That means activities that are provided by the IIMs like 2 years management programs, fellowship programs, 5 years integrated programs, they are all exempted. But some 1 year, less than 1 year short duration programs will be there in IIMs. Those short duration programs are taxable. Except that like 2 years management programs, fellowship programs, 5 years integrated programs, definitely they are exempted. Only short duration programs that are provided by the IIMs are taxable. And next one is performance of an artist. With respect to performance of an artist, if at all it is a classical one or a folk one, then only exemption will be generally applicable. If at all it is a classical one or a folk one, then only you will get the exemption up to a specified limit of 1.5 lakhs. Classical music, classical drama, classical dance, folk music, folk dance, folk drama, with respect to them up to 1.5 lakhs, definitely you can claim the exemption. Okay, but if at all it is Western ones, then definitely full amount will be taxable. Say for example, if at all it is a classical music, definitely you will get the exemption up to 1.5 lakhs. Sir, if the amount is more than 1.5 lakhs, in that case, what is the position? Excess amount taxable or full amount taxable? Full amount will be taxable. Let's say you receive 1,60,000 rupees. Then that 10,000 is taxable or total 1,60,000 is taxable. Total 1,60,000 will becomes taxable. If at all it is a classical one. If at all it is a Western one, automatically always full amount will be taxable. And same point will be applicable to musical instruments also. Traditional musical instruments like veena, violin, tabla, like that, those things are exempted. Western ones like guitar, keyboard, all these things are taxable. And what about this one? Puppet shows. Generally they will come under folk. That's why they are exempted. Folk, they will come under, definitely they are exempted. And whereas Western ones, they are always taxable. With respect to Western ones, definitely they are always taxable. And this is the story with respect to services provided by the performance of artists, like folk music, folk dance, folk drama, you can get the exemption up to 1.5 lakhs. If at all it is the classical music, classical dance, classical drama, then also you can get the exemption up to 1.5 lakhs. If the amount exceeds, then automatically full amount will be taxable. But if these folk ones and classical ones performed as a brand ambassador, in those cases, automatically full amount will be taxable. That is the point. Okay. So, sir, what does this mean? Say, for example, there is a famous person that is known as Zakir Hussain, who is actually playing the traditional instrument that is known as tabla. If at all he conducted his own musical program, in that case, up to 1.5 lakhs exemption, definitely you can claim. But whereas, if the person provide this particular musical program as a brand ambassador of some other person, then the exemption will not be applicable. Full amount will be taxable. Let's say, for example, Zakir Hussain is making the musical program on behalf of Taj Mahal tea, Wahtaj. In those cases, he is performing that particular activity as a brand ambassador, then the exemption is not applicable to them. Full amount will be taxable. In the same way, Western music, mimicry, modern theaters, magic shows, exemption is not applicable, it is taxable. In the same way, movie artists, TV artists, they are also, those services also taxable. Paintings, sculptures, all those things are also taxable. The exemption is given only to music, dance and drama. The two classical and folk ones. This is the point with respect to performance of artists. And with respect to next exemption is transportation of the goods. With respect to transportation of the goods, if the supplier is a GTA, Goods Transport Agency, and the service is transportation of any goods, then it is a value-based exemption that was given here. Value-based exemption was given. The gross amount charged for single goods carriage is less than or equal to 1500, it is exempted. Gross amount charged for all the goods of single consignee less than or equal to 750, then also it is exempted. What does this mean? There is a single truck. In that single truck, there is only one consignment. In a single truck, there is only one consignment, and the transport charges are less than or equal to 1500, it is exempted. There is only one truck. In that one truck, there is only one consignment, and that one consignment freight charges are less than or equal to 1500, it is exempted. Let us assume that in that one truck, there is more than one consignment. In that one truck, there is more than one consignment. In that case, individually for each person, each consignee, the transport charges are less than or equal to 750, it is exempted. Less than or equal to 750, definitely it is exempted. That is the point. In a single truck, there is only one consignment, and that one consignment transport charges are less than 1500, it is exempted. In a single truck, more than one consignment is there. In that case, individually each consignee's transport charges are less than or equal to 750, it is exempted. That more than that full amount will be taxable. Next one. Goods transportation by rail or by vessel, and the goods transported are railway equipments or materials, then it is exempted. There is no need to pay any GST. In the same way, with respect to case 3, transportation of the goods by road, by train, by ship, and if these goods are transported, definitely it is exempted. There is no need to pay any GST. In that, the first one is agriculture produce. If agriculture products are transported by road, by train, by ship, then it is exempted. And in the same way, foodstuffs like flour, pulses, rice, milk, salt, like that. Foodstuffs like flour, pulses, rice, milk, salt. With respect to them, what is the position, ma? Definitely, is it exempted or taxable, ma? Exempted. And organic products. That means without using any pesticides, those things will be produced. Those things are known as organic ones. Those organic products are transported either by the road, by train, or by ship, then also they are exempted. In the same way, newspapers or magazines, if at all they are also transported through these routes, then also it is exempted. In the same way, relief materials, any disasters happens, definitely will supply some medical kits or food items, all these things. With respect to those relief materials, what is the position, ma? It is also exempted. And any army people equipments are transported through these modes, then also it is exempted. So these are the major points with respect to transportation of the goods, what we have to remember. And in the same way, with respect to transportation of passengers, with respect to transportation of passengers, the first point is, who is the supplier? Airways, like Air India, SpiceJet, Indigo, like that. And what is the service? Transportation of passengers. Sir, which places? Northeast states like Assam, Meghalaya, Manipur, Mizoram, Nagaland, Arunachal Pradesh, Tripura, like that. If either origin or destination is there in any of these places, in those cases, definitely the transportation of passenger service is exempt. Okay, ma. Who is the supplier, ma? Air India, like Airways. And what is the service, ma? Transportation of passengers. From which places? Northeast states, whether origin or destination is there in any of these places. In those cases, what is the position, ma? Definitely, in those cases, yes, it is exempt. Second one, passenger transportation service by road, ma. If at all passenger transportation service is by road, the carriage is here divided into two types. One is stage carriage and second one is contract carriage. What is meant by the word stage carriage? In every stage, the vehicle will stop. Rural buses, And whereas contract carriage, origin and destination, non-stop buses are the example for contract carriage. Okay, whether it is stage carriage or contract carriage, if non-AC, it is exempted. AC, it is taxable. Whether it is a stage carriage or a contract carriage, non-AC is exempted. AC, definitely it is taxable. But whereas with respect to those vehicles which are used for tourism, conducted tour or hire basis, there is no exemption applicable to it. Definitely it is taxable. Okay, ma, what is meant by the word tourism? Let's say, for example, in our AP, at this particular time, visiting Araku is a very famous one now, because there is a cave that is known as Borra Caves, ma. In the month of either September or October, flowers will be there. Many tourists will come to see them. The question arises here. If we hire a taxi there to see all these tourist places, at that time definitely no AC is required in the car. Generally at that time we need blankets for that. Okay, not AC. But still, even though it is non-AC, still it is taxable because that particular motor vehicle was exclusively used for tourism purpose. So, in the same way, any motor vehicle that was used exclusively for tourism, any motor vehicle that was exclusively used for conducting specific tour, that means some 20-30 members will hire a bus and they will go on a pilgrimage. That means that is called conducted tour. Even though in that case it is a non-AC, definitely it is taxable. In the same way, when those vehicles are treated as taken on hire basis, even though it is non-AC, it is it is taxable, ma. So, what is the general rule? By road, any motor vehicle is transporting the passengers. Whether it is stage carriage or contract carriage, non-AC is exempted, AC is taxable. Okay. But whereas even though it is non-AC, in three cases it is taxable. One is tourism, second one is conducted tour, third one when the motor vehicle was taken on hire basis. In these three cases, even though it is non-AC, it is taxable. And same point will be applicable to radio taxi also. What is meant by the word radio taxi, ma? Two-way GPS tracking is there. It is known as radio taxi. Let's say, for example, you just book a cab through Ola. In that case, your location is known to the driver and driver location is known to you. Where is the driver? You can locate him. Where is the passenger? He can locate you. Two-way GPS tracking will be there. Those type of taxis are known as radio taxis. Even though this radio taxi is non-AC, definitely it is taxable. Even though radio taxi is non-AC, it is taxable. That is the point, ma. And next one is services provided to a recognized sports body. Services provided to a recognized sports body. Any individual, as a player, as a referee, as an umpire, as a coach, as a team manager, providing service to a recognized sports body, it is exempted. There is no need to pay any GST. Any individual, as a player, as a referee, as an umpire, as a coach, as a team manager, provides any services to a recognized sports body, it is exempted. There is no need to pay any GST. In the same way, these individuals, as a player, as a referee, as an umpire, as a coach, as a team manager, same points. If at all they are provided to a unrecognized sports body like IPL, definitely it is taxable. Simply, any player providing service to BCCI, exempted. Any person, any individual as a player providing services to unrecognized sports body like IPL, is it exempted or taxable, ma? Taxable. Recognized sports body like BCCI, exempted. Unrecognized sports body like IPL, taxable. Why it is unrecognized? It is not representing any country in there. BCCI, if you represent it, you are representing the country there. Therefore, is it exempted or taxable, ma'am? Exempted. In the same way, one recognized sports body to another recognized sports body, then also it is exempted. One recognized sports body to another recognized sports body, then also it is exempted. like Indian Olympic Association providing services to International Olympic Association. Indian Olympic Association providing services to International Olympic Association. Then one recognized sports body is providing services to another recognized sports body. In that case, is it exempted or taxable? Exempted. In the same way, BCCA is providing service to ICC, International Cricket Council. It is also exempted. But any individual, as a selector, as a commentator, as a pitch curator, as a technical expert, even though he is providing service to a recognized sports body, but still it is taxable. Generally, any individual as a player, as a referee, as an umpire, as a coach, providing services to a recognized sports body, it is exempted. Okay, but same recognized sports body receives any services like team selectors, commentary people, pitch curators, technical experts, definitely it is taxable. That is the point you should remember with respect to recognized sports body. Okay, ma'am. With respect to next exemption is services provided by Reserve Bank of India is exempt. Services provided by Reserve Bank of India is exempt. In the same way, services provided by foreign diplomatic mission or embassies is also exempted, ma'am. Services provided by Reserve Bank of India is exempt. In the same way, services provided by foreign diplomatic mission is also exempted. Okay. And last but not the least, agriculture relevant activities. With respect to agriculture relevant activities, whatever the agricultural operations we carries that are done by the cultivator, definitely it is exempted. There is no need to pay any GST on it. There is no need to pay any GST on it. Okay, like sir, agricultural operations means the activities that are done on plants only, Noma, breeding of fish and rearing of silkworms, cultivation of ornamental flowers, forestry, rubber, tea, coffee, jaggery, cereals, pulses, whatever the activities, whatever the agricultural operations that are generally done by the cultivator or exempted, there is no need to pay GST. In the same way, the process which do not alter the essential features of agriculture produce is exempt. There is no need to pay GST. Say for example, so tomatoes comes under agriculture product, it is exempted, but tomato ketchup is taxable. In the same way, paddy comes under agriculture, it is exempted, but rice comes under non-agriculture taxable. That means the process which alter the features is not agricultural activity, it is taxable. Until its basic nature does not changes. Up to that particular activity only it will be treated as agricultural activity. And in the same way, wheat and Pillsbury. Potato to potato chips. Definitely all these things and any other things, pulses with husk is agriculture. Pulses without husk, non-agriculture. Like that. And sugarcane sugar. All these things are the examples for transformation of agricultural produce to non-agricultural produce. Then those things are taxable. In the same way, agricultural extension services are also exempted. So what is meant by this agricultural extension services? That means application of the knowledge to agriculture practices through farmer education and their training like drip irrigation programs, cooperative farming, all these things. Definitely they will come under, which item? Yes, those are the things. Agricultural extension or supporting activities, they are also exempted. In the same way, renting or leasing of agro machinery or vacant land. Like we take agricultural land on rental basis. Agricultural land also can be taken on rental basis. So we will pay per annum some X amount to that landlord. In our Telugu, it will be called as kaulu. Okay, those things will be those amounts that are paid by the person who is taking on rental basis that agricultural land. Definitely those things are known as agriculture related activities only, they are exempted. In the same way, commission agent, that means the commission received on sale or purchase of agriculture produce, it is exempted. If at all it is of non-agriculture produce, it is taxable. This is the point that you should remember with respect to agricultural operations. These are the activities which are exempted from GST in relation to agriculture. Okay, ma'am. Now we are going to discuss about the fifth chapter, ma'am, time and value of supply. Whereas with respect to time and value of supplies, the section we need to discuss is here, section 12, 13 and 15, ma'am. Now initially I will start with time of supply here. The question is here, what is meant by the word time of supply? What is meant by the word time of supply? So time of supply means at what point of time recipient is liable to pay the GST will be decided by time of supply. At what point of time recipient is liable to pay the GST will be decided by time of supply. If at all it is a FCM, at what point of time recipient is liable to pay the GST to the supplier will be decided by time of supply. If at all it is a RCM, at what point of time recipient is liable to pay it to the government will be decided by time of supply. And the time of supply also determines the rate of duty or rate of tax also. That means on the, with respect to time of supply also determines the rate of tax also. That means on the date of time of supply, what is the relevant rate of tax that will be there? By using that particular tax rate, you need to pay the GST. That is the thing you need to remember. Okay. Now, time of supply with respect to goods, it will be discussed in section 12. Time of supply with respect to services, it will be discussed in section 13. So, with respect to supply of the goods, section 12 will decide the time of supply. In that section 12, there are 6 subsections. There are 6 subsections, 12.1, 12.2, 12.3, 12.4, 12.5 and 12.6. 12.1 naam ke vaste. Simply what we can say is time of supply should be determined as per the following provisions. As simple as that 12.1 contains. And 12.2 deals with FCM, 12.3 deals with RCM, 12.4 deals with vouchers, 12.5 deals with residual cases, 12.6 deals with additional consideration. 12.6 deals with additional consideration. And now we need to discuss about 12 subsection 2 FCM. Now we need to discuss about 12 subsection 2 FCM. Now we need to discuss about this one, 12.2. So what does 12.2 here deals with? I already told you it deals with FCM. What is meant by the word FCM? Forward charge mechanism. In that FCM, who will pay the GST? Recipient will pay GST to the supplier, and in return, supplier will pay the GST to the government. So under FCM, with respect to goods, what is the time of supply? That is the point we need to see here. With respect to FCM, the time of supply will be date of invoice or last date for the issue of invoice, whichever is earlier. As per 12 subsection 2 FCM, time of supply will be date of invoice or last date for the issue of invoice, whichever is earlier. So, date of invoice can be found out from the invoice itself. Then how to find out this last date for the issue of invoice? It will be decided there in section 31 subsection 1. So it is the point I am discussing 12.2 FCM in relation to goods. As per 12.2, what is the time of supply? Date of invoice or last date for the issue of invoice, whichever is earlier, will be the time of supply. Date of invoice can be found out from the invoice itself. But the last date we need to find out as per section 31 subsection 1. Sir, what does section 31 says? As per section 31, 4 cases are there. First one, when physical movement was involved. Second one, when there is no physical movement. Third one, continuous supply of the goods. Fourth one, sale or return basis. As per section 31, we need to discuss about 4 points here. One is when the physical movement was involved, when there is no physical movement of the goods, continuous supply of the goods, and sale or return basis. Like that 4 points will be there. In these 4 circumstances, we need to find out what is the last date for the issue of invoice. If there is physical movement of the goods that was involved, physical movement of the goods that was involved, in that case, what is the last date for the issue of invoice? On or before removal of the goods. On or before removal of the goods, invoice is required to be issued. Just like with respect to physical movement means just like door delivery facility. Here goods are moving towards the recipient. When there is a physical movement of the goods was involved, in that case, what is the last date for the issue of invoice? On or before removal of the goods from the factory of supplier. Second case, when there is no physical movement of the goods were involved. If at all, there are no physical movement of the goods involved, in that case, what is the last date for the issue of invoice? On or before date of delivery. When the goods are going to be delivered, on or before that particular date, invoice is needed to be issued. What is the third case? Continuous supply of the goods. What is meant by continuous supply of the goods, If at all 2 conditions are satisfied, if at all 2 conditions are satisfied, it will be treated as continuous supply of the goods. First one is recurring nature should be there. And second one, there is an obligation to make the periodic payment. If these 2 conditions are satisfied, then it will be treated as continuous supply of the goods. What are the 2 conditions that are required to be satisfied, First one, recurring nature should be there. Second one, there should be obligation to make the periodic payment. If at all these 2 conditions are satisfied, then it will be treated as continuous supply of the goods. Any example for that? Newspaper, milk packets, we can take all these are the examples for continuous supply of the goods. Let's say with respect to newspapers, they will come on a daily basis. Therefore, recurring nature will be there. But we will make monthly payment. That means periodic payment we will make. If these 2 conditions are satisfied, it will be treated as continuous supply of the goods. So, with respect to continuous supply of the goods, what is the last date for the issue of invoice? With respect to continuous supply of the goods, the last date for the issue of invoice will be date of periodic statement or date of payment, whichever is earlier. With respect to continuous supply of the goods, what is the last date for the issue of invoice? Date of periodic statement or date of payment, whichever is earlier. On or before that particular date, invoice is needed to be issued. Last but not the least, sale or return basis. With respect to sale or return basis, what is the last date for the issue of invoice? Date of approval or from the date of removal 6 months, whichever is earlier. With respect to sale or return basis, date of approval or from the date of removal 6 months, whichever is earlier. That will be the last date for the issue of invoice. So, what is the topic we are discussing, 12.2. FCM in relation to goods. With respect to 12.2 FCM, what is the time of supply, Date of invoice or last date for the issue of invoice, whichever is earlier. Date of invoice can be found out from the invoice itself. But whereas last date for the issue of invoice, we need to find it out from section 31. As per section 31, there are 4 circumstances that are covered. First one, physical movement of the goods involved. What is the last date for the issue of invoice? On or before removal. When there is no physical movement of the goods involved, in that case, what is the last date for issue of removal? What is the last date for issue of invoice? on or before date of delivery. Third case, with respect to continuous supply of the goods, what is the last date for the issue of invoice? Date of periodic statement or date of payment, whichever is earlier. Fourth one, sale or return basis, date of approval or from the date of removal 6 months, whichever is earlier. Date of approval or from the date of removal 6 months, whichever is earlier, that will be the last date. This last date will be compared with date of invoice. Whichever is earlier will be the time of supply as per 12.2. This is 12 subsection 2 FCM. And next point is 12 subsection 3 RCM in relation to goods. With respect to 12 subsection 3 RCM in relation to goods, what is the time of supply? The time of supply will be, with respect to goods, 3 dates will be there. In those 3 dates, whichever is earlier will be the time of supply. What are the dates? First one, date of receipt of the goods. Second one, date of payment. And third one, from the date of invoice 31st day. In these 3 dates, which one is earlier? That will be treated as time of supply. With respect to 12.3 RCM in relation to goods, time of supply will be date of receipt of the goods, date of payment, from the date of invoice 31st day. In these 3 dates, whichever is earlier will be the time of supply. Whichever is earlier will be the time of supply. Okay, ma'am. And sir, if at all this particular point does not work out, in those cases, what is the time of supply? If we are unable to determine the time of supply as per the above points, unable to determine TOS based on above information. In that case, what is the time of supply, ma? Then time of supply will be, what is the time of supply, ma, in that case? The date when the supply entered in the books of accounts of recipient will be the time of supply. As per 12.3, what is the time of supply generally? Date of receipt of the goods, date of payment, from the date of invoice 31st day. In these 3 dates, whichever is earlier will be the time of supply. If we are unable to determine the time of supply based on the above information, then time of supply will be the date when the supply entered in the books of accounts of recipient. This is 12.3 RCA. Next point is 12.4 vouchers. Next point we need to discuss is 12 subsection 4 vouchers. With respect to vouchers, the point can be divided into 2 types. First of all, vouchers that can be exchanged for goods or services, the vouchers that can be exchanged only for money. Vouchers that can be exchanged for goods or services, or the vouchers that can be exchanged only for money. So with respect to vouchers that can be exchanged only for money, no GST will be there on those types of vouchers, like Paytm cashback offers, like that. With respect to them, the vouchers that can be exchanged only for money, no GST will be there. If the vouchers that can be exchanged for goods or services, GST applicable. GST applicable. With respect to the goods or services, the point is, at the time of issue of voucher, supply can be identified At the time of issue of voucher, supply can be identified. Second case is cannot be identified. If at the time of issue of voucher, supply can be identified, issue of voucher will be the time of supply. If at the time of issue of voucher, supply cannot be identified, redemption of voucher will be the time of supply. So what is the time of supply, With respect to goods or services, GST is applicable. If at the time of issue of voucher, supply can be identified, issue of voucher will be the time of supply. If at the time of issue of voucher, supply cannot be identified, redemption of voucher will be the time of supply. Say for example, we received Amazon gift coupon. By using that particular Amazon gift coupon, what is the item we are going to purchase? Is it possible to identify at the time of issue of voucher? No. We can purchase with that Amazon gift voucher definitely some electronic gadgets, or in Amazon fashion we can purchase any item, and in the same way you can purchase books also. So whatever the things you are going to purchase, nobody knows at the time of issue of voucher. That's why in those cases the supply cannot be identified at the time of issue of voucher. If the supply cannot be identified at the time of issue of voucher, in that case, what is the time of supply? Redemption of voucher will be the time of supply. But sometimes with respect to Reliance Trends vouchers, you can identify that you can purchase this specific item only. So you can get, say for example, so-and-so brand, so-and-so model washing machine can be exchanged for this particular voucher. Like that. If at all, at the time of issue of voucher, voucher itself is saying that you can use it for only for that particular product. In those cases, supply can be identified at the time of issue of voucher. In those cases, what is the time of supply? Issue of voucher will be the time of supply. This is 12 subsection 4. Next one we need to see is 12 subsection 5, which deals with residual cases. So when this 12.5 will be applicable? When it is not possible, to determine time of supply as per 12.2, 12.3 and 12.4. In those cases, 12.5 will come into C. In those cases, 12.5 will come into C. As per 12.5, what is the time of supply? As per 12.5, the time of supply will be when GST return was filed. When GST return was filed, the date of return will be the time of supply. When no GST return was filed, then date of payment will be the time of supply. When this 12.5 will come into scene, when we are unable to determine the time of supply as per 12.2, 12.3 and 12.4, in those cases 12.5 will come into scene. As per 12.5, if at all any GST return was filed, then date of filing of that particular return will be the time of supply. When no GST return was filed, date of payment will be the time of supply. Okay, this is the 12.5. Generally, any fire accident occurs or any black money was actually caught by the department, in those cases 12.5 will come into scene. Okay, and last but not the least, 12.6, which deals with additional consideration. 12.6 deals with additional consideration. Additional consideration means it can be interest, late fee, penalty. Technically, it is a contractual penalty. They are only contractual penalties, because on statutory penalties there will not be any GST. So whatever the contractual penalties, generally like interest, late fee, delay payment charges, like that. In those cases, what is the time of supply? The time of supply will be, in those cases, when that additional consideration is received. The date when that additional consideration is received, that will be treated as time of supply. Like interest, penalty, late fee, whatever the contractual penalties that are there in that particular agreement, as per 12.6, the time of supply will be when that additional consideration is received, that will be the time of supply. This is all about section 12. The time of supply in relation to supply of goods. Now we need to see section 13. Point remains the same. With respect to section 13, it deals with time of supply in relation to services. In that also 6 subsections are there. 13.1, 13.2, 13.3, 13.4, 13.5 and 13.6. With respect to 13.1, naam ke vaste, and 13.2 deals with FCM, 13.3 deals with RCM, 13.4 vouchers, 13.5 residual cases, 13.6 additional consideration, just like in goods. Now we need to start with 13 subsection 2 FCM in relation to goods. So in relation to service, yes ma. 13 subsection 2 FCM in relation to service. Generally there is a statutory time limit in relation to supply of service ma, for the issue of invoice. The time limit will be generally 30 days. What is the time limit ma? 30 days. From the date of provision of service, from the date when that service was provided, from that particular date, within 30 days, you need to issue the invoice. If invoice is issued within that particular date, then time of supply will differ. We will see that. From the date of service, invoice is needed to be issued within 30 days. From date of service, invoice is needed to be issued within 30 days. If invoice is issued within 30 days, further the answer is yes or no. Say this is yes and this is no. Further the answer is yes. In that case, the time of supply will be date of invoice or date of payment, whichever is earlier. Further, the answer is no. In that case, time of supply will be date of service or date of payment, whichever is earlier. Date of service or date of payment, whichever is earlier. Okay, ma. So, what is the point 13.2 deals with, ma? FCM in relation to service. What is the statutory limit? From the date of service, invoice is needed to be issued within 30 days. If invoice is issued within 30 days, then time of supply will be date of invoice or date of payment, whichever is earlier. If invoice is not issued within 30 days, then date of service or date of payment, whichever is earlier, will be the time of supply. That is the point. But whereas with respect to few cases, instead of this 30 days, 45 days will be applicable. Like banks, insurance, financial institutions and NBFCs, like that. This 30 days is needed to be replaced by 45 days. Because of huge number of transactions will be there generally for them. That's why they need to issue the invoice instead of 30 days within 45 days. Sir, if at all we are unable to determine the time of supply, as per the above points, when we are unable to determine TOS as per above, then time of supply will be the date when the supply entered in the books of accounts of recipient. Okay, ma, when the above provision is unable to determine the time of supply, the date when that additional consideration is entered in the books of accounts of recipient, that will be the time of supply. This is studied in subsection 2. From the date of provision of service, if invoice is issued within 30 days, then date of invoice or date of payment, whichever is earlier, will be the time of supply. If invoice is not issued within 30 days, then date of service or date of payment, whichever is earlier, will be the time of supply. If at all we are unable to determine the time of supply as per the above points, then the date when the supply entered in the books of accounts of the recipient will be treated as time of supply. This is 13 subsection 2. Now we need to see 13 subsection 3 ma. What does 13 subsection 3 deals with ma? RCM in relation to services. RCM in relation to services. With respect to that point here, 13.3 RCM in relation to services. Two dates will be there ma. The first date will be date of payment and second date will be from the date of invoice 61st day. Whichever is earlier will be the time of supply. 13.3 deals with RCM in relation to services ma. In that, what is the time of supply? Date of payment or from the date of invoice 61st day, whichever is earlier, that will be treated as time of supply. That will be treated as time of supply. This is the point. But whereas in the goods, what is the point ma? Here, instead of 61 days, we will take there 31 days. But with respect to services, it is 61st day. That is the point. And whereas 13.3 also covers another point here. Associated enterprises and where supplier is there in outside India. If at all, supplier and recipient are associated enterprises and the supplier is there in outside India, then time of supply will be, what is the time of supply ma? Date of payment or when it is entered in the books of accounts, then the supply entered in the books of accounts, whichever is earlier, will be the time of supply. Will be the time of supply. Sir, what is meant by the word associated enterprises? Associated enterprises means mutually financial interested organizations. That means every organization will have some financial interest in the other organization. See, in simple sense, it will have a different definition meaning in your income tax. I'm not going to discuss that point in detail. I'm telling you simply, associated enterprises means the enterprises which are having mutual financial interest in each other's business. And in those associated enterprises, if the supplier is there in outside India and recipient is there in within India, then time of supply will be the date of payment or when it is entered in the books of accounts of recipient. Books of accounts of recipient. That will be the time of supply. This is 13 subsection 3. And remaining points remains the same as in goods ma. 13.4 vouchers, 13.5 residual cases, 13.6 additional consideration. So 13.4 vouchers in relation to services, the points remains the same. Vouchers that can be exchanged for money, no GST. Vouchers that can be exchanged for goods or services. At the time of issue of voucher, supply can be identified. Issue of voucher will be the time of supply. At the time of issue of voucher, the supply cannot be identified. Redemption of voucher will be the time of supply. And 13 subsection 5, residual cases, where it is not possible to apply 13.2, 13.3 and 13.4. In those cases, 13.5 will come into scene. As per 13.5, when the GST return was filed, filing of return will be the time of supply. When no return was filed, date of payment will be the time of supply. And 13.6 deals with additional consideration. And that additional consideration, when it is received, that particular date will be treated as time of supply. That point is also there in just like in section 12. This is the time of supply context, except 2 points I just need to tell you. One is a small advance. It was a proviso to, either 12.2 or 13 subsection 2. The point is here, if you are making excess payment, excess amount, payment, which is more than invoice value. First point is, you just paid the excess amount, that is more than invoice value. And that excess amount is less than 1,000 rupees. That excess amount is less than 1,000 rupees. In those cases, there is no need to issue any separate tax invoice for that excess. No need to issue any separate invoice for that. At the option of the supplier, he can take present bill cycle invoice date or next bill cycle invoice date. He can take present bill cycle invoice date or next bill cycle invoice date. It depends upon the intention of the supplier. Let us take the example of Airtel. Let's say I am using the Airtel mobile postpaid connection and the monthly bill is 1,600. Due to some technical reasons, I am unable to pay the amount through online. I just went to the customer care center and I just gave them 2,000 rupees. So they just said that, sir, we don't have the change. We will do one thing. We will adjust this excess 400 for the next month bill payment, sir. Is it okay with you? They asked me. I said, no issue, please go ahead. In this case, what is the invoice value, 1,600. What was the amount that I paid? 2,000. What was the amount I paid? 2,000. What is the excess amount? 400. Is it less than 1,000 or not? Yes, it is less than 1,000. In that case, there is no need to issue any separate invoice for this 400. The Airtel company can take present bill cycle invoice date or next bill cycle invoice date for that. It purely depends upon the intention of the supplier. In our example, it is Airtel. Okay, And another point I need to tell you with respect to time of supply. With respect to time of supply, any advance amount is received. If that advance amount is received in relation to goods, no GST on advance. Okay. But if at all that advance amount is in relation to services, then definitely, yes, you need to pay GST on advances. Remember those two lines. If you pay advance in relation to goods, there is no GST on advance. If you just paid advance in relation to service, yes, definitely GST is payable on advances. This is the topic with respect to time of supply. Now we need to see value of supply, we will see that. Okay, the next topic we need to see is value of supply, which deals with section 15 here. Section 15 here deals with value of supply. In our syllabus, we are having 15 subsection 1, 15 subsection 2 and 15 subsection 3. These are the syllabus that are there in our CA Inter. So with respect to that section 15 subsection 1, generally why we need to compute the value of supply? Because in order to find out the tax payable, whether it is CGST, SGST, or UTGST or IGST, one need to know the value of supply, because already we know the rate of tax as per the time of supply. Now we need to, if at all we are able to find out the value comfortably, then how much GST we need to pay, definitely we can calculate. That's why what is tax payable? Rate of tax into value of supply. Rate of tax already we find out by using time of supply. Now we need to find out on which value this rate should be applied. That value will be decided by 15 subsection 1 generally. As per 15 subsection 1, taxable value is equal to transaction value if at all these two conditions are satisfied. Sir, what are the two conditions that are required to be satisfied? First one, price is the sole consideration. Second one, the parties are not related. If at all these two conditions are satisfied, then taxable value is equal to transaction value. So what are the two conditions that are required to be satisfied for this 15 subsection 1 ma? First one, price is the sole consideration. Second one, parties are not related. If at all these two conditions are satisfied, then taxable value is equal to transaction value. Sir, what is meant by this? Price is the sole consideration. Whatever the consideration that is moving from recipient to the supplier, it should be in monetary form. It should not be in non-monetary form. That is the theme of price is the sole consideration. What is the consideration that is moving from recipient to the supplier? It should be always in terms of money only. No non-monetary consideration should be there. Okay, ma. Then only it will be treated as price is the sole consideration. This is the first condition. And what is the second condition? The parties are not related. That means supplier and recipient should not be related persons. When supplier and recipient will be treated as related persons, ma'am? The topic we discussed in supply chapter like common directors, partners, employer and employee, more than or equal to 25% of voting power, holding and subsidiary, third party controlling these two controlling a third party, same family members, sole selling agent. If any type of relations are there, they are known as related parties. With respect to related parties, definitely 15.1 will not be applicable. 15.4 will come into C. Valuation rules will be applicable, which will be there in CA final level. Okay. So, in order to apply 15 subsection 1, taxable value is equal to transaction value. What is the condition, ma? First one, price is the sole consideration, and second one is parties are not related. If these two conditions are satisfied, then as per section 15.1, taxable value is equal to transaction value. The next question is here, sir, what is meant by the word transaction value? Transaction value means sale price plus 15.2 inclusions minus 15.3 exclusions. And what is the amount we will get? It is known as transaction value. On the transaction value, we are liable to pay the GST. What is meant by the word transaction value, ma? Sale price plus 15.2 items are to be added to that, and 15 subsection 3 items are to be deducted from that. And what is the amount we will get? We will treat it as a transaction value. On the transaction value, definitely we are liable to pay the GST. Sir, what are the inclusions as per 15 subsection 2? There are 5 inclusions as per 15 subsection 2, ma. These are the 5 inclusions that are there as per 15 subsection 2. The first inclusion is any taxes other than GST. The first inclusion is any taxes other than GST was separately charged, then those amounts will also be includable as per 15 subsection 2. So any taxes other than GST is includable. Sir, any example? Let's say for example, this Masterminds Pawanputra campus which is there at Guntur. Let's say for example, I have given this particular Pawanputra campus to Masterminds on rental basis. The monthly rent is, per annum rent, let us assume that it is 50 lakhs. And along with this 50 lakhs, I just asked them to pay the municipal taxes of 5 lakhs also. In that case, what is the total income I am getting from this Masterminds management? Is it 50 or 55? Definitely it will be 55. Because municipal taxes are needed to be paid by the owner legally, it is obligation of the owner. But whereas it is going to be paid by the tenant. Now, how much amount I am receiving from MM management there? 50 plus 5, 55. That is the logic here. 50 lakhs is a consideration and 5 lakhs is any tax other than GST that is paid by the recipient. It should also be includable in the taxable value. That means what is the consideration? 50 lakhs. For that, what is the amount I am adding here? 5 lakhs. Why? Any taxes other than GST separately charged. It should be includable in the taxable value. Therefore, municipal taxes are needed to be added or not? Yes, municipal taxes are needed to be added to that. That is the point. Next one. So what is the second point? Next one. The second point is supplier obligation was met by the recipient. When the supplier obligation was met by the recipient, that amount is also to be includable. Sir, any example for that? Let's say supplier is there, is selling the goods to the recipient. Supplier, say for example, Mr. X is there, is selling the goods to Mr. Y. The total consideration is, let us assume that 10,000 rupees is the total contract price. But in this, Mr. X asked Mr. Y to pay him only 8,000 rupees and the balance amount to Mr. Z. Actually, that 2,000 is needed to be paid by Mr. X to Mr. Z. Here, Mr. X is selling the goods to Mr. Y and the contract price is 10,000. But Mr. X requested Mr. Y that please pay me 8,000 rupees only and please pay the balance 2,000 rupees to Mr. Z. Actually, I am liable to pay to him. Here, for this payment of 2,000 to Mr. Z, it is whose obligation? Is it the supplier obligation or recipient obligation? Supplier obligation. It was met by the recipient. In that case, what is the taxable value then? Is it 8,000 or 10,000? 10,000. That is point number 2. Supplier obligation was met by the recipient. And third one is incidental expenses up to the stage of delivery, definitely includable. Whatever the incidental expenses that are incurred by the seller up to the stage of delivery, all those amounts are needed to be added to the taxable value, like inspection charges, testing charges, or certification charges, designing charges, packing charges, weighment charges, whatever the charges that are incidental expenses up to the stage of delivery that is incurred by the seller or the supplier, all those amounts are needed to be added to the taxable value. And the fourth one is contractual penalty. Already I told you at the time of consideration itself that penalty can be divided into two types. One is contractual penalty and second one is statutory penalty. Statutory penalty is not a consideration, no GST is needed to be paid. But whereas contractual penalty is a consideration, GST is to be paid. Contractual penalties are generally paid for the breach of contract, like late fee, interest, penalty for delayed payment. All these are comes under the word contractual penalty. With respect to contractual penalty, what is the position? We need to pay the GST. That's why those amounts are also needed to be includable in the taxable value. But one thing you need to remember, generally, if the question is in relation to late fee, interest, penalty, like that contractual penalties, in those cases, always assume that it is inclusive of tax. This point is exclusively applicable and only for contractual penalties. In the problem, any contractual penalty amounts are given, please assume them as inclusive of tax. And for that, already you know the formula, backward computation will be there. Amount received into tax rate by 100 plus tax rate. If you write that particular formula, you will get the tax amount and the remaining amount will be the value. So, whatever the amount you receive in the name of contractual penalty, you please assume that it is inclusive of tax. Based on that, please make your computation. And fifth point, last but not the least, subsidy from any person other than government. This point also we discussed in consideration topic. Subsidy by government, excludable. Subsidy by any person other than government, includable. These are the 5 inclusions as per 15 subsection 2. What are the inclusions? First one, any taxes other than GST. Second one, supplier obligation was met by the recipient. Third one, incidental expenses up to the stage of delivery. Fourth one, contractual penalties. Fifth one, subsidy from any person other than government. These are the 5 inclusions that are to be done as per 15 subsection 2. After adding that, which item is needed to be deducted, ma? 15 subsection 3 exclusions. Now we need to see 15 subsection 3 exclusions from the value of supply, ma? The one and only exclusion is discount. The one and only exclusion that was given under 15 subsection 3 will be discount. Here discounts can be divided into 2 types, ma. Here discounts can be divided into 2 types. Discount given before or at the time of supply. Discount given after supply. Discounts can be divided into 2 types. One is discount given before or at the time of supply. Second one, discount is given after supply. If the discount is given before or at the time of supply, then in order to exclude that particular value from the taxable value, the one and only condition is it should be mentioned in the invoice. Discounts can be divided into 2 types. One is discount given before or at the time of supply. Second one, discount given after supply. In relation to discount given before or at the time of supply, in order to allow that particular discount, the one and only condition is it should be indicated in the invoice. Then that discount amount is allowed. And second one is post-supply discount or after-supply discount. Example for that is cash discount. Cash discount is example for post-supply or after-supply discount. In order to allow this cash discount, 3 conditions are required to be satisfied. If these 3 conditions are satisfied, then that discount amount is deducted from the taxable value. Sir, what are the 3 conditions that are required to be satisfied? First one, there should be agreement. Second one, it should be linked to the invoice. Third one, proportionate IDC is needed to be reversed. If all these 3 conditions are satisfied, then that discount amount will be excluded. First one, there should be agreement. Second one, it should be linked with invoice. Third one, proportionate IDC is needed to be reversed. If all these 3 conditions are satisfied, then that post-supply discount is allowed. Otherwise, it is not allowed. Sir, agreement is okay. There should be agreement. Second one, invoice linking is also okay. You need to specify the invoice number. What about this proportionate IDC is needed to be reversed? We will see that. We purchased a plant and machinery on January 1st. Let us assume that the plant and machinery value was 1 lakh rupees and the rate of GST is 18%. The contract is within 15 days he paid the amount, then 5% cash discount is allowed. If the buyer makes the payment within 15 days, in those cases 5% cash discount is allowed to him. Okay, the point is here, on January 1st, when that particular goods are sold, for which amount the invoice will be generated for 1 lakh rupees. Because we don't know whether he pay the amount or not within 15 days. In that case, on the invoice, what is the tax amount that will be mentioned? 1 lakh rupees is the plant and machinery value. Rate of GST is 18%. In that case, how much amount of tax that will be indicated on the invoice? 18,000. This 18,000 will be claimed as IDC by the recipient then, because he is having the documentary evidence and the goods are also received. Thereby on January 1st, he will claim the IDC of 18,000. Let us assume that on January 10th, he just paid the amount. In that case, is he eligible for cash discount or not? Yes, definitely is eligible. In that case, how much cash discount is allowed, 5%. That means on 1 lakh 5% means how much amount, 5,000. Now, what is the cost of plant and machinery? 95,000 only, na? And on that 18% means, what is the rate of applying 18%? How much amount we will get, 17,100. Is it 95,000 into 18%? So definitely it will be 17,100. So what is the ITC that is needed to be claimed? 17,100. What was the IDC that was previously claimed? 18,000. How much excess that was claimed? 900. If you reverse that 900 IDC, you can claim this 5,000 rupees as a discount. Got the point, ma? I am repeating once again. A plant and machinery was purchased on January 1st. The invoice value is 1 lakh rupees. The value of the plant and machinery is 1 lakh and the rate of tax is 18%. The agreement is if the person pays within 15 days, 5% cash discount is allowed. But when the invoice was generated on January 1st, in that case, on 1 lakh rupees, 18%, 18,000 will be indicated as the tax amount. That amount will be claimed as IDC by the recipient. Now, how much IDC the recipient claimed, ma'am? 18,000. But if he paid the amount within 15 days, then instead of 1 lakh, the plant and machinery value will be 95,000 only. On that 95,000, 18% means 17,100. What is the excess amount that was there? 900. So if that excess IDC was reversed, then definitely you can claim 5,000 rupees as discount. That is the point. Got the point, ma'am? That is the third condition. So in order to allow the post-supply discount, what are the three conditions that are required to be satisfied, ma'am? First one, there should be agreement. Second one, they should be linked to the invoice. Third one, proportionate IDC is needed to be reversed. If all these three conditions are satisfied, then the discount is allowed. Otherwise, it is not allowed. And with respect to subsidy, one thing you need to remember here, last point with respect to this chapter. Subsidy, to whom it is given will decide whether it is deductible or not. Subsidy received directly to the account of supplier and subsidy received to the account of recipient. If the subsidy was paid directly to the supplier, in those cases, if at all it was paid by the government, then it is excluded. If at all that subsidy was paid by the others, then it is includable. But whereas, if the subsidy amount was credited to the account of recipient, then who is giving that subsidy is immaterial. In all cases, it is taxable in the transaction value. Let's take the example of our gas subsidy. At present, let us assume that what is the cylinder rate? Some 1200 approximately is the gas cylinder rate, domestic cylinder approximately. Say for example, what is the procedure now we are following for gas cylinder nowadays? We are paying 1200 to the concerned gas distributor and 150 rupees, I am assuming that 150 rupees will be credited to the recipient account. Yes or no? We just paid 1200 to the gas dealer. Thereby we are getting that 150 rupees will be credited in our bank account. Here subsidy was given to the supplier or to the recipient. In that case, whosoever has given the subsidy, always that subsidy is includable. On the total 1200, we are liable to pay the GST. But whereas in olden days, before some 80 years, 10 years back, the gas system was not like this. Some 8 years, 10 years back, say for example, at that time the gas cylinder was some 950 or something. In those days also. At that time, we pay some 500 rupees approximately for gas cylinder, and remaining 450 rupees was directly paid to the gas dealer by the government. Do you remember those days? In those days, the cylinder was 950. But we are not paying 950 here. As a customer, we are paying only 500. And remaining 450 was directly paid by the government to the supplier. In this case, the amount is credited to the seller account or to the customer account. Seller account. In that case, if that subsidy was given by government, it is excludable. If that subsidy was given by any person other than government, it is includable. That is the logic. To whose account the amount is going to be credited will decide whether it is includable or excludable. If the amount is credited to customer account or recipient account directly, whosoever gives that particular subsidy, it is always taxable. If the subsidy was paid to the account of the seller, in that case, if subsidy was given by government, excludable. If subsidy was given by any person other than government, it is includable. That is the point, and there ends chapter number 5. Okay, ma'am. Now we are going to discuss about input tax credit, ma'am, chapter number 6. So, whereas with respect to input tax credit, chapter number 6, we need to discuss about few sections here, ma'am. There are practically in your CA inter syllabus 3 sections are there. Section 16, 17 and 18. These are the 3 sections that are there in your CA inter syllabus. Before going to discuss about this particular concept, the first question is here, what is meant by the word input tax credit? What is meant by the word input tax credit, ma? What is the tax that was paid on purchases? What is the tax that is paid on purchases? While paying the tax on sales, if at all we are able to set it off, then it is known as input tax credit. Let us assume that the tax that was paid on purchases is 10 rupees. Let's say on the sales we need to pay some 15 rupees. At the time of paying that 15 rupees output tax payable, what is the tax that was paid on purchases, that is 10 rupees will be deducted and remaining 5 rupees will be paid in cash. This concept is known as input tax credit. Sir, why input tax credit will be allowed? Why input tax credit is allowed? What can be the reason, ma? In order to avoid the cascading effect, the concept of ITC was introduced. Okay, ma. And the point is here, sir, the question is here, as per our CGST Act, on which items you can claim the ITC? Is it on the goods or is it on service? As per our CGST Act, ITC can be claimed on the goods or on the service. Both, ma'am. Definitely ITC can be claimed on both. That means ITC can be claimed on the goods as well as services. But under our GST law, goods are divided into 2 types. One is inputs and second one is capital goods. Goods are divided into 2 types. One is inputs and second one is capital goods. What is meant by the word inputs and what is meant by the word capital goods, ma? What is meant by the word inputs and what is meant by the word capital goods? Capital goods means, in simple sense, the amount which is capitalized in the books of accounts of a person, then those assets or those goods are known as capital goods. In simple terms, if the item is reflected in the balance sheet, it is known as capital good. If the item is reflected in the balance sheet, it is known as capital good. And the items other than capital goods are known as inputs. In simple terminology, the items which are reflected in P&L account are known as inputs. So the items that are reflected in the balance sheet are known as capital goods, and the items that are reflected in trading and P&L account are known as inputs. And another word is there, input service. What is meant by the word input service, ma? The service which is used for providing outward supply is known as input service. The service which is used for providing the outward supply is known as input service. So, on these 3 items, ITC is allowed as per our CGST law. So, whether they are inputs or capital goods or input services, definitely we can claim the ITC. Say for example, with respect to masterminds, what are the capital goods that are required for masterminds, ma? What are the capital goods that are required for masterminds? AC. First of all, it is mostly required. And after that, camera is required. And after the touch screens, computers, all these things, modems or furniture, all these things are capital assets that are required. While purchasing all these capital assets, MM will pay GST. That GST amount can be claimed as ITC by our masterminds. At the time of paying GST on your fee, MM will deduct the taxes that are paid on these ACs, and on these amplifiers, on all these touch screens, whatever the input tax or GST that was paid by masterminds, masterminds will set off all these amounts which is actually paid as GST, and remaining amount will be paid by the masterminds to the government. These are the capital goods. And inputs like what we can say day-to-day needs related items, markers, pens, all these things will come under this. And input services. What are the input services requires, ma? What are the input services requires? Faculty services. Faculty services, and in the same way, advertisement services, internet services, all these are the services that are received by So whatever the tax that was paid on all these input services, inputs and capital goods, will claim them as ITC, and the remaining balance will be paid in cash. This is the point you should remember. So that means here, in the third chapter, you said that tax can be paid in two ways. One is under FCM and second one is under RCM. FCM means forward charge mechanism, RCM means reverse charge mechanism. Under FCM, supplier will pay the GST to the government. Under RCM, recipient will pay the GST to the government. Okay, the question arises here. Sir, the tax paid under FCM is allowed as the ITC, or the tax paid under RCM is allowed as ITC? What is your answer? The tax paid under FCM is allowed as ITC, or the tax paid under RCM is allowed as ITC? Both are allowed as ITC. If at all it is a purchase, if at all it is the inward supply, then remaining conditions are satisfied. Then on that inward supplies, you can claim the ITC. Under which way you are paying the tax is immaterial. The tax, whether it was paid under FCM or the tax that was paid under RCM, both cases you are eligible if at all it is a eligible inward supply. So the tax paid under FCM can be claimed as ITC. In the same way, tax paid under RCM can also be claimed as ITC. That is the point. Okay, ma? And the next point is, so what is the type of GST that can be claimed as ITC? CGST, SGST, IGST, UTGST, like that, many taxes will be there now. Which type of GST can be claimed as ITC? Yes, which type of GST can be claimed as ITC? All types of GSTs, whether it is CGST, SGST, UTGST, IGST. Every type of GST can be claimed as ITC. Sir, previously in chapter number 1, you said that on the imports, IGST is needed to be paid now because imports are deemed to be interstate supplies. The question arises here, the IGST that was paid on imports, can it also be claimed as ITC? On imports being an interstate supply, IGST will be levied. The question arises here, on this IGST, which is paid on imports, can it also be claimed as ITC? Yes, even the IGST that was paid on imports can be claimed as ITC. If at all, the conditions that are specified under section 16 are satisfied. So, what are the conditions that are specified in section 16? With respect to the conditions for availing the ITC, the first condition is, in order to claim the ITC, there should be a documentary evidence. In order to claim the ITC, there should be a documentary evidence available. My first question is here, who can claim the ITC, ma? Supplier or recipient? Who will claim the ITC? Supplier or recipient? Recipient will claim the ITC. The person who is paying the tax, who is bearing that particular burden, who is actually having the burden of that particular tax, will claim the ITC. Seller will collect the tax from the buyer and remit the same to the government. Seller is a person who is acting as a mediator. He is not actually paying the tax really. Actually, who is the person that is actually paying the tax? Buyer. So who can claim the ITC, ma'am? Buyer will claim the ITC. Say raw material was purchased. At the time of purchase, the raw material buyer will claim the ITC. By using those raw materials, he actually produced the finished goods. And when those finished goods are sold, whatever the tax that was paid on these raw materials, it can be set off. So, in the first transaction, who will claim the ITC, ma'am? Any transaction, buyer will claim the ITC. In our GST language, recipient will claim the ITC. Because recipient is the person who is actually bearing the tax burden. That's why who is bearing that particular tax burden will be treated as, will be eligible for this ITC. So who will claim the ITC, ma'am? Recipient. So what is the first condition for claiming the ITC, ma'am? So the recipient should have a documentary evidence in order to claim the ITC. Sir, what is meant by the word documentary evidence here? As per the CGST rules, some documents are prescribed. Those documents are submitted as evidence. Definitely we can claim the ITC. Sir, what are those documents? Tax invoice, debit note, bill of entry, reverse charge invoice, ISD invoice. Tax invoice, debit note, bill of entry, ISD invoice, reverse charge invoice. In these documents, any document was submitted as evidence, definitely we can claim the ITC. Tax invoice, already we know that generally it is issued by the registered person. What is meant by the word debit note, ma? Based on debit note also, we can claim the ITC na, as per the CGST rules. What is meant by the word debit note? When supply actual value is more than invoice value. When actual value is more than invoice value. In those cases, for the difference amount, what will be issued, ma? A debit note will be issued. Say for example, let us assume that there is a GST that is available on food item. But practically ITC is not allowed on food items, except in few cases, we will discuss it later on. But for a better understanding of the concept, I am telling you example with respect to that. Even though practically ITC is not available on that, let us assume that, okay, at the end of this marathon class, I just want to give you a treatment. So that's why I just ordered a biryani from AUDITING, which is actually a Hyderabadi biryani. I just want to order. Say for example, in the class strength of total some 120 members, I just want to give you a treat at the end of this particular marathon session. So that's why I just asked you, okay, how many people actually wants the biryani? So automatically all the students who are there in the class 120 members will raise your hand. But I just put a condition. I just ask you a few questions in relation to GST. There will be one quiz conducted. Any person who passed that particular quiz is eligible to enjoy the biryani. And when I just told the condition, automatically 3/4 of the hands were closed. So that means in that 120 members, only 30 members are ready to actually participate in the quiz. That day has come. Okay, the class strength is there. But only 30 people are actually interested in participating in the quiz. Remaining 90 members are not interested in the quiz, but interested in biryani. That's why they just put some sad faces. Okay, then I just told them that, okay, I'm just changing the condition. Anybody who participates in the quiz is eligible for enjoying the biryani. Then automatically, sir, participation is sufficient, sir. Yes, participation is sufficient. So, sir, then I will participate, sir, for the sake of biryani. So, but actually what I have done is, I thought that maximum of some 60 members will participate in the quiz. I ordered on the previous day itself with the AK biryani point to suppliers 60 biryanis. But on the day of conducting the quiz, total 120 members, 110 members want to participate in it. So what is the invoice value that was already generated for 60 biryanis? But now what is the value that is going to be supplied now? 110. I just called AK biryani point. No, yeah, instead of 60, please send me 110 biryanis. I will, okay, settle your matter in the evening. Here, what is the actual value? 110. What is the invoice value? 60. What is the difference? 50. For that 50, a debit note will be issued. For that 50, a debit note will be issued. When actual value is more than invoice value, when actual supplied value is more than invoice value, in those cases, for the difference amount, a debit note will be issued. And what is the third one, ma'am? Bill of entry. What is meant by the word bill of entry? Just now I told you that even IGST that was paid on imports can be claimed as ITC. But in order to claim ITC on imports, first there should be evidence that the goods are imported. The evidence for importation of the goods is bill of entry. The bill of entry is the evidence for importation of the goods, ma'am. You need to submit that in order to claim the ITC. And ISD invoice. What is meant by the word ISD, ma'am? What is meant by the word ISD? Input Service Distributor. What is meant by the word ISD, ma'am? Input Service Distributor. With respect to ISD, when there is a centralized billing system, when there is a centralized accounting system, the total purchases will be done from head office only generally, and total ITC will be accumulated at head office only. But whereas output tax is needed to be paid from other branches also, other place of businesses also. In those cases, whatever the accumulated ITC that was there with this head office, it will be distributed to the branches. For the distribution of that amount to the branches, one document will be issued by this particular ISD. That document is known as ISD invoice. So based on the ISD invoice, branches can claim the ITC. Based on the ISD invoice, branches can claim the ITC. And another document is reverse charge invoice. When the concept of reverse charge invoice is required, if the supplier is the unregistered person and the recipient is a registered person, and for them either 93 or 94 is applicable, in those cases, recipient will himself issue an invoice. That self-invoice is known as reverse charge invoice. Because the supplier cannot issue the invoice, being unregistered person. That's why recipient will himself issue an invoice. That particular invoice is known as reverse charge invoice. Supplier is a unregistered person. Recipient is a registered person. And the supply is covered under 93 or 94 RCA. In those cases, being a unregistered person, a supplier cannot issue the invoice. That's why a recipient will himself issue the invoice. That self-invoice is known as reverse charge invoice. On that reverse charge invoice basis, definitely you can claim the ITC. That is the point. So these are the documentary evidences that are required in order to claim the ITC. These are the documentary evidences that are required in order to claim the ITC. What does this mean? So this is the first condition. So what are the documents that are required finally? Tax invoice, debit note, bill of entry, ISD invoice, reverse charge invoice. ISD invoice, reverse charge invoice. So if any of these documents are submitted as evidence, definitely we can claim the ITC. That is the point. Okay, ma'am. And the next one will be, in order to claim the ITC, the second condition will be the goods or services should be received. The goods or services should be received. That means when you received those goods or services, then only you can claim the ITC. If you receive the goods or services, then only you can claim the ITC. Sir, okay. If the goods are received in installments, then how can we claim the ITC? Say for example, I just ordered for 40 computers. Every month you send me 10 computers starting from September month. September, October, November, December. Okay, these 4 months. Every month 10 computers were actually given to me, supplied to me. The question arises here, in which month I can claim the ITC? If the goods are given in lots or installments, then in which way the invoice is issued? will decide in which month we can claim the ITC. In our example, for those 40 computers, a single invoice is issued. In those cases, whenever the last installment is received, we can claim the ITC. But for every lot or every installment is separate. Every lot or every installment is separate. What we can say, invoice is issued. In those cases, you can claim the ITC on proportionate basis. You can claim the ITC on proportionate basis. A single invoice is issued, last installment. Separate invoices are issued on a proportionate basis. Definitely you can claim the ITC. Sir, in the problem, it was not specified whether it was a single invoice or multiple invoices. What is the assumption we can make? A single invoice. And in that case, upon the receipt of last installment only, you can claim the ITC. Sometimes goods are ordered by one person and the goods are delivered to some other person. In those cases, who can claim the ITC? That means, is it possible for the person who ordered to claim the ITC? Say for example, Mr. A actually asked Mr. B to supply the goods to Mr. C. Here, order was given by Mr. A, but the goods are delivered to Mr. C. Practically, in which cases it will happen? Principal to job worker case. Principal will order a third party to supply the goods to the job worker for doing job work on his behalf. Okay. The question arises here, even though the goods are received by the job worker, but still principal can claim the ITC or not? Yes, as per section 19, definitely we can claim the ITC. We means principal can claim the ITC even though goods are not received by him. Law assumes that the goods are deemed to be received by him. When the goods are delivered to any other person on the instruction of the recipient, then they are deemed to be received by the recipient. In our example, principal has given instruction to supply the goods to the job worker. In that case, even though the goods are not received by the principal, but still the principal can claim the ITC. That is the second point. Next point is, let's say for example, recipient has paid the GST to the supplier, but supplier has failed to make the payment to the government. Recipient can claim ITC or not? Recipient paid the GST to the supplier, but supplier made a default in paying the amount to the government. In this case, whether recipient can claim the ITC or not. Understood the question, ma? Recipient paid to the supplier, but supplier failed to make the payment to the government. Is recipient able to claim the ITC or not? What is your answer? Answer is no. In order to claim the ITC as per section 16, tax has to be paid by the supplier to the government. Then only the recipient can claim the ITC. Even though the payment was made by the recipient to the supplier, but still supplier needs to pay the amount to the government, then only your ITC is confirmed. If the supplier fails to make the payment to the government, then the recipient cannot claim the ITC. But even though it was taken, it can be reversed by the department. That is the point. Our next point is, recipient has to file GSTR 3B in order to claim the ITC. Recipient has to file GSTR 3B in order to confirm the ITC. That is also another condition. That is the fourth condition. Recipient has to file GSTR 3B. What is the due date of GSTR 3B? Anybody in the class remembers? Yes, ma'am. What is the due date of filing GSTR 3B? On or before next month, 20th. GSTR 3B is needed to be filed on or before next month, 20th. For example, with respect to September month, GSTR 3B is needed to be filed on or before October 20th. On or before October 20th. So, in order to claim the ITC, recipient has to file the GSTR 3B. These are the four conditions that are needed to be satisfied as per 16 subsection 2 to claim the ITC. What are the four conditions, ma? First one, there should be a documentary evidence. Second one, the goods or services are to be received. Third one, supplier has to make the payment to the government. Fourth one, recipient has to file the GST or 3B. If all these conditions are satisfied, then only the recipient can claim the ITC. Another doubt I am having here. Recipient is having the documentary evidence. Recipient has received the goods also, but did not make the payment to the supplier, being a credit sale. Got the point? Recipient has the documentary evidence. Recipient has the goods received, but he did not make payment to the supplier. The question arises here, recipient can claim the ITC or not? What is your answer? Recipient can claim the ITC or he cannot claim the ITC? Yes, he can claim the ITC. Even though the payment was not made, but still the recipient can claim the ITC because you are having the documentary evidence and you are having goods with you. And remaining two conditions are deemed to be satisfied because it is a credit sale. In credit sale, supplier will not wait until the amount is received from you. First, he will discharge his liability. Because in GSTR1, he has to declare all the sales every month. So, you have given him some 4 months credit time. In that case, he will pay you after 4 months. Till then, you did not pay the GST, then definitely supplier has to pay interest on that. That's why no supplier will wait for the recipient to make the payment practically. But in order to protect the supplier or in order to protect the interest of the revenue, the government has put one condition here. From the date of invoice, within 180 days, you should make the payment to the supplier. From the date of invoice, within 180 days, you should make the payment to the supplier. Sir, if at all the payment was not made within 180 days, in that case, what is the position? Whatever the ITC that was previously taken, it will be reversed along with interest at the rate of 18% per annum. From the date of invoice, within 180 days, we should make the payment to the supplier. If the payment is not made within 180 days, whatever the ITC that was previously taken, it will be reversed along with interest at the rate of 18% per annum. That is the point, ma'am. Okay. Next one is, sir, that is okay. Subsequently, after 1 year, we made the payment to the supplier. After 1 year, we made the payment to the supplier. Again, we can claim it back, or is it is not possible? Yes, ma'am. ITC reversed previously can be reclaimed by the recipient at any point of time after making payment to the supplier. Even it is after some 10 years also, you can claim the ITC. There is no time limit for the amount that was previously reversed. That is the point. And the next point is, let's say I purchased this particular AC here, which is there in the classroom. Let us assume that I purchased it for some 70,000 rupees. Let us assume that for the sake of easy computation, rate of GST 10%. On that 70,000, 10%, 7,000 I paid the GST also. The question arises here, this particular GST, this particular amount, 70,000 AC amount, plus 7,000 GST, I just capitalized it in the books of accounts as 77,000. I'm claiming depreciation also. In that case, am I eligible to claim that 7,000 rupees as ITC again, or is it not possible? 70,000 is the cost of the AC and 7,000 rupees is the GST paid. Including that amount, total 77,000 was capitalized in the books of accounts. And on the total 77,000, we are claiming the depreciation also. In this case, that 7,000 is allowed as ITC or not? Answer is no, ma. This is what section 16 subsection 3 says. As per 16 subsection 3, inclusive of GST, if at all you are claiming the depreciation, that amount is not allowed as ITC. If you are claiming the depreciation only on the 70,000 rupees, excluding GST, You are claiming depreciation only on that 70,000 rupees exclusive of GST. Then that 7,000 will be allowed as ITC. Got the point, ma? Inclusive of GST. If at all on the total value you are claiming the depreciation, no ITC is allowed. You are claiming depreciation exclusive of GST only on the cost of the asset. In those cases, that 7,000 is allowed as ITC. Why, sir? No double benefit is allowed. You can claim that 7,000 rupees as a depreciation under Income Tax Act or as a ITC under GST Act, but you cannot claim the both. So, in order to avoid the double benefit, you can claim either depreciation or you can claim ITC. That choice is yours. But once you claim the depreciation, no ITC. Once you claim the ITC, no depreciation. This point was there under 16 subsection 3. The next point is, sir, what is the cutoff date for claiming the ITC? That means, is there any cutoff date to claim the ITC? Or what is the last date for claiming the ITC for a particular financial year? Anybody in the class can tell me, ma? Is there any cutoff date to claim the ITC for a particular year? Let's say, for example, we are there in the financial year 22-23. For this financial year 22 to 23, what is the cutoff date for claiming the ITC? Or what is the last date for claiming the ITC? The last date for claiming the ITC will be specified under 16 subsection 4. As per section 16 subsection 4, the maximum time limit for claiming the ITC will be next financial year, September month, GSTR 3B filing due date or date of annual return, whichever is earlier. What is the cutoff date for claiming the ITC, ma? Next financial year, September month, GSTR 3B filing due date or date of annual return, whichever is earlier. For example, with respect to 22-23 financial year, what is the cutoff date for claiming the ITC, ma? If the annual return was filed on August 22nd. With respect to financial year 22-23, next financial year, September month, GSTR 3B filing date. What is the GSTR 3B filing date, ma? Just now I told you. No. What is the due date of filing GSTR 3B? Next month, 20th. Just now I discussed it, na? What is the due date of GSTR 3B, ma? Next month, 20th. With respect to September month, what is the due date of GSTR 3B? So we are running in 22-23 financial year. With respect to that, next financial year, September month, GSTR 3B filing date. Next financial year means 23-24. In that financial year, September month, GSTR 3B filing date, that is October 20th. Generally, this date will be fixed now. This October 20th will be compared with date of annual return. Whichever is earlier, that is the cutoff date for claiming the ITC. So, in our example, I told you the annual return was filed on August 22nd. So, what is the cutoff date then? October 20th, 2022 or August 22nd, 2022, whichever is earlier, August 22nd. So, August 27th is the cutoff date. Okay. So, what is the point here? With respect to cutoff date for claiming the ITC, what is the cutoff date for claiming the ITC, ma? Next financial year, September month, GSTR 3B filing date or date of annual return, whichever is earlier, that is the cutoff date for claiming the ITC. On or before that particular date, definitely you can claim the ITC. That is the point. Okay, ma. And next point is here. So, let's say for example, we did not make the payment of GST, ma. Department actually got that information and the raid was conducted at our office. Okay. And during the raid, actually so many transactions were actually found out by that department and they asked us to pay the GST. Let's say they just asked us to pay GST of some 10 lakhs. The question arises here. That 10 lakhs which was paid by the SSC during that GST raid can be claimed as ITC. Previously, I told you that any type of GST, whether it is CGST, SGST, IGST, UDGST, can be claimed as ITC. Na? My doubt is here, the tax that was paid during the, what we call it as raid or investigation, that amount can be claimed as ITC. Answer is no. If at all that particular amount is paid by the order of the demand order that was issued by the department, and that amount was intentionally escaped by you, then it comes under fraud. So any fraud or willful misstatement or suppression of fact was done. By using those items, you suppressed the tax amount and subsequently it was digged by the department. Yes, in those cases, you have the intention to escape from the tax liability, it comes under fraud. If the department comes to know that, and if the department recovers that amount cannot be claimed as ITC. If at all it is allowed as a ITC, then everybody will do it now. Everybody will escape from the tax liability. When the department comes to know, they will pay the amount and will claim the ITC. What is the use then? That's why any amount that was paid by the person by the reason of fraud or willful misstatement, that amount cannot be claimed as ITC. That is the point. And in the same way, generally the procedure for claiming the ITC will be, seller in every month, generally what the seller will do is, every month, the seller or the supplier, whatever the sales that was done by the seller, he will report that amount in GSTR 1 month by giving some invoice details. Say for example, Mr. A is there ma. Mr. A has made 10 supplies. 10 supplies means 10 invoices are there. Each invoice containing 1000 rupees GST. Okay ma? What are the supplies that were made? What are the supplies that were made ma? Total 10 supplies were made by the seller. And for those 10 supplies, 10 invoices were issued, each invoice containing 1000 rupees as GST. What happens is, in every month, the seller will upload all these invoice details in the GSTR 1. Form number GSTR 1 on or before next month 11th. Seller will upload all these invoice related informations in GSTR 1 on or before next month 11th. When the seller uploads this particular data in GSTR 1, it will be auto-populated in buyer's account as purchases in GSTR 2A. And thereby, GSTR 2B will be generated ma. That means your ITC. Generally, in GSTR 2A, it will be reflected as your purchases. And based on that, GSTR 2B generally will reflect your ITC. Okay, got the point. The question arises here. The seller forgot to upload 2 invoices ma. He uploaded only 8 invoices. Instead of 10, seller will uploaded only 10 invoices. Now in GSTR 2A and 2B, how much ITC that will be reflected ma? Only 8,000. The ITC that is relating to the invoices that are uploaded, 8. The question arises here, this 8,000 is 100% allowed. That is okay. But what about the remaining 2,000 rupees? The point is here, in this how much ITC that is allowed? The question is here, sir, what is the amount that is relating to the invoices that are not uploaded ma? 2,000. This 2,000 rupees or in eligible ITC 5%. What is the eligible ITC? That the ITC that was auto-populated in 2A and 2B. What is the amount? 8,000. On that 8,000, 5%. 5% of 8,000 rupees, whichever is lower. So 2,000 rupees or 5% of 8,000 means, I think some 400. So 400 or 2,000, whichever is lower, ma, 400. So 400 plus 8,000. Total in this particular month, you can claim ITC only up to 8,400. Sir, what about that 1,600, sir? In which month the seller uploads those 2 invoices, in that particular month, you can claim ITC of that 1,600. But whereas amendment has also come with respect to that, the amendment is now that 5% is also not allowed. After the amendment, Now that 5% is also not allowed. How many invoices that are uploaded by the supplier in his GSTR1, that many number of IDC invoices will be reflected in, invoice amounts are reflected in your 2A. Based on the 2B will reflect the IDC. Now, how much IDC that can be claimed as per the new amendment? Only 8,000. That 400 is also now not allowed. Total 2,000 is allowed to you only when the seller uploads those two invoices. That is the point here. See this. Full IDC is eligible if the supplier furnishes the details in GSTR1. If the supplier is not furnished the details in GSTR1, at present 5% of eligible IDC can be claimed, but after amendment it is not allowed. This is the topic with respect to section 16 majorly. Now we need to see section 17. Okay, ma'am, after the completion of section 16, now we need to see section 17 here. With respect to section 17, ma'am, it deals with the topic whether ITC is allowed or not. If at all those capital goods, inputs and input services are used for non-business purpose, and if at all in the business purpose, to which type of supplies it should be used in order to claim the ITC. All these points will be there under section 17, which deals with apportionment of ITC or allocation or division of ITC. So, if at all inward supplies used by the registered person, 100% for business purpose, then ITC is allowed. 100% for non-business purpose, no ITC is allowed. But whereas if at all in business purpose, it should be used for taxable supplies only. If at all it is used for providing non-taxable supplies, in those cases, definitely ITC is not allowed to you. So, it should be for business purpose, and in that business purpose, it should be for taxable supplies only. Then only we can claim the ITC. But whereas if the goods, that means capital goods or inputs or input services are used for providing either for non-business purpose or for exempted supplies, we cannot claim the ITC on those type of purposes. Let us assume that MM has purchased, Masterminds has purchased 10 ACs. In those 10 ACs, 7 ACs are used for business purpose and 3 ACs are installed at the residence. In that case, on how many ACs we can claim the ITC? On these 3 ACs, no ITC is allowed because it was used for non-business purpose. On the 7 ACs, definitely ITC is allowed because it was used for business purpose. I am modifying this particular example once again. In those 7 ACs, 4 ACs are used by MM for CA college and 3 ACs are used for, let us assume that MM is also running a school also. Let us assume that MM is running a school also. In that case, in those 7 ACs which were used for business purpose, 4 ACs are used by MM for CA coaching and 3 ACs are used by MM for school purpose. In that case, on how many ACs we can claim the ITC? How many ACs we can claim the ITC, ma'am? Only on 4 ACs which are used for CA coaching, ITC is allowed because it was used for taxable supply. Schools comes under exempted supply. In chapter number 4, we discussed that. In chapter number 4, schools comes under educational institutions. Any services provided to them, definitely it is a exempted supply. In that case, you cannot claim the ITC. So with respect to school, then definitely it is a exempted supply. If at all it is exempted supply, no ITC is allowed to you. This is what about This is 17 subsection 1 ma. This is known as 17 subsection 1 and this one is known as 17 subsection 2. What does 17.1 says ma? If the goods or services are used for business purpose, IDC is allowed. If the goods or services are used for personal purpose, no IDC is allowed. And 17 subsection 2 says, if the goods or services are used for taxable supply, IDC is allowed. If the goods or services are used for providing exempted supply, no IDC is allowed. This is 17.1 and 17.2, what we have to remember. Okay, ma'am. And whereas another section which is important from the examination point of view is 17 subsection 4. 17.3 is not that much important from examination point of view. You can ignore it. And with respect to 17 subsection 4, this point is exclusively reserved for banks, NBFCs or financial institutions. What does 17 subsection 4 says? With respect to bank, NBFC or financial institution, definitely we are having an alternative option of availing flat 50% of the eligible IDC and the rest lapses. That is the point, ma. And if we want to discuss that point in detail, there are two options that are there to the banks, ma. This point is exclusively for bank, financial institutions and NBFC. With respect to them, there are two options that are there, ma. One is they can follow 17 subsection 2 or they can follow 17 subsection 4. If the bank is able to segregate, if the bank is able to separate or segregate which ones are used for taxable supplies and which ones are used for providing exempted supplies. That means if the bank is able to maintain separate records for which items, which goods or services are used for providing taxable supplies, which goods or services are used for exempted supplies. If the bank is able to segregate, in those cases, happily it can follow 17 subsection 2. In proportion to taxable supplies, it can claim the IDC. And in respect of exempted supplies, no IDC is allowed to you. That means when this 17.2 option will be used by the bank, ma, if the bank is able to maintain separate books of accounts or separate records, which goods or services are used for providing taxable supplies, which goods or services are used for providing exempted supplies, then as per section 17 subsection 2, so the goods or services that were used for providing taxable supplies, you can claim the IDC. And in relation to exempted supplies, no IDC is allowed to you. But if the banker is unable to segregate, if the banker is unable to maintain separate records, in those cases, there is another option for you. That another option is 17 subsection 4. If the banker is unable to maintain the separate records, in those cases, what is the position, ma? He can happily follow 17 subsection 4. Another option is there for him. What is that another option here? What is the total IDC that is there? In the total IDC, you can claim 50% as IDC, ma, and the balance 50% will lapse. Whatever the total input tax that was there, in that input tax, in that eligible IDC, you can claim 50% as IDC and the balance 50% will be ignored. This is option 2 for you. When the banker will follow this option 2, 17 subsection 4, if the banker is unable to maintain separate records, in those cases, there is another option for him as per 17 subsection 4. Whatever the available IDC, in that, the banker can claim 50% of the IDC, and the balance 50% shall lapse. That is the point. But even though he is following option 2, that is 17 subsection 4, in one case 100% IDC is allowed. This is an exception to the rule of 17.4. If at all you are following 17 subsection 4, you can claim IDC only up to 50% and the balance 50% will lapse. But whereas for this point which is specified under 17 subsection 4, there is an exception. The exception is the transactions between branches of banks, which amounts to deemed supply, then GST paid on deemed supplies will be allowed 100% as ITC. What is the point here, ma? So, if at all you are following 17 subsection 4, generally what is the rule, ma? What is the available IDC? In that you can claim 50% of the IDC, ma, and balance 50% shall lapse. But there is exception to that point. What is the exception to that point, ma? Any transfers that happens between the branches, already you know that when you are having the separate registration, even though you are part of same organization, you will be treated as deemed to be distinct person. Any stock transfers or any transfers that happens between them, definitely it is a deemed supply and you are liable to pay the GST. So based on that, say State Bank of India Guntur branch is providing service to State Bank of India Chennai branch. In that case, definitely it is a deemed supply because both are there in different states. In those cases, whatever the IDC that was paid by Chennai branch being a recipient, that amount can be claimed by Chennai branch as 100% ITC. So, any transaction between the branches of the banks which are there in different states, which amounts to deemed supply, then the GST that was paid on these deemed supplies will be allowed as 100% ITC. Will be allowed as 100% ITC. That is the point you should remember with respect to 17.4 ma. See this ITC from distinct persons, 100% is allowed. Non-business purpose, not allowed completely. Blocked credit, that is also not allowed completely. We will discuss this point later on, 17.5. And next point is, you need to remember what is the difference between zero-rated supply and exempted supply. What is the difference between zero-rated supply and exempted supply? Anybody in the class can tell me? What is the difference between zero-rated supply and exempted supply? Generally, first we will discuss about exempted supply. Generally, exempted supply covers 3 points. Exempted supply covers 3 points. One is nil-rated supply. Second one is 100% exempted supply. And third one is non-taxable supply. Nil-rated supply, 100% exempted supply and non-taxable supply. All these 3 points will come under the word exempted supplies. What is meant by nil-rated supply? Nil-rated supply means levy at the rate of 0%. In the act itself, the rate specified is 0. It is known as nil-rated supply. Example, flowers with salt, like that. Some items are there in our GST Act where the rate of tax specified itself is 0. Those type of supplies are known as nil-rated supplies. Second one, 100% exempted supplies. That means levy will be done at a specified rate, but no collection will be there. 100% exempted supply means levy at a specified rate, but no collection will be there. Levy at a specified rate, but no collection will be there. Those type of supplies are known as 100% exempted supplies. Example, agriculture. Agriculture, there will be a rate that will be specified under the act. Let's say some 5%, 10%, 20% like that. There will be a tax rate. but the government will not collect that. That type of supplies are known as 100% exempted supplies. And the third category is non-taxable supply, in that no levy will be there at all. Non-taxable supply means no levy at all. It is known as non-taxable supply. All the three categories of supplies will come under the word exempted supplies. So, what are the points that are covered under exempted supplies, ma? Nil rated supply, 100% exempted supply, and non-taxable supply. Nil rated supply means levy at the rate of 0%. 100% exempted supply means levy at a specified rate but no collection. Non-taxable supply means no levy at all. All these three things will come under exempted supplies. On these exempted supplies, no ITC is allowed to you. No ITC is allowed. Now the next word we need to discuss is what is meant by the word zero rated supply. So what is meant by the word zero rated supply, ma'am? Zero rated supply. Zero rated supply generally covers two items, ma'am. Zero rated supply generally covers two items. One is exports and second one is deemed exports. Zero rated supply covers one is exports and second one is deemed exports. If at all it is a zero rated supply, it is a special category that was created in order to encourage the exports, ma. In order to encourage the exports and deemed exports. What is meant by the word deemed exports, ma? Supplies to special economic zones like that. Specialist says any goods are going to be supplied to special economic zones, they are deemed to be exports. So exports and deemed exports. Exports and deemed exports both will be covered under the word zero rated supply. Even though there is no need to pay any tax on these exports and deemed exports, but still they are deemed to be taxable supplies, we can claim ITC on these zero rated supplies. That is important. Zero rated supplies, even though no tax is payable, still deemed to be taxable supplies, and we can claim ITC. ITC is allowed. As a student, you may get it out here. Sir, if at all it is a zero rated supply, there is no need to pay any output tax, na? Then what is the advantage of giving ITC to those type of exporters? What the benefit the exporter will get here? Whatever the ITC that was allowed to him, it will be refunded to him later on. In order to encourage the exports, the concept of zero rated supply was created. Even though there is no output tax payable, but still they are deemed to be taxable supplies. Whatever the input taxes you paid on purchases, it will be allowed as ITC in case of zero rated supplies. But practically there is no output tax payable. Therefore, the exporter will not be able to set it off. That's why as per section 54, definitely you can claim refund of those amounts later on by the exporter. That is a point you should need to remember, ma. Okay. And the next point is, in the previous class, we just discussed regarding how much ITC that will be allowed to you based on GSTR 1. Do you remember that point, ma? How many number of invoices that are uploaded by the supplier in his GSTR 1? All those details will be auto-populated in recipient account in GSTR 2A and 2B. How much amount that was reflected in 2A and 2B, up to that amount only 100% ITC is allowed. And whereas with respect to rest of the invoices that were not uploaded, how much ITC you can claim? At present, before amendment, how much ITC we can claim? 5% of eligible ITC. But whereas after amendment, you cannot claim any ITC at all. But whereas some invoices are not needed to be uploaded by the supplier. With respect to them, definitely you can claim 100% IDC. These are the things. Reverse charge invoices. Based on reverse charge invoice, you can claim 100% IDC even though those details are not reflected in GSTR1. In the same way, with respect to IGST paid on imports, and in the same way, ISD invoice, with respect to these three items, even though they are not uploaded by the supplier in the GSTR1, but still, recipient can claim 100% IDC based on these documents. Reverse charge invoices, IGST that was paid on imports, and ISD invoice. Why, sir? Why IDC is allowed on these items even though they are not reflected in GSTR1? Because, first point, IGST on imports. Where is the seller? Outside India. So, he is not under any obligation to file GSTR1. With respect to import, where is the seller? Outside India. He does not have any obligation to file GSTR1. So, he will not file GSTR1 at all. But how the people will get the IDC on the imports that IGST paid? That's why practically it is not possible for the seller who is there in outside India to file the GSTR1. That's why IGST that was paid on imports will be allowed as 100% IDC if the relevant documents are there, like bill of entry, like that. And a reverse charge invoice. When reverse charge invoice will be issued practically, I told you now. When the supplier is an unregistered person, recipient is a registered person, and the supplies are covered under 9.3 or 9.4, in those cases, recipient will himself issue a invoice. That invoice is known as reverse charge invoice. Here, supplier is a unregistered person. When the supplier is an unregistered person, then automatically what is the position? He will not file GSTR1. That's why in those reverse charge invoices also will not be uploaded in GSTR1 practically. So you can claim 100% IDC even though it was not auto-populated in 2A and 2B. Next one, ISD invoice. What is meant by this ISD invoice, ma'am? Yeah, these are the documents that are issued by the ISD. Whatever the IDC that was accumulated at the head office, in order to distribute that particular IDC to the branches, the document that was used is known as ISD invoice. Practically, ISD invoice is an internal organizational document. Okay, so here MM head office is not supplying any services to the branches. So MM will not file GSTR1. So these details will not be there in GSTR1 because it is an internal circulated document. That's why on these ISD invoices also, practically GSTR1 will not be filed for ISD invoices. Therefore, we can claim 100% IDC even though they are not auto-populated in 2A and 2B. These are the points you should remember. And the next point is, sir, what is the manner of utilization of IDC? How the IDC will be utilized? How the IDC will be utilized, ma'am? What is the manner of utilizing the IDC? The manner of utilizing the IDC will be, say in the given problem, CGST IDC, SGST IDC, and IGST IDC, all the three are there. First, we should start the problem with IGST IDC. This IGST IDC, first it should be used for IGST. After that, still surplus is there, it can be used to pay any GST. IGST IDC, first it should be used for IGST. Still surplus IGST IDC was there, it can be used to pay any GST like CGST, SGST, UTGST, like that. Okay. And second one is, if at all it is CGST IDC, it should be first used for CGST, and any surplus is there, it can be used to pay IGST only. And third one is, you are having SGST IDC. This SGST IDC first will be used for SGST. Any surplus SGST IDC was there, it can be used to pay IGST. This is the manner of utilization of IDC you need to remember. Okay, ma. IGST IDC first for IGST, subsequently for any other type of GST. CGST IDC, first it will be used for CGST, after that IGST. SGST or UTGST IDC, first it will be used for SGST or UTGST and subsequently for IGST. No cross-sectional credit is allowed between CGST and SGST as well as CGST and UTGST also. That means CGST IDC cannot be used to pay SGST and SGST IDC cannot be used to pay CGST. Same point will be applicable to UTGST also. UTGST IDC cannot be used to pay CGST and CGST IDC cannot be used to pay UTGST. That is the point. Okay. This is a manner of utilization. And after that we need to see 17 subsection 5 blocked credits. That means just now we discussed under 17 subsection 1 and 17 subsection 2 that if the goods or services are used for business purpose and for taxable supply, definitely we can claim the IDC. But in case of the items that are specified under 17 subsection 5, even though they are used for business purpose, even though they are used for taxable supplies, but still we cannot claim the IDC. Those are known as blocked credits or negative list of IDC, which is specified in 17 subsection 5. Sir, what does 17 subsection 5 says here? The first point you need to remember is here with respect to 17 subsection 5 motor vehicles. Motor vehicles and their repairs and services we need to see first. With respect to that, here with respect to that point motor vehicles, with respect to motor vehicles that is divided into 2 points. One is motor vehicles that were used for transportation of goods, motor vehicles that were used for transportation of persons. Motor vehicles can be divided into 2 types that can be used for transportation of the goods and that can be used for transportation of persons. With respect to the motor vehicles that were used for transportation of the goods, 100% IDC is allowed. But whereas with respect to transportation of the persons, in 3 cases IDC is allowed, rest of the cases IDC is not allowed. So with respect to that, only in 3 cases definitely IDC is allowed, and whereas rest of the cases IDC is not allowed. What are the 3 cases where IDC is allowed in relation to transportation of persons? First one, when inward supply, outward supply is the same. And second one, they are in the business of transportation of passengers. Third one, driving school. In these 3 cases, 100% IDC is allowed. And whereas in others, IDC is not allowed. Got the point, ma? So with respect to motor vehicles which are used for transportation of the goods like lorries, trucks, etc., on them 100% IDC is allowed. Whereas with respect to transportation of persons, only in 3 cases IDC is allowed and rest of the cases IDC is not allowed. What are the cases where IDC is allowed? When inward supply, outward supply is the same. Generally here, another point also you should remember, with respect to transportation of the persons, the point I told you will be applicable only if the seating capacity is less than or equal to 30. If the seating capacity is less than or equal to 13, then only this point is applicable. If the seating capacity is more than 13, then even though it is for transportation of persons, 100% IDC is allowed. Okay, if at all it is for transportation of the persons, then we can divide the concept into 2 types. What about the seating capacity? If the seating capacity is more than 13, 100% IDC is allowed, including the driver, what we are talking about. the seating capacity will be inclusive of driver. It is more than 13, then even though it was used for transportation of persons, 100% IDC is allowed. And if the seating capacity is less than or equal to 13, in 3 cases IDC is allowed and rest of the cases IDC is not allowed. So what are the 3 cases where IDC is allowed even though the seating capacity is less than or equal to 13? In that, the first one will be inward supply, outward supply is the same. Sir, that means the best example for that is car showroom. What is the inward supply for car showroom? Car. What is the outward supply for car showroom? Car. In those cases, IDC is allowed even though the seating capacity is less than or equal to 13. Second case, they are in the business of transportation of passengers. Best example for that is car travel agency. For them, the car is essential one in order to run the business. Therefore, even though the seating capacity is less than or equal to 13, definitely IDC is allowed. If at all they are in the business of transportation of passengers. I told you persons above. Here I am talking about passengers. You are in the business of transportation of passengers. If at all you are transporting employees in the car, then it is not allowed. IDC. We are using that particular motor vehicle for the transportation of passengers, then only IDC is allowed. Next one, driving school. In order to learn driving, definitely it is an essential one. Car should be physically there. Then only we can learn it perfectly. In all these 3 cases, even though the seating capacity is less than or equal to 13, IDC is allowed. Whereas rest of the cases, IDC is not allowed. Same point will be applicable to vessel and aircraft also. With respect to vessel or aircraft, it is divided into 2 types. With respect to vessel or aircraft, in 4 cases IDC is allowed and rest of the cases no IDC. First one, inward supply, outward supply is the same. Second one, they are in the business of transportation of goods. And third one, they are in the business of transportation of passengers. And fourth one, either flying school or navigation school. In these 4 cases, 100% ITC allowed. In others, no ITC is allowed. That is a point you should remember. With respect to vessels and aircrafts, in 4 cases ITC is allowed, whereas rest of the cases ITC is not allowed. Like inward supply, outward supply is the same. They are in the business of transportation of the goods. They are in the business of transportation of passengers. And with respect to flying school, with respect to vessel navigation school. In these 4 cases, 100% IDC is allowed, and whereas rest of the cases IDC is not allowed. That is the point. This is with respect to motor vehicles and vessels and aircrafts. The next point is here, sir, with respect to motor vehicles, sometimes repairs and maintenance is needed. Insurance we will take on the motor vehicles. On those insurance, repairs, maintenance services, IDC is allowed or not? That was also another question. So with respect to, see this, servicing, repairs and maintenance. In our language, what we can say is, sir, SIR. S means servicing, I means insurance, R means repairs. With respect to this SIR, servicing, insurance and repairs. Sir, on these services, IDC is allowed or not? It will depend upon 2 things, ma'am. Okay. If on motor vehicle, ITC is allowed, then on SIR also ITC allowed. If on motor vehicle ITC not allowed, then on sir also ITC not allowed. What is the point, ma? If on the motor vehicle ITC is allowed, then on servicing, insurance and repair ITC is allowed. If on the motor vehicle ITC is not allowed at all, then with respect to that motor vehicle, servicing, insurance and repairs, on them also ITC is not allowed. Simply, if on the motor vehicle ITC is allowed, then on these services also ITC is allowed. If on the motor vehicle ITC is not allowed, then on these services also ITC is not allowed. That is the point. Okay, ma. And the next point is with respect to food and beverages, ma. With respect to food and beverages, outdoor catering like that, food and beverages, outdoor catering, beauty treatment, cosmetic and plastic surgery, generally ITC is not allowed on these cases, ma, except where inward supply, outward supply is the same, then ITC is allowed. What does this mean? Let's say Masterminds actually taken you on a holiday trip. For that, Masterminds has given catering service to Hotel Sinduri, which is near to Masterminds. The question arises here, what is the catering amount that Masterminds pays? On that, is liable to pay the GST. So that GST paid to the Hotel Sinduri, can it be claimed as ITC by Masterminds? Because it was used for students, for business purpose. Is it possible for to claim the ITC on the catering service, ma'am? No. Because on food and beverages, ITC is generally not allowed. Whether it is food and beverages, outdoor catering, ITC is not allowed. Exception, inward supply, outward supply is the same. Sir, any example for that? Let's say Hotel Sinduri is there, which is conducting a food festival. For that food festival, it purchased so many items from different parts of the country or different parts of AP. Let's say with respect to Andhra Pradesh, laddus are famous in Bandar, and whereas non-veg pickles are famous in Godavari districts, and whereas one famous name is there for paper sweet, Athrayapuram. Athrayapuram is the famous place for paper sweets. Like that, every place will have some uniqueness, ma. So Hotel Sinduri has gathered all these food items from those different places. The question arises here on these items, Hotel Sinduri can claim the ITC. Yes, ma. Because what is the inward supply of Hotel Sinduri? Food. What is the outward supply of Hotel Sinduri? Food. In those cases, ITC is allowed or not allowed, ma? Definitely ITC is allowed. Whereas rest of the cases, ITC not allowed. Same point will be applicable to beauty treatment, cosmetic and plastic surgery, health services also. With respect to them also, generally ITC not allowed. But whereas inward supply, outward supply is the same, then ITC is allowed. Next point is here. With respect to renting of motor vehicle, insurance, life insurance and health insurance, ma. With respect to renting of motor vehicle, life insurance and health insurance, where inward supply, outward supply is the same, ITC is allowed. Along with that, if at all it is a statutory obligation of the employer, then also ITC is allowed. So renting of motor vehicle, generally ITC is not allowed. But if at all it is a statutory obligation, definitely we can claim the ITC. That means, any example, let's say for example, actually I just went to Wonderla in Hyderabad, ma. When I'm returning almost at evening 7:30, practically we call it as night. Okay, at that time when I'm returning from Wonderla, it was there on the Sagar route, ma. When I'm returning, there was a TCS big office is there, ma, TCS. But at the time of 7:30 itself, there is no public transportation available there. But there will be some employees who is working in odd timings now there in that particular place, like some 10, 11, 12, their shift will close. In those shifts, definitely there will be lady employees also. So the government made it mandatory that to drop them at their home. In that case, is it the statutory obligation of the employer or not, ma? Yes, in those cases, on the renting of motor vehicle, ITC is allowed. That is the one example. Like that. Same point will be applicable to insurance also. If the government made it mandatory for the employer to take the insurance, then ITC is allowed. If at all it is not a statutory obligation, there is no need to, ITC is not allowed. That is the point. Same point will be applicable to club membership fee, health and fitness center, leave travel benefits to employees, all these points, only ITC is allowed if at all it is a statutory obligation. And same point will be applicable to works contract also. With respect to works contract, what is meant by the word works contract, ma? Construction of immovable property is known as works contract. That's why on works contract no ITC is allowed, but there are 3 exceptions with respect to that. What is meant by the word works contract, ma? Construction of immovable property is known as works contract. With respect to that, because it is a immovable property, therefore no ITC is allowed. But for that, 3 exceptions are there. First one, if that immovable property is a plant and machinery, then ITC is allowed. The constructed immovable property is a plant and machinery, then ITC is allowed. In the same way, inward supply, outward supply is the same, then also ITC is allowed. Let's say, Guntur to Vijayawada road construction contract was allotted to me. I just given as a subcontract from Mangalagiri to Vijayawada to some other person. Here, what is my outward supply? Construction of the road, which is a works contract. What is my subcontract inward supply? It is also construction of the road, which is the inward supply. So, when outward supply and inward supply is the same, definitely I can claim the ITC. And works contract, which is not capitalized in the books of accounts. Simply, if at all it is debited to P&L account, then definitely it comes under inputs, you can claim the ITC. And last but not the least, composition tax is not allowed as ITC. That means whatever the tax, because it was not collected from the recipient, therefore recipient cannot claim the composition tax as ITC. In the same way, NRDP. With respect to NRDP, what is the full form of NRDP? Non-resident taxable person. What is meant by that word? The foreigner who is making occasional supplies in India is known as NRDP. So NRDP, whatever the local purchases he will make on them, he cannot claim the ITC. Keep the word I used, ma. Whatever the local purchases he makes on them, he cannot claim the ITC. That means whatever the items he brings from foreign, on those items definitely IGST will be paid. That IGST can be claimed as ITC. So whatever the local purchases that was made by the NRDP, on them we cannot claim the ITC. The next one, if the goods are used for personal use, no ITC. In the same way, goods lost, stolen, destroyed or given as free samples, on them also no ITC is allowed. If at all it was taken, the amount is needed to be reversed. And the tax that was paid under 74, 129, 130, generally will comes under fraud. If at all any tax that was paid under fraud, willful misrepresentation like that, those amounts are also not allowed as ITC. These are the points we should remember with respect to 17 subsection 5. There ends section 17, ma. Okay, ma. After completion of section 17, we need to see section 18, ma. In that section 18, we need to start with 18 subsection 1. With respect to 18 subsection 1, it deals with entitlement of ITC on special circumstances. In that, 4 circumstances are covered here, ma. First one is normal registration. Second one is voluntary registration. And third one is composition scheme to normal scheme. And fourth one is exempted supply to taxable supply. These are the 4 cases that are covered under 18 subsection 1, ma. So what are the 4 cases that are covered under? So what are the 4 cases that are covered under 18 subsection 1, ma? Normal registration, voluntary registration, composition scheme to normal scheme, and exempted supply to taxable supply. So with respect to normal registration, when the person is liable for registration under GST and has been applied for registration within 30 days, and RC has been granted to him. In those cases, as per 18 subsection 1, IDC is allowed to them. Sir, when the person is liable for registration much generally, either as per section 22 or as per section 24, the person will be liable to get the registration. When the person is liable for registration, from that particular date, if you apply for RC within 30 days and RC was granted to you, the date when the RC was granted to you, from that particular date, you are liable to pay the output tax. When you are liable to pay the output tax, definitely for you IDC should be given. For that purpose, the date when the RC was granted to you, on the preceding day, whatever the closing stock of raw materials, semi-finished goods and finished goods will be there, in proportion to that, definitely you can claim the ITC. The date when the RC was granted to you, on the preceding day, whatever the closing stock of raw materials, semi-finished goods, finished goods that are there, in that particular proportion, you can claim the ITC. That is the first point. Second one, voluntary registration. What is meant by the word voluntary registration, ma? Here the person is not liable for registration, but he applied for RC and got the registration also. Then those type of persons are known as voluntary registered persons. The persons who are voluntarily registered will be treated at par with normal registered persons. That means the voluntary registered person is also liable to pay the GST even though his threshold limit was not exhausted. Just like a normal registered person, how he is liable to pay the output tax, in the same way, a voluntary registered person is also liable to pay the GST. When the voluntary registered person is liable to pay the GST, he should be given ITC also, na? That's why a voluntary registered person will also get the ITC, ma? The date when he got the RC, on the preceding day, whatever the closing stock of raw materials, semi-finished goods and finished goods that were there, in that particular portion, he can claim the ITC. So, whether he is a normal registered person or a voluntary registered person, in both cases, the date when the persons were allotted the registration certificate, on the preceding day, whatever the closing stock of raw materials, semi-finished goods and finished goods that were there, in that particular proportion, you can claim the ITC. And the next point is here, composition scheme to normal scheme. Previously, the person pays tax under composition levy under GST and subsequently opts to pay tax under section 9. Previously, we are there under composition scheme. Now we shifted to normal scheme. When you are under composition scheme, you cannot claim the ITC because you are paying very low rate of tax. But when you are shifted to the normal scheme, you are liable to pay the GST at normal rates. Therefore, again you will become eligible to claim the ITC. So the date when this particular conversion happens from composition scheme to normal scheme, on the preceding day, whatever the closing stock of raw materials, semi-finished goods and finished goods that were there, in that particular proportion, we can claim the ITC. Along with that, even on capital goods also, we can claim the ITC. If you observe in the first two cases, normal registration and voluntary registration, there is no ITC on capital goods. But whereas, with respect to last two cases, composition scheme to normal scheme or exempted supply to taxable supply, along with the inputs, even on capital goods also, we can claim the ITC. And what is the fourth case, ma? Exempted supplies made by the registered person now becomes taxable. That means exempted supply now will become a taxable supply. Previously, it was exempted supply. That's why no ITC is allowed on that. But now that exempted supply was converted into taxable supply, therefore definitely we can claim the ITC on it. Along with inputs, even on capital goods also, we can claim the ITC. Sir, on capital goods, how the IDC is allowed to them, sir? From the date of invoice per quarter or part thereof, 5% is needed to be reduced, and what is the remaining amount that will be there? On that, the registered person or the concerned person can claim the ITC. On capital goods, from the date of invoice per quarter or part thereof, 5% per quarter or part thereof is reduced, and the remaining amount is allowed as ITC. So, any example? Let us assume that we are shifting from composition scheme to normal scheme. We are shifting from composition scheme to normal scheme. And let's say while we are there under composition scheme, we purchased one plant and machinery for 1 lakh rupees. Rate of GST is 18%. We are there in that composition scheme for 1 year, 6 months. Now we just shifted to normal scheme. Now the question is, how much ITC we can claim? We are there under composition scheme for 1 year, 6 months. When we are there under composition scheme, we purchased a plant and machinery for 1 lakh rupees. The rate of GST is 18%. In that case, when we shifted to this normal scheme after 1 year, 6 months, how much ITC we can claim? That was the question. How much ITC we can claim? From the date of invoice per quarter or part thereof, 5% is to be reduced from the tax paid, and the remaining amount will be allowed as ITC. Say for example, what is input tax paid ma? What is the plant and machinery value? 1 lakh. And what is the rate of GST ma? 18%. So, input tax paid is 18,000 ma. On that 18,000, per quarter or part thereof, 5% is needed to be reduced. Here, how many months are there? 1 year, 6 months. So, 1 year means 4 quarters, 6 months means 2 quarters. In total, it will be 6 quarters. So, 6 into per quarter 5%, that is 30% is needed to be reduced. On 18,000, 30% means 5,400. After reducing it, how much amount we will get? 12,600. So on this 12,600, definitely we can claim the ITC. So with respect to capital goods, how much ITC we can claim? From the date of invoice, what is the input tax that was paid? From that amount, per quarter or part thereof, 5% is needed to be reduced. And what is the remaining amount that will be there? On that we can claim the ITC. In our example, the plant and machinery value is 1 lakh ma. Rate of GST is 18%. After there in the composition scheme for 1 year, 6 months, now we shifted to this normal scheme. In that case, how much ITC that can be claimed? What is the input tax that was paid ma? 1 lakh rupees into 18%, it will be 18,000. On that, per quarter or part thereof, 5% is needed to be reduced. 1 year, 6 months means 6 quarters. 6 into 5%, it will be 30%. So, in 18,000, 30% means 5,400. After reducing it, the remaining amount will be 12,600 ma. On the 12,600, definitely we can claim the ITC. Okay. And this is a point we should remember ma here. So, this is 18 subsection 1. In these 4 circumstances, normal registration, voluntary registration, you can claim ITC on the inputs which are there on the preceding date to the RC date, and whereas with respect to composition scheme to normal scheme and exempted supply to taxable supply, along with inputs, even on capital goods also you can claim the ITC by following the procedure what we have discussed. And next one is 18 subsection 2, which deals with time limit for availing ITC on inputs. Time limit for availing ITC on inputs ma. Under 18 subsection 1. What is the point here? Generally, just now we discussed that as per 18 subsection 1, on the preceding day, whatever the closing stock of raw materials that were there, on them we can claim the ITC. But some people may misutilize this facility. That means they will show as the closing stock whatever the items that were purchased some 5 years back, 3 years back, 10 years back in order to claim the more ITC. In order to put a check on that particular point, 18 subsection 2 was created. As per 18 subsection 2, whatever the closing stock of raw materials that were there, their date of invoice should be within 1 year. Date of invoice should be within preceding 1 year only from the date of RC, then only you will get the ITC. If any earlier date, ITC is not allowed to you. I just show you that point on the screen itself. You can observe here, what is the date the person gets the RC, ma? 1st August 2018. If the person gets the RC on 1st August 2018, then on the closing stock of raw materials, in order to claim the ITC, the date of invoice should be in between 1 year, in the preceding 1 year. That means you got the RC on 1st August 2018, backward 1 year, means 2nd August 2017 to 1st August 2018. If the invoice date falls within this particular 1 year, on that ITC, on that import, ITC is available. Got the point, ma? When you got the RC from that particular date in the preceding 1 year, if the date of invoice falls, then only you can claim ITC on that closing stock of imports. If any earlier date, that means beyond, in our example, 2nd August 2017, ITC is not available. But this restriction is only applicable for claiming ITC as per 18 subsection 1. In rest of the cases, this 1 year restriction from the date of invoice will not be applicable. That is the point you should remember. And the next point will be 18 subsection 3. 18 subsection 3 generally deals with procedure for transfer of ITC in case of reconstitution. That means, let's say for example, we are running a partnership firm. Now it was converted into company, or company was converted into LLP, or sole trading was converted into partnership firm, or there can be amalgamation, or there can be demerger, like that. In all these cases, reconstitution will happen. Let us assume that company was converted into LLP. The question arises here. What is the ITC balance that is there with the company? Can it be transferred to the LLP now or not? That was the question. Answer is yes, if at all that person follows the procedure that was specified in 18 subsection 3. Sir, what is the procedure that was specified in 18 subsection 3? First one, the transferor has to furnish the details of the change in the constitution in form number ITC 02 along with a request to transfer the ITC. That means the transferor of the business shall furnish the details in form number ITC 02 along with the request to transfer the ITC. Okay. And along with that, he should submit a certificate from a CA or a cost accountant certifying that change in the constitution has been done with the specific provisions for the transfer of liabilities also. In simple terms, not only the assets but also 100% liabilities are transferred. It should be certified by a CA or a cost accountant. Along with the GST ITC 02 form, a CA or a cost accountant should certify that not only assets but also 100% liabilities are transferred. If these two documents are uploaded by the transferor on the GST common portal and transferee has to accept the details that are furnished by the transferor, then whatever the ITC that was there in this transferor account, now it will be shifted to transferee. So, as per 18 subsection 3, what is the procedure? First, the transferor has to upload the document ITC 02 along with the request to transfer the ITC and a CA or a cost accountant certificate that not only assets but also 100% liabilities are transferred. These two documents which are uploaded, after that the transferee has to accept the details that are furnished by the transferor on the common portal. then automatically the IDC that was there in the transferor account, now it will be shifted to transferee. This is 18 subsection 3 ma'am. And the next point is 18 subsection 4, IDC to be reversed in special circumstances. IDC to be reversed in special circumstances. If you remember 18 subsection 1, what are the last two cases that are covered under 18 subsection 1? Just now we discussed it in this video only. What are the last two cases we discussed it in 18 subsection 1? Composition scheme to normal scheme, exempted supply to taxable supply. These are the last two cases what we have discussed in 18 subsection 1. Reverse those two. Normal scheme to composition scheme, taxable supply to exempted supply. In those cases, 18.4 will come into C. So 18.4, IDC to be reversed in special circumstances. If the registered person opts for composition scheme, that means previously he is there in normal scheme, now he is shifting to composition scheme, or his supplies becomes exempted. Previously they are taxable supplies, now it was shifted to exempted supply. In those cases, when these events happens on the preceding day, whatever the goods that were held in stock, with respect to them, proportionate IDC is needed to be reversed, and any surplus IDC that was there, it will be lapsed. Remaining IDC that is there in the electronic credit ledger will lapse. That is a point we should remember. In which cases 18.4 will be applicable, ma'am? When you are actually shifting from normal scheme to composition scheme, or your taxable supplies are going to be converted into exempted supplies. In those cases, the date when that particular event happens on the preceding day, whatever the closing stock of raw materials, semi-finished goods and finished goods that were there, in that particular proportion, definitely you need to reverse the IDC. And after that also, any surplus IDC was there, automatically it will be lapsed. But you need to remember, with respect to capital goods, one special procedure will be followed in 18 subsection 4 for the reversal of IDC. We will see that now. So, with respect to 18 subsection 4, reversal of IDC in relation to capital goods. Okay, we are discussing that particular point. GST law assumes that estimated life of a capital good is 5 years. GST law assumes that the estimated life of a capital good is 5 years. In terms of months, it will be 60 months. Now, what the GST law says is, as per 18 subsection 4, how many number of months it was unutilized for the taxable supplies. In that particular proportion, IDC is needed to be reversed. Say for example, we are there, let's say for example, we purchase a plant and machinery while we are making some taxable supplies, and after 1 year, 7 months, now our taxable supplies has become exempted supplies. In that case, how much IDC that is needed to be reversed? For the sake of easy computation, plant and machinery value 1 lakh and rate of GST 18%. So, one plant and machinery was purchased for 1 lakh rupees and rate of GST is 18%. After using it for 1 year 7 months for taxable supplies, now his supplies becomes exempted. The question arises here, how much IDC that is needed to be reversed? So, what the GST law assumes, the life of the capital good will be 5 years, in terms of months, 60 months. For those 60 months, if at all it was used for taxable supplies, that is okay. But any shortfall is there, then in that particular proportion, IDC is needed to be reversed. We used it for taxable supply for 1 year 7 months, means 1 year 7 months means 12 plus 7. Total it will be 19 months. Yes, now. Here per quarter 5% rule is not applicable. In proportion to months, we need to reverse that. That's why I'm saying that. While claiming the ITC as per 18 subsection 1, per quarter or part thereof concept will be applicable 5%. Here we are discussing about not the claiming. 18 subsection 4, reversal of ITC we are discussing. With respect to reversal of ITC, that's why I told you special one. The estimated law assumes that the estimated lifetime will be 5 years. For the unutilized time period in months, proportionate ITC is needed to be reversed. For that sake, 1 year 7 months means how many number of months ma? 12 plus 7, 19 months it was used. So 60 months minus 19 months. What is the remaining time period ma? 41. In proportion to these 41 months, you need to reverse the ITC. So with respect to that, 1 lakh rupees into 18%, that will be 18,000 ma. On that 18,000 into 41 divided by 60. Okay, we will use the system calculator, that will be there now. So with respect to that, so 18,000 into 41 divided by 60, 12,300. Now we need to reverse 12,300 ma. Okay, so what the 18.4 procedure ma? The estimated life of the capital asset will be 5 years and in terms of months it will be 60 months. For how much period it was used for making either taxable supply or it was there in normal scheme, that period is okay. For the remaining portion that was unutilized for taxable supplies, in that particular proportion, we need to reverse the ITC. In our example, we used it for taxable supply for 1 year 7 months, that is 19 months. So it was unutilized for taxable supplies for 41 months. In that case, definitely with respect to that 41 months, proportionate ITC is needed to be reversed. This is 18 subsection 4. 18.5 is not required ma. Now we need to see 18 subsection 6. When the capital goods are sold as second-hand plant and machinery, supply of the capital goods on which ITC was availed, which deals with 18 subsection 6 ma. In simple sense, 18 subsection 6 deals with when a capital good is sold as a second-hand capital good or a scrap. Okay ma, when the plant and machinery or like that, it was sold as a second-hand plant and machinery. In those cases, how much ITC that is needed to be reversed or how much amount that is needed to be paid, that will be discussed in 18 subsection 6. Further, the formula is there on the screen itself. How much amount we need to pay ma? Whatever the ITC that was previously availed, from that per quarter or part thereof 5% is needed to be reduced. And what is the remaining amount we will get? It will be compared with GST to be that is paid on sale value, and whichever is higher is needed to be reversed. This is a formula that was there under 18.6 ma. What is the formula that is there? How much ITC that was previously claimed? From that amount, per quarter or part thereof, 5% is needed to be reduced. And what is the remaining amount we will get? It will be compared with GST to be paid on sale value. Whichever is higher is needed to be reversed. Say for example, let us assume that the plant and machinery value is 10 lakhs ma. Rate of GST is 18%. And after using it for 1 year 6 months, now we just sold it for 6 lakhs as a second-hand plant and machinery. In that case, how much ITC that is needed to be reversed? The plant and machinery value is 10 lakhs, rate of GST is 18%. After using it for 1 year 6 months, we just sold that plant and machinery for 6 lakhs. In that case, how much ITC that is needed to be reversed? First, we need to compute. What was the ITC that was previously claimed ma? On 10 lakhs, 18% means 1,80,000 is ITC that was claimed. From that, per quarter or part thereof, 5% is needed to be reduced. So for how many months it was used in the business, ma'am? 1 year, 6 months. That means in terms of quarters, 1 year, 6 months means 6 quarters. 6 into 5%, 30%. In 1,80,000, 30% means 54,000. After reducing it, what is the amount we will get? 1,26,000. This 1,26,000 is needed to be compared with GST that is needed to be paid on sale value. What is the sale value? 6 lakhs. What is the rate of GST? 18%. On 6 lakhs, 18% means 1,08,000. 1,08,000. Sale value is 6 lakhs and rate of GST is 18%. In that case, 1,08,000 will be the amount that is paid. So, 1,26,000 or 1,08,000, whichever is higher, 1,26,000 is needed to be reversed, or it will be added to the output tax liability. This is the point that is there in 18 subsection 6 mark. So, what was the IDC that was previously claimed? From that, per quarter or part thereof, from the date of invoice, we need to deduct that amount. And what is the amount we will get? It will be compared with GST that is needed to be paid on sale value. And whichever is higher is the amount that is needed to be reversed. That is the point we should keep more focus. Okay, ma. There ends 18 subsection 6, ma'am. And last but not the least, by discussing this particular point, we can close the theory part. I will show you 1 or 2 illustrations with respect to that later on with respect to IDC. Restriction on use of IDC in electronic credit ledger. This rule is important, ma. After completion of section 18, we need to learn this rule number 86B. Generally, I will tell you one example here. Let's say the output tax payable is 100 rupees, ma, and we are having the IDC of 104 rupees. Okay, the output tax payable is 100 rupees. IDC available with us is 104 rupees. In that case, how much amount you need to pay in cash? The output tax payable is 100. IDC is 104. In that case, how much amount that is needed to be paid in cash? 0. But whereas, to whom this rule number 86B is applicable, they can utilize only 99% of the IDC amount. Remaining 1% of the total tax liability should be paid in cash. So, in our example, then in that 100 rupees output tax payable, only 99 rupees of IDC can be utilized and remaining 5 rupees will be carry forwarded. If at all, rule 86B is applicable to them. Sir, when this rule number 86B is applicable, sir? In a month, when your taxable turnover exceeds 50 lakhs, then rule number 86B is applicable to you. When rule number 86B will be applicable, ma? In a month. When your taxable turnover exceeds 50 lakhs, in that case, what will be applicable, ma? Rule number 86B will be applicable. When 86B is applicable, then what is the procedure we need to follow? IDC can be utilized only up to 99% of output tax liability. Remaining 1% should be paid in cash. If at all your taxable surplus value is less than or equal to 50 lakhs, then happily you can utilize IDC 100%. In that case, nothing is needed to be paid in cash in our example. Okay, ma. But while computing the taxable supplies, zero-rated supplies and exempted supplies will not be considered. While computing the taxable supply value of 50 lakhs, zero-rated supplies and exempted supplies value will not be considered. This is rule number 86B. We need to remember, ma'am. Okay. This is a theory part with respect to our IDC from the examination point of view, which are most important ones. Okay, ma'am. Now I will show you one illustration where the concept of uploading of invoices in GST are one. as per the old, before amendment, actually I will explain it to you. That means 5% will be there in a concept. Based on that, we had made the computation, because at the time of making the material, the new amendment was not there. So that's why the problem is based on that one only, and I will solve the problem actually based on the old provisions. Okay, but the new provision is that 5% is also not allowed to you. Okay, that will be there in your amendments videos. Later on, you can check it on the YouTube channel. Now let's come to this CRD 12, which is there in Masterminds material. K&K Limited, a registered supplier of Mumbai, is a manufacturer of heavy machines. Its outward supplies exclusive of GST for the month of January 2001 are as follows. Interstate supplies 85 lakhs, intrastate supplies 15 lakhs. In simple sense, these are the outward supplies. On that, we need to calculate the output tax payable. Applicable rate of CGST, SGST, IGST and outward supplies are 9%, 9% and 18% respectively. The details of the GST paid on inward supplies during the month of January are as follows. That means these are the inward supplies details. Whether they are eligible for IDC or not, we need to check first. First one, raw materials A, of which 70% of the inputs were used and 30% were there in the stock. The GST paid was CGST 60 and SGST 60,000. So, as per section 16, in order to claim the IDC, the goods should be received. The GST law never said that they should be used for business. What the GST law says, the goods or services should be received by the recipient in order to claim the IDC. If the goods are received by the recipient, definitely can claim the IDC. But law never said that they should be utilized for business in order to claim the IDC. Therefore, even though 30% were there in the stock, they are also eligible for ITC. Second one, raw materials B, of which 90% of the material were received in the factory and remaining material completely damaged due to a road accident on the way to the factory. There was no negligence on the part of K&K Limited. So the amounts paid are 50,000. The question arises here, how much IDC you can claim here? Only 90%. Why? Only 90% of the raw materials are received. So how much quantity you receives, on that only you can claim the IDC. Therefore, in the GST paid also, you can claim IDC only up to 90%. That is on 50,000, 95%, 90% means 45,000, I think. 50,000, 90% means 45,000, 45,000 CGST and 45,000 SGST, you can claim it as ITC. Construction of a pipeline light outside the factory premises. Pipeline comes under immovable property. When it is immovable property, it comes under works contract. Works contract comes under 17 subsection 5 negative list. Therefore, on these items, no IDC is allowed. Therefore, that 30,000 CGST, 30,000 SGST is not allowed as IDC. Next one. Insurance charges paid for the trucks used for the transportation of the goods. I told you this one also. If on motor vehicle IDC is allowed, then on those services also IDC is allowed. On the trucks, IDC is allowed or not? Yes. If on the trucks IDC is allowed, on insurance charges also we can claim the IDC. Based on that, 55,000 can be claimed as IDC. So what is the total amount, Madan? 60,000, 45,000, 1,55,000. It comes to 1,60,000 CGST and 1,60,000 SGST will be there. But there is a problem here. So additional information, there is no opening IDC, that is okay. All the conditions are satisfied, blah, 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 that is also okay, ignore it. And now come to point B. The details of GST paid on the inward supplies are available in GSTR 2A except for item 1 because the supplier has not filed point A in his GSTR 1. Therefore, it is not reflecting in GSTR 2A. So that means in 1,60,000, only how much amount is reflecting GSTR 2A ma? 1 lakh only. The point A, 60,000 amount was not reflected in GSTR 2A. So how much amount now that is reflected in GSTR 2A ma? 1 lakh rupees. That 1 lakh rupees can be claimed as 100% ITC. So what about that 60,000 now? On that 60,000, 5% or 60,000, whichever is lower, 5% of 1 lakh eligible ITC na. So on that 1 lakh, 5% or 60,000, whichever is lower, 1 lakh 5% means 5,000. So on that 1 lakh 5,000, 5% means 5,000 rupees can be claimed as ITC for the invoice that was not uploaded by the supplier in his GSTR 1. Let us make the computations now. See this computation of total ITC available. For that, raw material say 70% use and 30%, but still you are eligible to take total 60,000 as ITC here. But whereas in the second case, only 90% was received now, 10% was destroyed now. That's why 45,000 and 45,000 only can be claimed as ITC. But whereas with respect to pipeline, which comes under removable property, therefore, as per 17 subsection 5 blocked credits, there is no ITC that is available on this. That's why the amount is nil. Insurance charges for trucks, ITC is allowed. Therefore, 55,000 and 55,000 are the amounts. The total amount will be 1,60,000 and 1,60,000. But in that, how much admissible is the eligible ITC is only 1 lakh. Why? The 60,000 was not uploaded by the supplier in his GSTR 1. Therefore, this amount is not reflected in GSTR 2A of recipient. Therefore, admissible ITC will be 1 lakh, which is reflected in GSTR 2A. But as per the new amended provision, the ITC the recipient will get is only 1 lakh. But as per the old provision, 5% extra can be claimed. That means 60,000 rupees or 5% of 1 lakh, whichever is lower, that is 5,000. Total 1 lakh 5,000 is admissible ITC. Now, is there any opening balance in the problem now? I think there is no opening balance now in the problem. Okay. And what is the admissible ITC? Just now we discussed 1,05,000 CGST and 1,05,000 SGST. Total ITC will be 1,05,000 CGST and 1,05,000 SGST. This total ITC can be used to set off with the output tax payable. Already the data was given in the problem. So see this, these are the outward supplies details ma. 15 lakhs intrastate supplies. On that CGST and SGST is needed to be paid, and interstate supplies 85 lakhs, on that IGST is needed to be paid. So on the intrastate supplies of 15 lakhs, CGST and SGST are needed to be paid ma. CGST at the rate of 9% and SGST at the rate of 9%. Therefore, on the 15 lakhs into 9%, it will be 1,35,000, I think so. 1,35,000 CGST and 1,35,000 SGST. And whereas with respect to interstate supplies, 85 lakhs are there. On that 85 lakhs, 18% means it will be 15 lakhs 30,000. Okay, these are the output taxes that are payable ma. So the GST payable will be CGST 1,35,000, SGST 1,35,000, IGST 15 lakhs 30,000. And is there any ITC available ma? Yes, CGST just now we computed 1,05,000 and SGST 1,05,000. These amounts has to be utilized for as per our utilization of ITC procedure. CGST ITC first it should be utilized for CGST. Still any surplus is there, it will be used to pay IGST. In the same way, SGST ITC will be first utilized for SGST. Any surplus is there, it will be used to pay IGST. Here there is no surplus balance, I think so. 1,05,000 CGST IDC balance ma. After deducting it, remaining 30,000 is needed to be paid in cash. And SGST also 1,05,000 and remaining 30,000 is needed to be paid in cash. There is nothing was left to pay the IGST ma. Therefore, IGST total amount is needed to be paid in cash. So this is a problem. Actually, this type of problems can be asked in the exam. I think, as my opinion, I think my computation is correct. There can be always arithmetical errors can be there, ma. So, but arithmetic, that means while computing the amounts so fastly, I am doing all these things. Some amounts, actually, I think these amounts are correct, but any differences are there, please check it on your own with respect to the computation, what I am saying. So, but I think some 15 lakhs and 85 lakhs, the amounts remains the same. That means whatever the computation I made, actually, I thought it was correct, but any computation mistake is there. So, actually, don't think otherwise. Please make it by yourself, those computations. I'm explaining the concept now. Please keep focus on those things. So, this is a way how the computation should be done, and this is the total way how the IDC chapter will be there, and there ends chapter number 6. Okay, ma, the next chapter we need to discuss is chapter number 7, registration. Whereas with respect to registration, in this particular chapter we are going to discuss about when a person is liable for registration and what is the procedure for registration. Are there any special procedures that are to be followed in respect of any specified persons? And in which circumstances RC will be cancelled? And is there any possibility for the revocation of that? All these topics we are going to discuss under this particular chapter number 7, registration. So initially we will start with section 22. Initially we will start with section 22. What does section 22 says? The person liable for registration, if at all his turnover crossed the specified limit. As per section 22, if the person turnover crossed the specified limit, in those cases, definitely is liable for registration. But that threshold limit was changed from state to state. With respect to MMTA, that is Manipur, Mizoram, Tripura, Nagaland. In these 4 states, if the person aggregate turnover exceeds 10 lakhs, then he is liable for registration. Whereas with respect to Sikkim, Arunachal Pradesh, Meghalaya, Puducherry, Uttarakhand and Telangana, the registration limit will be 20 lakhs. If the aggregate turnover exceeds 20 lakhs, he is liable for registration. So, when this section 22 is applicable, as per section 22, the person is liable for registration when the threshold limit, when the aggregate turnover exceeds the specified limit with respect to MMTA, that is Manipur, Mizoram, Tripura, Nagaland, in these 4 states. If the aggregate turnover exceeds 10 lakhs, he is liable for registration. Sir, that means this particular turnover limit is for goods or is for service? Both. Whether it is for goods or whether it is for service, the registration limit will be 10 lakhs. And whereas with respect to T Sampu, that means T denotes Telangana, S denotes Sikkim, A Arunachal Pradesh, M Meghalaya, P Puducherry and U Uttarakhand. T Sampu, with respect to that, the registration limit will be 20 lakhs with respect to goods as well as with respect to services also. And whereas the rest of the country, others like Andhra Pradesh, Tamil Nadu, Karnataka, like that, in those cases, what is the position? If at all that particular person is dealing in goods only, is exclusive supplier of the goods, then the registration limit will be 40 lakhs. Whereas, if the person is an exclusive supplier of service or along with the goods, supply of service was also done, in those cases, the limit will be 20 lakhs. So with respect to rest of the country, if the person is making exclusive supply of the goods, then the registration limit will be 40 lakhs. If the person is dealing in services as well as goods plus services, in those cases, the registration limit will be 20 lakhs. So if at all any person exceeds that specified limit, he is liable for registration as per section 22. The question is here, sir, what is meant by the word aggregate turnover? Aggregate turnover means all taxable supplies, exempted supplies, exports, interstate supplies, minus GST, minus RCM purchases. What is the amount we will get? It is known as aggregate turnover. So what is meant by the word aggregate turnover, ma? All taxable supplies, exempted supplies, exports, interstate supplies, all these items are to be added. From that amount, two exclusions are there. One is GST, second one is RCM purchases. After deducting those two amounts, what is the amount we will get? That amount is known as aggregate turnover. If the aggregate turnover exceeds the specified limit, then definitely is liable for registration. So the next question is, this aggregate turnover should be computed on all India basis or state-wise. This 10 lakhs, 20 lakhs, 40 lakhs limits are there, na? In that case, while computing the aggregate turnover, state-wise turnover should be considered or total country-wise turnover should be considered? Country-wise. Total country-wise, that means on all India basis for the same point, we need to aggregate all those amounts. To all those amounts, we need to aggregate all the states' amounts. We need to compute the aggregate turnover for all India basis for the same point. And my doubt is here, we are having one place of business in Mizoram and another place of business in Telangana. In that case, what can be the registration limit? With respect to Mizoram, the registration limit is 10 lakhs. And with respect to Telangana, the registration limit is 20 lakhs. What is the turnover now? Limit for registration. Is it 10 or 20? Whichever is lower. That is 10 lakhs. So, if the Mizoram plus Telangana, both turnovers cumulatively exceeds 10 lakhs, they are liable for registration. In how many number of states we need to take the registration now? That means Mizoram and Telangana or are only in Mizoram? In both states. From how many number of states you are making the taxable supply, that many number of RCs you are required to take. In how many number of states you are having the place of business, that many number of RCs you are required to take. That is the point, ma. Got it? So that means Mizoram as well as Telangana. In both states, we are liable for registration. Okay, my doubt is here. From Telangana, we are supplying the liquor, and from Mizoram, we are making some mobiles. In this case, in how many number of states we are liable for registration? In Mizoram, we are manufacturing mobiles, the unit, and in Telangana, we are actually supplying the liquor. We are having a liquor store. In that case, in how many number of states we are required to take the registration? Only in Mizoram. Why, sir? From the state which we are making taxable supplies, with respect to those states only, we are liable for registration. We are liable for registration. Okay, ma. So from Telangana, we are making liquor supply. Therefore, what is the position, ma, with respect to liquor? It is a non-taxable supply. There is no need for registration. But whereas with respect to Mizoram, mobiles which comes under taxable supply, you are required to take the registration, ma. That is the point. So, registration under GST is, that's why it is called as state-based registration, ma. From how many number of states you are making the taxable supplies, that many number of RCs you are required to take. But whereas registration is not required to take from a state where only exempted supplies are made. In our example, Telangana, which is making liquor supply. Okay. And just now we discussed that if a taxable person is operating in multiple states and one of the place of business is there in special category for which 10 lakhs limit is applicable, in that case the registration limit will be automatically reduced to 10 lakhs. That is the point we should remember. Okay. The next point is here. Sir, if the business was sold, in that case, transferee has to apply for fresh registration or he can continue on the old RC basis. When the business was sold to some other person, the transferee has to apply for fresh RC, or what is the word RC? Under that he can continue the business. What is your answer? He need to apply for fresh RC. Why ma? Transferor PAN and transferee PAN will be different and GST registration is based on PAN number. That's why transferee has to apply for fresh RC. Sir, is that same point will be applicable to amalgamation or demerger also? Yes. In case of amalgamation, what are the two companies that are involved ma? Amalgamating company and amalgamated company. In that case, amalgamated company has to apply for fresh RC. Same point will be applicable to demerger also. What are the two companies that are there in demerger ma? One is demerged company and second one is resulting company. So now the resulting company will apply for fresh RC. So because PAN will be different from amalgamating to amalgamated, demerged to resulting company. And in the same way, the registration under our GST is state specific. There is no centralized registration. That means in how many number of states you are having the place of business, that many number of RCs you are required to take. That is okay. Already we discussed that point. But the point is, which type of registration do you need to take? Say for example, Masterminds is having place of businesses in two states. One in AP, another one is there in Telangana. In that case, with respect to AP and Telangana, MM is required to take two registrations. Okay. The question is here, under which type of GST MM has taken the registration? Is it CGST registration, SGST registration or IGST registration? What is that registration will be called as? There is no tax specific registration under our GST. It is only called as GST registration. So if Masterminds applied for registration under SGST and it is deemed to be applied under CGST also. When the application is rejected under SGST, it is deemed to be rejected under CGST also. That is the point. Okay, ma. So these are the major points with respect to 22 we are required to remember ma. And after 22, next section is we need to discuss is persons liable for compulsory registration, which is section 24. That means just now we discussed it in section 22. The person is liable for registration only when his turnover crosses the specified limit. But whereas with respect to section 24, if those persons are notified under section 24, in those cases, definitely, irrespective of their turnover, they are liable for registration. What is the point, my here? The person liable for compulsory registration will be, as per section 24, notified persons. But once those persons are notified as per section 24, irrespective of their turnover, they are liable for registration. In that, the first person will be interstate supplier of the goods. The person who is making interstate supply of the goods, the supplier of the goods who is liable to pay the IGST is liable for compulsory registration irrespective of his turnover. In the same way, but except notified goods. What are those notified goods? Handicraft goods. That means even though interstate goods are supplied, even though handicraft goods are supplied on interstate, but still, he is not required to make any compulsory registration as per 24. When his turnover crossed the limits as per section 22, then only he is liable for registration. What is the general rule, ma? Any person who is supplying the goods in interstate is liable for compulsory registration. But in case of handicraft goods, even though he is making interstate supply of handicraft goods, he is not liable for registration as per section 24. He is liable for registration as per section 22. That is the point. And second one is, person receiving inward supplies taxable under RCM. In simple sense, RCM recipients who are notified under 93 or 94. The recipients who are notified under 9 subsection 3 or 9 subsection 4 are liable for compulsory registration irrespective of their turnover. And third one is NRDP. What is the full form of NRDP, ma? Non-resident taxable person. What is the meaning of NRDP? The foreigner who is making occasional supplies in India, he is known as NRDP. He is known as NRDP. Those NRDPs are also liable for compulsory registration. And next one is person supplying on behalf of some other taxable person, that means agent. Do you remember, ma, with respect to principal agent relation, deemed supplies? When the principal agent relation will be treated as deemed supply, ma? At the time of receiving the goods by the buying agent or at the time of selling the goods by the selling agent. If the invoice is in the name of the agent, then it is a deemed supply. If the invoice is in the name of the principal, then it is not a deemed supply. Here, which type of agents are covered under section 24, ma'am? The agents who are covered under deemed supplies are required to compulsorily register as per section 24. The agents who are covered under deemed supplies are required to compulsorily register as per section 24. And CTP. What is meant by the word CTP, ma'am? Casual taxable person. Who is this CTP? The person who is having a fixed place of business in one state and making occasional supplies in some other states, that person is known as CTP. That CTP is also liable for compulsory registration. Okay, ma'am. And any other person notified by the government. And I just forgot to tell you, with respect to CTP also, CTP of handicraft goods is not liable for compulsory registration. Just like the interstate supply, with respect to CTP also, CTP of handicraft goods is not liable for compulsory registration. Next one, any other person that was notified by the government. That means apart from these people, any people are notified? Yes. First one is ISD. What is the full form of ISD, ma? Input Service Distributor. He is liable for compulsory registration. Already at the time of IDC itself, I explained what is meant by the word is ISD, where there is a centralized billing system or a centralized accounting system. Total input tax will be accumulated at head office only, but output tax is needed to be paid from branches also. That's why head office will distribute the IDC to the branches. Therefore, head office is known as generally ISD. But ISD is required to be taken as a separate registration as per section 24. And second one is TDS deductors as per section 51 and TCS collectors as per section 52 and ECOs notified under section 9 subsection 5 and ECO of the goods. And sixth one, OIDA or service providers. These are the people, generally they are required to take the compulsory registration mark. ISDs, Input Service Distributor. TDS deductors as per section 51. TCS collectors as per section 52. ECOs that are notified under 9 subsection 5. Who are the ECOs that are notified under 9 subsection 5, ma? 3 types of ECOs are notified under 9 subsection 5. Who are those 3 ECOs? Transportation of passengers, hotel accommodation, And last but not the least, housekeeping services. These three ECOs are covered under 9 subsection 5. Those ECOs are liable for compulsory registration. And ECO of goods like Amazon, Flipkart, all those people are required to take compulsory registration. And last but not the least, OIDAR service providers. What is meant by this OIDAR services, ma'am? Online information database access or retrieval services. OIDR services means online information database access or retrieval services. Example for that is Amazon Prime Video, Hotstar, Netflix. All these people will come under this section 24. So, what does section 24 deals with, ma? Compulsory registration. That means irrespective of your turnover, you are liable for compulsory registration. Who are the people that are covered? Interstate supplier of the goods except handicraft goods, RCM recipient, CTP, MRDP, the agents who are covered under deemed supplies, ISD, TDS deductor, TCS collector, ECOs notified under 9 subsection 5, ECO of the goods and the supplier of OIDR service. All these people are liable for compulsory registration as per section 24. And next one is section 23, persons not liable for registration. With respect to the persons who are not liable for registration, first one is the person who is making exclusive exempted supplies. If the person is making exclusive exempted supplies like agriculture, those people are also not required to take the registration. In the same way, the person who is making exclusive non-taxable supplies, the person who is making exclusive exempted supplies is not liable for registration as per section 23. The person who is making exclusive non-taxable supplies is also not liable for registration as per 23. And farmer, agriculturist, is supplying the product out of cultivation of his own land. As far as he supplies the products which are cultivated out of his own agricultural land, up to that extent, he is not liable for registration, ma'am. Say, for example, a farmer is selling the potatoes which was cultivated at his own agricultural land. In that case, that person is not required to take any registration. But whereas those items, those potatoes are not cultivated out of his own agricultural land, in that case, he is liable for registration. And last but not the least, exclusive RCM supplier. Because RCM recipient is liable for compulsory registration, he is paying the GST. That's why the person who is making exclusive RCM supplies, those exclusive RCM suppliers are also not liable for registration. This is all about section 23. Yes, ma'am. In the previous session, I think we just discussed about section 22, the persons liable for registration. In the same way, section 24, compulsory registration, and whereas section 23, the persons who are not liable for registration. So that is the topic what we have discussed previously. And after that, we need to see what is the effective date of registration. Sir, what is the effective date of registration here? When the person is liable for registration, from that particular date, if he applies for RC within 30 days, then the date when he becomes liable for registration will be the effective date of registration. But whereas when you apply for RC after 30 days, when you apply for RC within 30 days, then the date when RC was granted to you, that will be the effective date of registration. Say, for example, on September 1st, our turnover crossed the specified limit. On September 10th, we applied for RC. On September 17th, we grant the RC. In this particular case, in how many number of days you applied for RC, ma? Within 30 days. You applied for RC within 30 days. In that case, what is the position, ma? Even though RC was granted to you subsequently, The effective date will be the date when you are liable for registration. In our example, it will be September 1st. So, on September 1st, you are liable for registration. From that particular date, you applied for RC on September 10th, that is within 30 days. Therefore, even though RC was subsequently granted to you, the effective date will be the date when you are liable for a registration. But in the same example, if you observe that instead of September 10th, you applied on October 10th and RC was granted to you, let us assume that on October 19th. The question arises here, what will be the effective date of registration? October 19th will be the effective date because you applied for RC after 30 days. When you applied for RC after 30 days, in those cases, what will be the effective date, ma? The date when that particular RC was granted, that will be the effective date. That is the point. Okay, ma'am. And the next point will be procedure for registration, ma, section 25. In simple sense, with respect to section 25, procedure for registration. What is the form number with respect to registration, ma? REZ01. GST REZ01 is the form to get the registration certificate, ma. In that, two parts will be there, part A and part B. Whereas in part A, what are the details you need to fill, ma? Your PAN number, mobile number and email ID as well as the state. PAN number, mobile number, email ID, addresses are validated. Okay, ma. With respect to that PAN, mobile number, email ID, they are needed to be validated. PAN, mobile number, email ID, they are needed to be validated. So what is meant by that? Let us assume that PAN will be validated based on your CBDT database. That means what is meant by the word CBDT, ma? Central Board of Direct Taxes. Whatever the PAN number you entered, it will be cross-checked by the information that is given by CBDT. And as well as your mobile number and email ID are also validated based on OTP. When PAN, mobile and email ID are validated, based on that, TRN will be generated. A temporary reference number will be generated. Based on the TRN, you need to fill the part B of REZ01. In part B, generally the details like what is the description of your business and what are your previous registrations, if at all any are there, what are those numbers, and in the same way which type of business you want to do, whether it is, what is the constitution of your business, whether it is partnership firm, company, LLP, like that, and who are the promoters or the proprietor or the partners, are there any authorized signatories. All these details will be there in part B. After filling part A and part B, then definitely what you can do is nowadays, you can go for Aadhaar authentication. After filling of part B, there are two options left to you. One option is there with you. If you want to go for Aadhaar authentication, you can select opting for Aadhaar. If you don't want to do that, you can skip that one. Okay. But if you want to link your GST number with your Aadhaar number, in that case, what is the position, ma? In that case, what is the position? Definitely, from the date of filing of this particular part B, Aadhaar is needed to be linked within 15 days. Okay. If at all Aadhaar was linked to that GST registration process, then the date of Aadhaar authentication is deemed to be the date of application. But sometimes what happens is you want to go for Aadhaar authentication, but due to some technical difficulties, you are unable to do that. In that case, what will be the date of application? The date of application will be the 15th day from the date of filing of part B, if at all you opted for Aadhaar authentication but failed to do that. Okay. And in the same way, if you don't want to link your Aadhaar, then it is also okay now at present. In that case, what will be the date of application? The date of application will be the date when you filed the part B. So I discussed with you 3 date of application scenarios. First one, you opted for Aadhaar authentication and Aadhaar authentication was done successfully. In that case, what is the date of application? Date of Aadhaar authentication is deemed to be the date of application. Second one, You opted for Aadhaar authentication but failed to do that. In that case, what is the date of application? What is the date of application in that case? From filing of Part B, 15th day. And third case, you did not want to link your Aadhaar. In that case, what is the date of application, ma'am? Date of filing of Part B. Okay. And another point you need to remember, if you want to link your Aadhaar here, in that case, if Aadhaar is successfully linked, then without physical verification of place of business, RC will be granted to you within 7 working days. But whereas you failed to link the Aadhaar or you did not opted for Aadhaar authentication, in those cases, what is the procedure, ma? Only after the physical verification of the place of business, then only RC will be granted to you. Then only RC will be granted to you. That is the point, ma. Okay. See this? Proper officer examines the application and accompanying documents, ma. If everything is okay, that means when Aadhaar authentication was done successfully. When Aadhaar authentication was done successfully. In that case, what is the position, ma? From the date of application, if everything is okay, within 7 working days, RC will be granted to you in REG 06. But whereas if proper officer is not satisfied with the application, then he may issue a show cause notice to you. For that show cause notice, the applicant should reply within 7 working days. Whatever the reply you have given, if at all the department is satisfied with respect to that, then RC will be granted to you within 7 working days from the date of clarification. Reply was given by you, but proper officer is not satisfied. In that case, your application can be rejected. Okay, ma. But if you did not give the reply at all, in that case, application may be rejected. If the department does not respond within 7 working days, whether from the date of application or from the date of your reply, then your application is deemed to be approved. That means there is no action from the department within 7 working days. They neither issued the RC nor issued the show cause notice. Okay. That is the point we should remember. Next point is registration by the proper officer Shumoto. With respect to general procedure, either as per section 22 or as per section 24, when you are liable for registration, you need to apply for RC within 30 days. Already we know that. But you did not apply for RC. In that case, department will also will allot you a temporary registration number. This particular procedure is known as Shumoto registration by the department. That means voluntary registration by the department, even though there is no application on the part of the concerned party. Even though there is no application that was filed, but still, what is the procedure, ma? But still, what is the procedure? Definitely, what he can do, ma? He can grant you a temporary registration number, ma. From the date of granting the temporary registration, you need to apply for RC within 30 days. If you don't agree with that, then you can go for appeal. You can go for appeal to the appellant authority. But if the appellant authority also decides that you need to take the registration, in that case, from the date of order of appellant authority, within 30 days, you need to apply for RC. So this concept is known as registration by the proper officer, Shumoto. Shumoto means voluntarily, even though there is no application on the part of the applicant. This is the point we should remember, ma. Next point is here, we need to remember is amendments of registration. Sir, already we have taken the RC, but subsequently what happened is, there are some changes that occurred after we just got the registration certificate. The question arises here, the details which are submitted at the time of registration were changed now. The question arises here, whether it is needed to get again registered, whether we need to take again the new registration certificate. Answer is no. Definitely those details can be modified except PAN. Because our GST registration is based on PAN now. That's why we can't modify that, except that with respect to the remaining changes, what occurs after the RC was granted, definitely we can modify them. That is the point, ma'am. So with respect to this point here, the changes or the amendments can be divided into 2 points, ma'am. One is core areas, second one is non-core areas. That means the changes as per section 28. Here section 28 deals with amendments to RC, ma'am. The topic was divided into 2 points. One is core areas and second one is non-core areas. With respect to core areas, we need to get the permission from the department in order to modify the RC. But whereas with respect to non-core areas, permission of the officer is not required. Ourselves we can modify the data. Sir, what are the core areas? Are they defined under this particular CGST Act? Yes, ma'am. There are 4 areas practically which requires the permission of the department in order to modify the RC. First one, when the legal name of the business changes. Second one, when head office address changes. Third one, when branch address changes. Fourth one, when there is a change in the key managerial person data. These 4 points are treated as core areas, ma'am. With respect to them, any change occurs, we need to get the permission of the department. But whereas, except these areas, rest of the areas are treated as non-core areas. Ourselves, we can modify the data, like mobile number, email ID, like that. So, what are the core areas, ma? 4. Legal name of the business, head office address, branch address, and whereas there is a change in the key managerial person data. In these 4 cases, definitely what is the position, ma? We need to take the approval of the department. But whereas in the rest of the cases, ourselves we can modify the RC. So, sir, in core areas, just now you said that we need to get the department approval. Na? What is the time limit for making the application there? 15 days. Within 15 days of such change, you need to apply for amendment to RC. Ma. If everything is okay, whatever the application you just submitted it, if everything is okay, what is the position, ma? Definitely, RC will be amended within a period of 15 days. RC will be amended within a period of 15 days. But whereas, if at all the department is not satisfied with the applications you submitted, if at all that application was incomplete, inaccurate, in those cases, some additional information can be asked by the department. With respect to that additional information, they will issue a show cause notice, ma'am. That show cause notice will be issued to you within a period of 15 days of application. If the department is not satisfied with the application you submitted, then from the date of receiving that particular show cause notice, you should give a reply within 7 days. If everything is okay, whatever the reply you have given, if at all it is satisfactory, in that case, department will approve your amendment. If the department is not satisfied, they will reject the application. This is the procedure that will be there in section 28. Okay, what is the point, ma, here? Generally, with respect to amendments to RC, the topic is divided into 2 types, core areas and non-core areas. There are 4 core areas. What are the 4 core areas, ma? Legal name of the business, head office address, branch address, key managerial person data. Any change occurs, it comes under core areas, rest of the areas, non-core areas. In non-core areas, there is no need for departmental approval. In core areas, definitely what is the position, ma? We should get the approval from the department. In how many number of days we need to apply? Within 15 days. Then if everything is okay, in how many number of days, department will issue a modified RC? Within 15 days. If not okay, in how many number of days a show cause notice will be issued to you? Within 15 days. Further, in how many number of days you need to give the reply? 7 days. If everything is okay, then RC will be amended. Otherwise, application will be rejected. This is section 28. You need to remember, ma. Next point is here, section 27, ma, which deals with registration procedure in relation to CTP and NRTP. The topic here deals with registration procedure in relation to CTP and NRTP. With respect to CTP and NRTP, what is the meaning of CTP, ma? casual taxable person means the person who is having a fixed place of business in one state and making occasional supplies from some other states. Then from the other state where he is making occasional supply, that person is known as CTP, casual taxable person. And the second one is NRDP. What is meant by the word NRDP ma here? Non-resident taxable person means what is the position ma? With respect to non-resident taxable person, the foreigner who is making occasional supplies in India is known as NRDP. The foreigner who is making occasional supplies in India is known as NRDP. Okay ma. These CTPs and NRDPs will have a special procedure with respect to section 27 ma. The first point is with respect to a normal registered person who is going to register under section 22 or under section 24. Then what is the position of that person ma? When he is liable for registration either as per 22 or as per 24. From that particular date, he need to apply for RC within 30 days. But whereas with respect to CTP and NRDP, even before commencement of business itself, 5 days before, they need to apply for RC. That is the first different procedure. With respect to remaining people, they need to apply for RC from the date when they becomes liable for registration within 30 days. But whereas with respect to CTP and NRDP, they need to apply for RC even before commencement of business, that too prior to that 5 days before. Okay. And second difference is, with respect to remaining people, generally, once RC was granted to them, it is a permanent one, unless he surrenders it or department cancels it. Once a RC was granted to a normal registered person, it is permanent unless that person surrenders it or department cancels it. But whereas with respect to CTP and NRDP, whatever the RC that was granted to them, definitely it is valid for a minimum of 1 day and a maximum of 90 days. A minimum of 1 day and a maximum of 90 days. Sir, is it possible to extend that time period? Yes, definitely we can extend that for up to another 90 days. So in total, in the capacity of CTP or NRDP, you can continue up to 90 plus 90, 180 days. This is another difference. And the last difference is here, with respect to remaining people who are registered under 22 or 24, those people, generally what they will do is they will pay GST either on the monthly basis or on the quarterly basis. If at all you are following section 9, you will pay the GST on your monthly basis. If at all you are paying under section 10, then composition scheme. In that case, quarterly basis. But whereas with respect to CTP and NRDP, to get the registration certificate itself, you need to pay the advance tax on the estimated sales. Then only you will get the registration certificate. Then only you will get the registration certificate. So in order to get the RC, CTP and NRDP has to pay the advance tax, then only they will get the RC. And another point is that, sir, for the extension of time period also, advance tax is needed to be paid. Yes, for the extension of time period also, advance tax is needed to be paid. These are the three differences. First one, what is the first one? Remaining people apply for RC within 30 days. But whereas with respect to CTP and NRDP, apply for RC within, before commencement of business, 5 days. Second one, remaining people, RC was granted, it is permanent, unless you cancels or surrenders. But whereas with respect to them, minimum of 1 day, maximum of 90 days. Is it possible to extend that? Yes, definitely we can extend that. But for another 90 days only. Remaining people, they will pay either on monthly or quarterly basis. But whereas with respect to CTP and NRDP, they need to pay the advance tax first in order to get the RC. This is section 27. Okay, after that, the next concept we need to discuss is here, unique identification number. To whom this unique identification number will be allotted, UNOs, United Nations organizations like UNESCO, UNICEF, WDO, WHO, like that, those type of organization. and multilateral financial institutions like Asian Bank, World Bank, like that, embassies, consulates, with respect to them, generally, instead of the normal registration number, a special number will be allotted to them. That special number is known as unique identification number. Why this unique identification number is allotted to them? Generally, their outward supplies are exempted. But whatever the taxes, they just pays on the inward supplies in order to give them as a refund. One number is needed to be allotted to them. That's why for them, a unique identification number was allotted to them. Based on that, definitely they will get the refund. That is the purpose of this unique identification number. And last but not the least, here we need to see about cancellation, which deals with section 29 deals with cancellation. The first one is cancellation can be done in two ways. One is on the application by the registered person. It will be there under 29 subsection 1. And second one is a suo motu cancellation by the department, that is 29 subsection 2. With respect to 29 subsection 1, when applied by the registered person, in those cases RCA will be cancelled in these circumstances. Sir, what are the circumstances that are covered under this 29 subsection 1? First one, when the business was closed. Second one, when the business was sold. Third one, amalgamation or demerger. Fourth one, change in the constitution. Fifth one, taxable supply becoming either exempted supply or non-taxable supply. Generally, in these cases, when you apply for cancellation, then the department will cancel the RC. What are the cases, ma'am? When the business is closed. Second one, when the business is sold. Third one, amalgamation or demerger. Fourth one, change in the constitution, like partnership form to company, company to LLP, like that. And the taxable supply becoming either exempted supply or non-taxable supply. In these 5 cases, when applied by the registered person, then RC will be cancelled by the department. But whereas 29 subsection 2 covers the cases where there is no application by the registered person, but still department will cancel the RC. In that, the first case is with respect to normal scheme. GSTR 3B was not filed continuously for 6 months. When GSTR 3B was not filed continuously for 6 months. But whereas with respect to composition scheme, CMP 08 was not filed continuously for 3 quarters. With respect to normal scheme, GSTR 3B was not filed continuously for 6 months. Whereas with respect to composition scheme, what is the position, ma? Continuous 3 quarters, the return was not filed. In those cases, RC can be cancelled by the department. In the same way, voluntary registered person does not commence the business within a period of 6 months. Voluntary registered person means even though he is not liable, he got the RC. But from the date of RC, you need to commence the business within a period of 6 months. Otherwise, his RC will be cancelled. Where RC was obtained by fraud, third case. That means by submitting false evidences, you got the RC. And department knows about that, RC can be cancelled by the department. And when the registered person violates the provisions of GST Act, and in the same way, he does not conduct any business from the declared place of business, in our language it will be called as dummy company. And in the same way, issues invoice without supply, in our language it is known as fake invoice. So when it is a dummy company, when it is a fake invoice, when the concerned person issues a fake invoice, and department knows about this thing, your RC can be cancelled. In the same way, from generally previously, in order to get the RC, bank details are mandatory. But after that, the department has amended the provision that there is no need to mandatorily submit the bank details in order to get the RC. But from the date of RC, within 45 days, or date of submission of your first return, whichever is latter date, on or before that particular date, you need to submit the bank details to the department. If at all you fails to do that, your RC can be cancelled by the department. And in the same way, ITC. So as per section 16, we specify some conditions. Documentary evidence should be there. Goods or services should be received. And GSTR 3B is needed to be filed. Supplier has to pay the GST to the government. If all these conditions are satisfied, then only you can get the ITC. But even though those conditions are not satisfied, but still you have taken the ITC and department knows this particular thing, your RC can be cancelled. In the same way, the sales data submitted in GSTR 1 is more than the sales data that was submitted in GSTR 3B for one or more tax periods, then also your RC can be cancelled. So whatever the outward supplies details that are there in GSTR 1 is more than the outward supplies that were declared in GSTR 3B for one or more tax periods, then also department can cancel the RC. And last but not the least, Rule 86B was violated. What does this mean? If your taxable turnover exceeds 50 lakhs, then 99% of ITC can be used. 1% should be paid in cash. If at all any person violates this particular provision, then also his RC can be cancelled. And these are the cases or circumstances where your RC can be cancelled. And this point is actually the procedure. When you applies for cancellation, that means when the registration is going to be cancelled as per 29 subsection 1, then when you applied for that particular cancellation, generally when any of those events happens which are specified in 29.1, from that particular date, you need to apply for cancellation within 30 days. If everything is okay, from the date of application, within 30 days, your RC will be cancelled by the department. But whereas with respect to 29 subsection 2, what does 29 subsection 2 deals with? Even though there is no application on the part of the registered person, the department suo motu cancels the RC. In those cases, whatever the circumstances that were discussed in 29.2 attracted, department will issue a show cause notice to you. Why department will ask you why your RC should not be cancelled. Please explain me. They will issue a show cause notice to you. After receiving that particular show cause notice, you should give the reply within 7 days. If everything is okay, then automatically that means if the department is satisfied with your reply, the proceedings shall be cancelled. That means cancellation proceedings will be dropped. But the department was not satisfied by the reply given by you. In those cases, from the date of receiving that particular reply, within 30 days, your RC can be cancelled by the department. This is the procedure. And last but not the least, we need to see the revocation. So with respect to revocation, when your RC was cancelled by the department suo motu, in those cases, within 30 days of receiving that particular cancellation order, you can apply for revocation. Sorry, that means this 30 days time period is absolute one, or is it possible to modify the time limit? Is it possible to extend the time limit? Yes, this period of 30 days can be extended for another 30 days by the AC or JC, additional commissioner or joint commissioner, and for a further period of another 30 days by the commissioner. That means what is meant by the word revocation of cancellation? First of all, your RC was cancelled. If at all it is going to be restored, it is known as revocation of cancellation. You need to apply for that revocation within 30 days. Is it possible to extend that? Yes, that extension can be done by additional or joint commissioner for another 30 days. Still extension is possible? Yes, for another 30 days by the commissioner. Okay, up to a max of 90 days, 30 plus 30 plus 30. In these 90 days, you can apply for revocation. If the department is satisfied with your reply, then your cancellation will be revoked within 30 days of making the application. There ends the registration chapter. In this particular chapter, you need to keep more focus on section 22, 24 and 23, and whereas 27 and 29, these are the important sections you need to keep more focus on. There ends chapter number 7, registration. Okay, now we are going to discuss about chapter number 8 here, tax invoice, debit notes, credit notes and e-way bill. With respect to this particular chapter, in this particular chapter, we are going to discuss about various documents which are going to be issued under our GST era, and under which circumstances these documents may be issued, and what is the relevance of these documents we are going to discuss now. First of all, we need to start with tax invoice here. So what is the need of a tax invoice generally? Generally, a tax invoice is a commercial instrument that is issued by the supplier of the goods or the service to the recipient. Generally, this particular tax invoice will work as a documentary evidence that how much amount just we pays to the supplier, and in the same way, what we can say, how much tax that was collected from the recipient. As evidence of that, this tax invoice will act as a document. But whereas without tax invoice, a registered person cannot claim the ITC also. So this is the relevance of this particular tax invoice. The question is here, sir, what is the statutory time limit for the issue of invoice? What is the statutory time limit with respect to issue of invoice? Here, with respect to that, the concept can be divided into two types. One is goods and second one is services. Both are having different time limits. So we are discussing about statutory limit in relation to supply of the goods. That means what is the time limit for the issue of invoice in relation to supply of the goods is the topic what we are going to see now. With respect to supply of the goods, we can, section 31 deals with this particular topic. In that, four circumstances can be there. Already we discussed briefly them in time of supply. The point is, what are the four cases that are covered under section 31? When physical movement was involved, when there is no physical movement, continuous supply of the goods, sale or return basis. These are the 4 points that are covered under section 31 with respect to what is the last date for the issue of invoice here. First one, when physical movement of the goods was involved. In that case, what is the last date for the issue of invoice? On or before date of removal from the factory of supplier. Second one, when there is no physical movement of the goods involved. In that case, what is the last date for the issue of invoice? On or before date of delivery. And with respect to continuous supply of the goods, what is the last date for the issue of invoice? Date of periodic statement or date of payment, whichever is earlier. And in relation to sale or return basis, what is the last date for the issue of invoice? In relation to sale or return basis, what is the last date for the issue of invoice? Date of approval or from the date of removal 6 months, whichever is earlier. What are the 4 cases? I am repeating once again. So, when physical movement of the goods were involved, then on or before date of removal. When there is no physical movement involved, on or before date of delivery. With respect to continuous supply of the goods, date of periodic statement or date of payment, whichever is earlier, sale or return basis, date of approval or from the date of removal 6 months, whichever is earlier. So these are the last dates for the issue of invoice in relation to goods. And whereas with respect to services, what is the relevant date? With respect to supply of service, in case of normal supply of service, from the date of provision of service, invoice is needed to be issued within 30 days. But whereas with respect to bank, NBFC, insurance, financial institutions, these 30 days will be replaced by 45 days. Okay. And what about continuous supply of service? With respect to continuous supply of service, just like in goods, 3 cases will be there. First one, where the due date can be ascertained. Second one, where the due date cannot be ascertained. Third one, payment is linked with completion. Like that, 3 points will be there here. With respect to continuous supply of service, 3 points will be there. First one is due date can be ascertained. Second one, due date cannot be ascertained. Third one, payment is linked with completion. These are the three cases. So with respect to the first case, due date can be ascertained. What is the time limit for the issue of invoice? On or before due date. If the due date cannot be ascertained, in that case, what is the last date for the issue of invoice will be on or before date of payment. If the payment is linked with completion, invoice is needed to be issued on or before completion. These are the dates that are covered under continuous supply of service. With respect to continuous supply of service, if the due date can be ascertained on or before due date, if the due date cannot be ascertained on or before date of payment, payment is linked with completion on or before completion. Let's say due date can be ascertained. For that, what is the best example? Mobile postpaid bill. In the mobile postpaid, definitely due date can be a fixed date. In that case, invoice is needed to be issued on or before that particular due date. But due date cannot be ascertained. In those cases, let's say for example, any service for where the due date cannot be ascertained. Anybody say for example, with respect to electricity charges, there will be a due date general, okay, based on the time where the reading was taken. That is also okay. And in the same way, with respect to that, another point what we can say is cable TV services previous. With respect to cable TV services which are not prepaid, in those cases, whenever we think that we need to pay, then only we will pay. If the cable TV operator comes to us on the month starting days, you will say, so how we are having that much of money, still now we did not receive our salary. When he comes at the end of the month, we say, already all the money I have got as actually incurred as expenditure. So definitely we will pay whenever we feel that we need to pay. There is no fixed due date with respect to cable TV previously. In that case, when the invoice will be issued on or before date of payment. And last but not the least, payment is linked with completion. For that, the best example is just like your in costing, contract costing will be there. Work certified, work uncertified. Generally, payment will be done in proportion to the work certified. Let us assume that, okay, on the completion of first floor, 30% will be paid to you. On the completion of second floor, another 30%. When the total completes, remaining 40%. Here, payment is linked with completion. In those cases, invoice is needed to be issued on or before completion. This is with respect to continuous supply of service. Okay. And generally, there is no prescribed format for tax invoice. Generally, there is no prescribed format for tax invoice. But the particulars that are specified here, with respect to them, if those particulars are satisfied, then it will be treated as tax invoice. If those particulars are satisfied, then it will be treated as tax invoice. So what are the particulars that should be there in invoice in order to treat it as a tax invoice? First one, name, address and GST number of the supplier, serial number, date of issue. If the recipient is a registered one, recipient name, address and GST number. If the recipient is an unregistered one and the value is more than 50,000, then recipient name and address. If the value is less than 50,000, then there is no requirement of specifying the name and address unless it was asked by the recipient. And the description of the goods, total value, tax rate, tax amount, place of supply, address of delivery, RCM applicable or not, signature and QR code if at all it is the invoice, and HSN number. With respect to goods, HSN will be there. With respect to services, SAC, service accounting code will be there. All these points will be there in the tax invoice. But whereas with respect to HSN, how many number of, with respect to HSN, 8 digits will be there. With respect to service accounting code, 6 digits will be there. Okay, the point is here. With respect to this point, aggregate turnover in the preceding financial year. That means how many number of HSN digits should be specified on the invoice will depends upon the aggregate turnover in the preceding financial year. If in the preceding financial year, aggregate turnover is less than or equal to 5 crores, then if at all it is a B2B supply, first 4 digits is needed to be specified. If at all it is a B2C supply, it is exempted. There is no need to specify the HSN code. If your aggregate turnover is more than 5 crores in the preceding financial year, whether it is a B2B supply or a B2C supply, in both cases, 6 digits should be specified on the invoice. This is a point you should keep in focus. So, generally there is no prescribed format for tax invoice. But if all these details are there in the tax invoice, definitely based on that you can claim the IDC also. What are the basic details that should be there in the tax invoice? Supplier name, address, GST number, serial number, date of issue. If the recipient is a registered person, then recipient GST number. If the recipient is an unregistered person, in that case, what is the position? If the recipient is an unregistered person and the value is more than 50,000, name and address of the recipient. If the value is less than 50,000, optional one. And apart from that, description, total value, tax rate, tax amount, place of supply, address of delivery, RCM applicable or not, signature, e-invoice QR code should be there, and HSN. So what is meant by this HSN here? HSN is in relation to goods and SAC is in relation to services. How many number of digits of HSN should be there will be decided by the preceding financial year turnover. If in the preceding financial year, your aggregate turnover is less than or equal to 5 crores, and if at all it is a B2B supply, then first 4 digits needed to be specified, and if at all it is a B2C supply, it was optional one. And your aggregate turnover is more than 5 crores, then whether it is a B2B supply or B2C supply, mandatorily 6 digits is needed to be specified on the invoice. Next point is here. Sir, just now you said that this many number of details should be there mandatorily in order to treat it as a tax invoice. Is there any exceptions to this point? Yes. In few cases, whatever the details just now we discussed, lesser details are sufficient. In few cases, more than these details are also required. Let's take the example of these organizations, insurance, bank, financial institution, and NBFCs. With respect to them, lesser details are sufficient. The details that are not required is serial number and address of the recipient. Because practically with respect to the bank, they will do number of activities on a daily basis. So every time keeping the serial number is a problematic task. And moreover that, address of recipient is not available to the banker generally. Let's take the example of DD. While taking the DD, in the DD form, if you observe that, you need to write the address. How many people will write the address on DD while taking the DD? They will simply specify Guntur. They will not say the door number and all these things. If you observe the DD form, in that case, at the right side corner, you need to specify the address. Clear-cut address should be there, but nobody will fill that. Only they will say how much amount the DD is for, payable on which branch, all these things will be there. And drawing it Guntur branch, that's it. Those are the details that will be there. But whereas with respect to that, address will not be there. So recipient will not give all those details practically. That's why address of the recipient and serial number are not mandatory. And also in the same way, signature is also not mandatory for banks, insurance, and financial institutions. And in the same way, instead of issuing a separate tax invoice, he can issue a consolidated tax invoice, whatever the supplies that happens during that particular month. Generally, every time you need to issue a separate tax invoice for every supply. But whereas with respect to insurance, bank, financial institution and NBFC, in those cases, definitely can issue a consolidated tax invoice also at the end of the month. But for that, some conditions are required to be satisfied. They will be there at later, we will discuss them. And next one is GTA. So, just now we discussed in relation to the bank, lesser details are sufficient. Serial number and address of recipient is not mandatory. Now we are discussing about GTA. With respect to GTA, additional details should be there. Apart from the normal details, with respect to GTA, some additional details are required. Sir, what are the additional details that are required here? What is the gross weight of that particular consignment? What are the goods that are going to be transported? What is the place of origin and what is the destination? Who is consignor and who is consignee? What is the vehicle number? And who is the person that is paying the freight and what is his GST number? And other information as per rule number 46. So that means along with the normal details, all these details will be there in GTA issued invoice. Gross weight, details of the goods transported, details of the place of origin and destination, names of the consignor and consignee, registration number of the goods carriage, and GST number of the person liable for paying the tax. All these points will be there. All these points will be there in addition to the normal tax invoice details. And next one is passenger transportation. With respect to passenger transportation, lesser details are sufficient. That means serial number, address of the recipient, signature are not mandatory. Because whatever the e-ticket that was issued by the concerned transport agency, that is equivalent to treated as tax invoice. The ticket is deemed to be the tax invoice, and in that, even though there is no serial number, address of the recipient, generally, if at all you're going to book your ticket, what you will say, what is the origin and what is the destination? You will not write your address. On the ticket, there will not be any address of any passenger. It is also not safe to give the address also, sometimes. That's why majority people will try to avoid the address in detail. So that's why address of recipient, serial number, signature is not required in relation to passenger transportation service. And in the same way with respect to multiplex theatres. With respect to multiplex theatres, there is no need to issue any separate tax invoice. What is the ticket they issue? It is deemed to be the invoice. With respect to multiplex movie theatres, there is no need to issue a separate tax invoice. Whatever the electronic ticket that is mandatorily issued by the supplier is deemed to be the invoice. So whether it is containing the particulars or not. Okay. This is the basic thing you need to remember. And sir, is there any prescribed format for this tax invoice? No, all the GST taxpayers are free to design their own tax invoice format. But the contents should be the same. That means whatever the contents we discussed, those details should be there. But there is no prescribed format. The date should be there above. Sometimes some sellers can keep the date above and some sellers may keep the date below. It depends upon their intention. It is not required that every time everybody should place that point therein only. Okay, so that is the thing. Law requires is that only certain fields are mandatory fields in the tax invoice, and already we discussed those points. If at all those points are there in the invoice, then automatically it is deemed to be a tax invoice. That is the point. And with respect to small petty supplies, with respect to small petty supplies, what we can say is here, there is no need to issue a separate tax invoice. Say for example, generally what is the procedure? Whenever any taxable supply was made, a tax invoice is needed to be issued. So how many number of taxable supplies are there? That many number of tax invoices should be there. But if at all three conditions are satisfied, in that case, we can issue a consolidated tax invoice instead of separate tax invoice. Those conditions are, first one, the value of the supply should be less than 200. Value of the supply should be less than 200. And recipient is a unregistered person. And recipient does not demand the invoice. If all these three conditions are satisfied, in that case, definitely instead of issuing a separate tax invoice, a consolidated tax invoice can be issued at the closure of each day. That is the point mark. So what are the conditions that are required to be satisfied? First one, value of the supply should be less than 200. And the recipient is a unregistered person. And recipient does not demand the invoice. If all these three conditions are satisfied, in that case, what is the position mark? Definitely, there is no need to issue a separate tax invoice. Instead of that, consolidated tax invoice at the end of the day, it can be issued. So, any example for that? Let's say, for example, we are running a stationery shop near a school. Then school children will come to you every hour, or sometimes whenever the break is there, they will ask you. Well, one time just they will come and ask you a pen. Second time they will come for pencil. After that they just will forgot the sharpener. Again they will come back for that. After that they just forgot the eraser. Again they will come for that. Crayons, charts. Every time they will be keep coming. So max to max each time they will purchase some 10 to 20 rupees items. So if at all, as per the law, you are required to issue the tax invoice. How many school children will be there in the school? How many number of times each day they will come to your shop? In that case, practically it is not possible for him to issue the tax invoice each time. That's why to help them, this point is there. The value is less than 200. Second one, recipient is unregistered. School children are unregistered. And third one, they will not demand the invoice at all. They don't know invoice is there at all. So that's why all these three conditions are satisfied now. That's why in those cases, whatever these petty supplies that are made by the stationery shop owner, they can be consolidated into one tax invoice and it will be uploaded in GST common portal. That is sufficient. That is the point what is saying. But this point is not applicable to multiplex movie theaters. Movie theaters are required to issue the ticket, even though at present the ticket rate is not less than 200. But if at all, in multiplex the ticket is less than 200 also, they need to issue a invoice. They need to issue a ticket because it is deemed to be the invoice. That is the point. Okay, the next question is here. Sir, how many number of invoices are needed to be issued? If at all it is e-invoicing, this concept is not applicable. If at all it is not e-invoicing concept, in those cases, definitely what is the position? With respect to supply of the goods, triplicate, 3 copies are needed to be issued. And with respect to services, duplicate, 2 copies are required to be issued. With respect to goods, triplicate, 3 copies are required to be issued. Original for the recipient, duplicate for the transporter, and 3rd copy is for the supplier. Whereas with respect to services, only duplicate, 2 copies are required to be issued. Why? There is no need for transportation in relation to services. That's why original is for the recipient and duplicate is for the supplier. So, with respect to goods, how many number of copies is required to be issued? 3 copies. Whereas with respect to services, 2 copies. Next one is revise the tax invoice. Next concept is here. Sir, what is meant by this? Revise the tax invoice. Let's take the example here. With respect to registration, I just want to recollect a point from there. From the date when you are liable for registration, from that particular date, if you applies for RC within 30 days, even though RC was granted to you subsequently, in that case, what is the position? Definitely, even though RC was subsequently granted to you, the effective date will be the date when you are liable for registration. For example, on September 1st, your turnover crossed the limit. On September 10th, you applied for RC. On September 17th, you got the RC. In that case, even though RC was granted to you on September 17th, the effective date will be September 1st. In those cases, this is the effective date and this is the actual date of RC. In those cases, whatever the supplies that happened between effective date of registration and actual date of registration, we need to again give you invoice. That invoice is known as revised tax invoice. Whatever the supplies that happened between the effective date of registration and up to the actual date of registration, in those cases, again we need to issue a tax invoice. That invoice is known as revised tax invoice. Why there is a need to issue revised tax invoice? Because you know RC was granted to you on September 17th. But on the September 17th, RC was given to you retrospectively from September 1st. That's why whatever the supplies that happened between September 1st, effective date of registration, up to actual date of registration, September 17th, you need to issue a second time invoice. That second time invoices are known as revised tax invoice here. But this type of documents are required to be issued only once in the lifetime of the organization, because RC will be taken only once now. That is the point. The next question is here, sir, if at all 4 supplies are made between September 1st to September 17th, that is effective date of registration up to the actual date of registration. For those 4 supplies, a consolidated revised tax invoice can be issued, or a separate revised tax invoice is needed to be issued. What is the answer for that? The answer for that is, it depends upon which type of supply it is. Say for example, first case, supplier recipient. Supplier is a registered person, recipient is a registered person. Supplier is a registered person, recipient is also a registered person. That means it is a B2B supply. If at all it is a B2B supply, always separate revised tax invoice is needed to be issued. If the supplier is a registered person, recipient is a registered person, and if at all it is a B2B supply, in those cases, what is the position? Always separate revised tax invoice is needed to be issued. Second case, supplier recipient. Supplier is a registered person, recipient is a unregistered person. In that case, if at all it is a intrastate supply, then consolidated revised tax invoice can be issued. If the supplier is a registered person and the recipient is a unregistered person, in those cases, what is the position? If at all it is a intrastate supply, a consolidated revised tax invoice can be issued. Consolidated revised tax invoice can be issued. And whereas supplier is a registered person and recipient is a unregistered person, and the supply is interstate supply, in those cases, what is the position? Definitely depends upon value. If the value depends upon value, this one. If the value is less than or equal to 2.5 lakhs, consolidated revised tax invoice can be issued. If the value is more than 2.5 lakhs, separate revised tax invoice is needed to be issued. State-wise, what I am talking about. Okay. So, what is meant by the revised tax invoice? If the effective date of registration and the actual date of registration are not the same, in those cases, whatever the supplies that happened between those dates, a separate tax invoice is needed to be issued again. Those type of invoices are known as revised tax invoices. Whether consolidated is needed to be issued or a separate one is needed to be issued depends upon, first of all, if, whether it is a B2B supply or a B2C supply. If at all it is a B2B supply, in that case, that means supplier is a registered person and recipient is also a registered person. Always separate revised tax invoice is needed to be issued. And if the supplier is a registered one and recipient is an unregistered one and the supply is intrastate supply, then consolidated revised tax invoice can be issued. If the supplier is a registered one, recipient is an unregistered one, and the supply is interstate supply, then it depends upon value. Value less than or equal to 2.5 lakhs, consolidated. Value more than 2.5 lakhs, separate revised tax invoice can be issued. That is the point. And sir, what is the time limit for issue of this revised tax invoice, ma? What is the time limit for the issue of this revised tax invoice? Within 1 month from the date of RC. In our example, on September 17th, we got the RC. Na? That's why from September 17th, within 30 days, you need to issue the revised tax invoice. Next point, ma, we need to discuss is here e-invoicing. Sir, what is meant by this e-invoicing here? Generally, with respect to e-invoice, what happens is, here invoice is not generated by the website, government websites. First of all, whatever the procedure that was followed by you previously, like Tally softwares or SAPs, whatever the softwares you are using previously, under e-invoicing also, same concept will be applicable. By using those your softwares, accounting softwares, you have to generate the invoice first. Okay. Then those invoice details have to be uploaded on invoice portals will be there. Invoice registration portals will be there, IRPs. Invoice registration portals. In that, there is a prescribed format for that, INV01. In that particular prescribed format, whatever the previous invoice that was generated, all these details will be uploaded. Once all those details will be uploaded, the website will check whether they are valid or not. If it all everything is okay, then invoice reference number will be generated, and along with that a QR code is also generated by the website itself, which is printed on the invoice, and it was sent to the seller in Java format. Seller now have to convert the Java format into PDF, and that PDF will be shared to the recipient. This is the procedure what will happen in e-invoicing. First, as usual, whatever the previous procedure, based on that invoice is generated. Those details are uploaded in INV01 format. If everything is okay, invoice reference number along with QR code will be generated by the website and sent it in Java format to the seller. And seller has to convert it into the PDF and have to share it with the recipient. This is the process what will happen in e-invoicing. So that means e-invoicing is mandatory for everyone? No, ma. First of all, it is applicable to B2B supplies only. E-invoicing is not applicable for B2C services. Second one, even in case of registered persons who are making B2B supplies, if the aggregate turnover is more than 50 crores, in any previous financial year, which is starting from 17-18, the year in which the GST came into enforcement, from that year onwards, in any previous year, if your aggregate turnover exceeds the limit of 50 crores, then you are required to generate the e-invoicing on B2B supplies. So that means every person is required to issue the e-invoice. Answer is yes, except these people. Even though their turnover crossed the limit of 50 crores, these people are not required to generate e-invoicing. Who are those people? First one, special economic zones. With respect to special economic zones, they are treated as outside Indian territory for all taxation purposes. That's why e-invoicing concept is not applicable to special economic zones. In the same way, insurance, bank, financial institutions, NBFCs, they will do huge number of transactions. For them also it is not applicable. And GTA, majorly GTA is there under unorganized sector. So that's why exemption was given to them. Passenger transportation, same point, huge number of transactions. Multiplex theaters, same point, huge number of transactions. So because of all these points, these people are exempted from e-invoicing even though their aggregate turnover exceeds the specified limit. This is the process, invoicing process just now we discussed. Supplier will create invoices on their own systems, but this particular data will be uploaded in INV01 by using invoice registration portals. And invoice registration portal will generate the IRN. Along with that, it will be digitally signed and QR code will be added to that. And the e-invoicing is written to the supplier in Java format. Supplier is now has to convert it into the PDF and share it with the receiver. This is a procedure with respect to e-invoicing. Okay. And in the same way, keep the word says units are not required to generate the e-invoicing, but whereas says developers are required to generate the invoice. What is the difference between says unit and says developer? Generally, says is created in economically backward areas. In those areas, first infrastructure is needed to be developed. The people who will develop the infrastructure there are known as says developers. Once a says was created, the person who starts the organizations there, they are treated as says units. That is the point. Okay. And these are the IRPs, invoice registration portals. www.einvoice1.gst.gov.in, like that, so many points are there. And these are the contents that will be there in the QR code. Supplier GST number, recipient GST number, invoice value, invoice number, date of generation of invoice, what is the invoice reference number, and what is the date of generation of this particular IRN, HSN code. All these details will be there in this particular QR code. Okay. And generally under e-invoicing, there is no concept of issuing the invoice copies in triplicate or duplicate because everything was generated in online. That is the point you need to remember with respect to e-invoicing concept. Okay, ma'am. After the completion of e-invoicing concept, we need to discuss is dynamic QR code. Generally, this particular dynamic QR code is required to be issued on all B2C invoices. B2C means supplier is a registered person and recipient is a unregistered person. And in those cases, if the turnover of that particular person exceeds 500 crores, will have a QR code. Okay, this is the point you should remember here. All B2C invoices issued by the registered person whose aggregate turnover in the preceding financial year from 17-18 onwards exceeds 500 crores will have a dynamic QR code. With respect to B2C supplies only, this particular point will be applicable. So why this particular dynamic QR code was there? In order to encourage digital payments, where the buyer can scan the QR code and he can make the payment from the wallet directly. So simply in order to encourage digital payments, the concept of this dynamic QR code was introduced. Okay. And what are but this dynamic QR code is not applicable to these people, even though their turnover exceeds 500 crores, like insurance, bank, financial institutions, NBFCs, because huge volume of transactions will be there. And GDA, unorganized sector, passenger transportation, huge number of transactions, and multiplex movie theaters, and OIDR service providers. What is meant by this OIDR service providers? Online information database access or retrieval services. Example for that is OTT platforms. With respect to those OTT platforms, what is the position? Definitely they will come under OIDR services. They are not required to issue any dynamic QR code. And same point will be applicable to exports also. In case of exports also, there is no need of dynamic QR code. And what can be the details of this dynamic QR code, ma? These are the details. Supplier GST number, supplier UPI ID, and what is the bank account number and IFSC code, invoice number, date, what is the invoice value, what is the GST breakup there. Okay, all these points will be captured in the dynamic QR code, ma. Okay, ma. The question is here, sir, if at all the dynamic QR code is provided by the supplier, but still buyer wants to pay that amount in cash, is it possible to do so? Yes, ma. The supplier obligation is only to provide the dynamic QR code. Whether to use the dynamic QR code or not is a pure choice of the buyer, ma. So there is no offense if the buyer rejects the amount to pay by the dynamic QR code and he simply wants to pay by the cash, then that is also okay. But there is only obligation on the supplier to provide the dynamic QR code, ma. Okay. Next point is here, bill of supply. Next document is bill of supply, ma. If the supplier is a registered person who is making either composite supply or a or exempted supply, in those cases, what is the document that is needed to be issued by that person, ma? Bill of supply. In two cases, bill of supply will be issued, ma. One is if the person is making exempted supply or if the person is making composite supply. In these two cases, instead of tax invoice, what is the document that will be issued, ma? Bill of supply is the document that will be issued. Sir, what can be the contents of bill of supply, sir? What are the contents that are there in tax invoice? Almost similar details will be there in bill of supply, except tax amount and tax rate, ma. Tax amount and tax rate will not be there, except that the remaining contents or remaining details will be there in this particular bill of supply also. So, say for example, if the person is making both taxable supplies and exempted supplies to one single person, what is the general rule? If at all you are making a taxable supply, invoice is needed to be issued. If at all you are making a exempted supply, bill of supply is needed to be issued. But the problem arises here, you are making both these type of supplies to a single person. In that case, a separate documents for taxable supplies and exempted supplies is needed to be issued, or a single document can be issued. Yes, a single document can be issued. If a registered person who is making taxable supplies as well as exempted supplies to the unregistered person, in those cases, a single document that is known as invoice cum bill of supply can be issued. Invoice cum bill of supply can be issued. Okay, ma'am. Next point is receipt voucher. With respect to receipt voucher, when the receipt voucher is required to be issued, ma'am, if the supplier receives any advance from the recipient, as a evidence of that, the document that is issued by the supplier is known as receipt voucher. Whenever advance is received by the supplier from the recipient, in those cases, as evidence of that, receipt voucher will be issued. Already you know that when you receive advance in relation to goods, there is no need to pay any GST. If you receive advance in relation to service, you are liable to pay the GST. But whereas at the time of receiving the advance, if the rate of tax is not determinable, then what is the tax amount, ma? At the rate of 18% is needed to be paid. If the rate of tax is not determinable, the tax amount at the rate of 18% is needed to be paid. If the nature of supply is not determinable, then it will be treated as interstate supply. At the time of receiving the advance, if the rate of tax is not determinable, then tax should be paid at the rate of 18%. If the nature of supply is not determinable, it is interstate supply. Okay, ma. It is deemed to be interstate supply. This is receipt voucher. And next one is refund voucher, ma. When you receive advance, as evidence of that, receipt voucher is issued. But due to some circumstances, you are unable to make the supply. In those cases, whatever the advance amount that was received, the amount is returned to you. In that case, at the time of returning the money, the document that is issued by the supplier is known as refund voucher. Whenever advance was received, a receipt voucher was already issued, and due to some reasons you are unable to make the supply, a tax invoice cannot be issued. In those cases, a refund voucher will be issued. So, receiving the advance, receipt voucher. Returning of advance money, refund voucher is needed to be given. Next document DC, delivery challan. Generally, if any supply transaction happens, you will issue the tax invoice. But there is a physical movement of the goods for the reason other than supply. It should be accompanied by a document that is known as DC, delivery challan. So, generally the goods which are transported by the reason of other than supply, for example, stock transfers, sale or return basis, in those cases, a tax invoice cannot be issued. For those cases, what should be issued, ma'am? A DC, delivery challan, is needed to be issued. And after that, transportation of the goods for job work. Transportation of the goods for job work. When the goods are actually going to be moving from principal to the job worker or job worker to the principal, the transaction is not a supply. In those cases, what is the position? Definitely. In those cases, a DC is needed to be issued. A DC is needed to be issued. That is the point. And in the same way, liquid gas. Supply of liquid gas, the quantity at the time of removal is not known. That means what is the position? Say for example, liquid gas is nothing but domestic usage gas. At the time of removing it from the concerned gas company, the recipient is not known as specifically. That's why in those cases also a DC is needed to be issued. A delivery challan is needed to be issued. Okay. Whereas the DC will be issued in triplicate, just like in the case of tax invoice. Okay. That means just like the tax invoice, it is needed to be issued in triplicate. In the same way, a DC can also needed to be issued in triplicate. Okay. Sometimes what happens is at the time of removal, DC will be issued. But later on when the goods reach the other party, a tax invoice can be issued. So this is the point with respect to DC. When a DC will be issued, when there is a physical movement of the goods for the reasons other than supply. Second one, transportation of the goods for job work. Third one, liquid gas. In these three cases, definitely DC is needed to be issued. That is the point. After completion of this DC, the next document we need to see is credit note. When a credit note will be issued? When a credit note is needed to be issued? Generally, in four circumstances, a credit note is needed to be issued. When invoice value is more than actual value, tax indicated in the invoice is more than actual tax payable, sales returns, deficiency in the goods. In these four circumstances, a credit note is needed to be issued. What are the cases, When invoice value is more than actual value. Second one, tax indicated in the invoice is more than actual tax payable. Third one, sales returns. Fourth one, deficiency in the goods. In these four cases, what is the position? A DC is needed to be issued. A credit note is needed to be issued. Sir, when invoice value is more than actual value, what does this mean? Say for example, initially we just ordered for 100 cement bags, but later on we decided that only 70 is required for us. So at the time of sending those bags, we asked him to send only 70. Here invoice was generated for 100, but the supplied quantity is only 70. For that 30 quantity, we need to issue a credit note. In the same way, tax indicated in the invoice is more than actual tax payable. Let us assume that I just went to a shop. At that particular shop, I purchased one item. The tax rate is needed to be 18%, but by mistake he charged it 28%. That's why I questioned him. So for this particular product, only 18% is needed to be charged now. In that case, what is actual tax payable? 18%. What was the tax that was charged in the invoice? 28%. What is the difference? 10%. For the 10%, a credit note is needed to be issued. Third one, already you know that, sales returns. Fourth one, defective goods or deficiency in the goods. In all these cases, a credit note is needed to be issued. By whom? Supplier. Credit note or debit note. All these documents are always needed to be issued by the supplier only. This is the point. Next point is debit note. A debit note is needed to be issued in two cases. One is invoice value is less than actual value. Tax indicated invoice is less than actual tax payable. In these two cases, a debit note is required to be issued. Invoice value is less than actual value. Tax indicated in invoice is less than actual tax payable. In these two cases, a debit note will be issued. The point is here, when a credit note is issued, generally, the output tax liability of the supplier will be reduced as well as ITC of the recipient will also be reduced. When a debit note is issued, it will increase the output tax liability of the supplier as well as it will increase the ITC of the recipient also. That is the point. And in the same way, registered supplier, serious ma? Only the supplier of the goods will issue debit note or credit note to the recipient. Sir, these debit notes or credit notes can be issued on a consolidated basis, or for each invoice, a separate debit note or credit note is required to be issued. Definitely, the registered person can issue the consolidated debit notes or consolidated credit notes in respect of multiple invoices in a financial year without linking the same to the individual invoices. That is permitted as per our GST law. The next document we need to see is e-way bill. With respect to e-way bill, what is meant by the word e-way bill? Electronic way bill. With respect to this electronic document e-way bill, it is the electronic document that is generated on the GST portal or a separate portal as evidence of physical movement of the goods. Okay. So that means in order to attract the e-way bill concept, two conditions are needed to be satisfied. Two conditions are needed to be satisfied. One is physical movement of the goods should be involved. Second one is involved consignment value is more than 50,000. If at all these two conditions are satisfied, then e-way bill is mandatory. If at all two conditions are satisfied, in those cases, definitely e-way bill is mandatory. What are the two cases where e-way bill is mandatory? First one, what is the first one? Physical movement of the goods shall be involved. Second one, involved goods value shall be more than 50,000 rupees. If at all these two conditions are satisfied, in those cases, e-way bill is mandatory. In those cases, e-way bill is mandatory. That is the point. Okay. Sir, that means if the goods are sold, then only e-way bill is required. If the goods are not supplied, say for example, it is a stock transfer. In those cases also, e-way bill generation is mandatory. Yes, the reasons can be, the physical movement can be by the reason of supply or the reasons other than supply. In both cases, e-way bill is required to be generated because e-way bill is required to be generated based on the physical movement of the goods, but not whether the goods are supplied or not. That's why if at all it is a supply or a reason other than supply, in both cases, definitely if the physical movement was involved and involved goods value is more than 50,000, in those cases, definitely we are required to generate the e-way bill. But even though the consignment value is less than 50,000, in two cases, you are required to generate the e-way bill. What are those two cases? One is job work. Second one is handicraft goods. In these two cases, even though the consignment value is less than 50,000 rupees, generation of e-way bill is mandatory. Okay, The persons in case of interstate transfer of the goods by the principal to the job worker and handicraft goods by the person exempted from obtaining the registration is required to generate the e-way bill even the consignment value is less than 50,000. What is the general rule, ma? If the consignment value is more than 50,000, then only you are required to generate the e-way bill. But even though the consignment value is less than 50,000, but still in two cases you are required to generate the e-way bill, ma. First one, principal to the job worker, job work case, and second one, handicraft goods. With respect to the job work or handicraft goods, in those cases, what is the position, ma? In those cases, what is the position, ma? In those cases, definitely, even though, if at all it is the interstate physical movement, even though it is the interstate physical movement, you are required to generate the e-way bill. Sir, here just now you said that if the consignment value is more than 50,000, you are required to generate the e-way bill. The question is here, how to compute that 50,000? That means GST, let us assume that the goods value is 49,000 and GST is 2,000. In that case, e-way bill is mandatory or e-way bill is not mandatory? Mandatory, because consignment value includes GST. Consignment value includes GST. Therefore, 49,000 plus 2,000, it will be 51,000. In those cases, definitely we are required to generate the e-way bill. Sir, a person is transporting, let us assume that with respect to a single person, two products are actually there, product A and product B. With respect to product A, it is 27,000 and product B, 27,000. And both these goods are actually sent by one goods carriage. In that case, e-way bill is required. Yes, ma, we need to take the aggregate here. 27 plus 27, because both belongs to one person only. Na? What is the total consignments value here? 54,000. In that case, e-way bill is required or e-way bill is not required, ma? Definitely e-way bill is required. Sir, if at all in that product B is exempted, in that case, e-way bill is mandatory or not mandatory? E-way bill is not mandatory. E-way bill is not mandatory. So, even though it is exempted supply, what is the position, ma? Definitely, if at all it is exempted supply, that value will be excluded while computing the consignment value. In our example, if the product B is exempted, we exclude the 27,000. If the remaining amount exceeds 50,000, then e-way bill generation is mandatory. But in our example, it is only 27,000. Therefore, you are not required to generate the e-way bill. Next point is, sir, in which way we can generate the e-way bill there? By using website, official websites of the government, or through mobile application, or from the registered mobile, SMS. If at all you want to generate bulk e-way bills, then there will be separate tools and softwares by using them. You can generate the e-way bill. Sir, what is the form number for generation of e-way bill? EWB01 is the prescribed format for generation of e-way bill. Okay. Once whatever the details that are required to be filled in EWB01 are satisfied, then a unique e-way bill number will be generated. Okay, ma. In EWB01, two parts will be there, ma. Part A and Part B. Part A and Part B. Generally, Part A will contain the details of similar to invoice details, and Part B will contain the vehicle details. Part A will contain the invoice details, and Part B will contain the vehicle details. Practically what happens is, Part A details will be filled by the consignor or the supplier because invoice is available with him, and now the Part B will be endorsed to the transporter. There the transporter will enter the vehicle details, thereby filling Part B. Then only a valid e-way bill is generated and e-way bill number is generated. Okay. The next point is here. Sir, if at all goods are actually shifted from one conveyance to another conveyance, For example, initially we just generated the e-way bill, but due to some reasons, we are unable to carry the goods in the same conveyance. There is a change in the conveyance. In that case, a separate e-way bill or new e-way bill is required to be generated, or it is not required. Definitely, what is the answer here? You can update the Part B details, vehicle numbers, any number of times. But with respect to Part A, you cannot modify the data. But if at all it is with respect to Part B, vehicle details, those details can be updated any number of times. There is no need for a separate new e-way bill. Okay, ma'am. Sir, what about Part B? If at all the goods are transported through railways, if the goods are transported to railways, then the transporter will not fill Part B. In those cases, consignor or consignee will fill the Part B. In the same way, railway department will not deliver the goods to you unless e-way bill is required to be produced at the time of delivery. So just now you said that practically Part A will be filled by the supplier and it will be endorsed to the transporter with respect to transportation by road, and Part B will be filled by the transport. Is there any validity period or is there any time period in which the Part B is required to be filled? Yes, ma'am, 15 days. Once Part A was filled, then from that particular date, generally within 15 days, you are required to fill the Part B. Sir, if at all any details are wrongly entered, in those cases, what is the position? If those details are wrongly entered in Part A cannot be modified. The only option left to you is you can cancel the e-way bill, and in that place you can generate the new e-way bill. But with respect to Part B, definitely can modify it any number of times. Okay, ma. And the point is here, sir, what is the time limit for cancellation? From the date of generation of that e-way bill, within 24 hours, you need to cancel it. Within 24 hours, you need to cancel it. So in the same way, the person who generated that e-way bill have to cancel that within 24 hours. But sometimes you may enter a wrong recipient number. Supplier don't know that whether that happened. Generally what happens is, with respect to once e-way bill is generated, it will be communicated to the supplier, recipient and transporter. So if wrong recipient number is quoted, then whose recipient number is quoted there, then the information will be sent to that particular person as a recipient. Then he will have the option to either accept it or reject it within 72 hours from the date of receiving the communication. If he accepts it, that is okay. Otherwise, we can reject that within 72 hours. That is the point. Okay. So, generally, e-way bill is not valid without vehicle number. Just now I discussed that. And this vehicle number can be updated any number of times. That is the point. So, if the physical movement is caused by unregistered person, in that case, what is the position, sir? That means if the consignor is the unregistered person, in that case, consignee is required to generate the e-way bill. Sir, consignee is also a unregistered person, sir. In that case, transporter is required to generate the e-way bill. That is the point. When the movement is caused by unregistered person, either in his own conveyance or hired one or through transporter, compulsorily the transporter is required to generate the e-way bill. Sir, in order to treat it as a valid e-way bill, both Part A and Part B are required to be filed now. Yes, then only it is a valid e-way bill. But in two circumstances, even though filling Part A is sufficient, so Part B is not required. That means furnishing of Part B is not required in two cases. What are those two cases? From consignor place to transporter place, if the distance is up to 50 kilometers, from the place of transporter to the place of consignee, if the distance is up to 50 kilometers, in those cases, definitely what is not required, ma? What is not required? Definitely part B, filling of part B or furnishing of part B is not required. When consignor place to transporter place, the distance is less than 50 kilometers, less than or equal to 50 kilometers, and from the place of transporter to the place of consignee, the distance is up to 50 kilometers. In those cases, there is no requirement of furnishing part B. Generally, who is required to generate the e-way bill, ma? The person who causes the physical movement of the goods is required to generate the e-way bill. If the supplier is the person who is arranging the transport, then supplier, if at all is a registered person, is required to generate the e-way bill. If the recipient arranges the transport, then recipient has to generate the e-way bill. If at all the person who is causing the movement is the unregistered one, then the other party who is the registered person is required to generate the e-way bill. But neither the consignor nor consignee generates the e-way bill, and the goods value is more than 50,000. In those cases, transporter is required to generate the e-way bill. And the next point is consolidated e-way bill. What is meant by this consolidated e-way bill? Let us assume that in a particular truck, we are transporting 200 iPhones, iPhone 14, we are transporting them. Each phone generally will have more than 50,000 value, and it's actually going to be supplied to different people. In that case, 200 e-way bills are required to be generated, or a single e-way bill is sufficient. We are required to generate 200 separate e-way bills because the customers are different people. But to carry all these e-way bills physically is a difficult task for the transporter. In those cases, once those separate e-way bills are generated, in those cases, what is the position, ma? Definitely, the transporter can consolidate those 200 separate e-way bills into one trip sheet like document. That one is known as consolidated e-way bill, and it will bring transportation convenience for the transporter, ma. That is the point. The transporter carrying multiple consignments of various consignors and consignees in a single vehicle, it can be generated and consolidated, okay, ma, and carry consolidated e-way bill instead of carrying separate documents for each consignment. That is the point. Next point, ma. Sir, what is the validity period of this e-way bill? If here, what is the validity period of e-way bill? It will depends upon whether it is a over-dimensional cargo or a normal cargo. Over-dimensional cargo means, in simple language, heavy vehicles, as well as multimodal shipment in which at least one leg involves transportation by ship. What is multimodal shipment, ma? To certain extent by road, after that by train, after that by ship. If the mode of transport changes, it is known as multimodal shipment. In that multimodal shipment, if some part of the journey involved therein is by ship, in those cases, as well as over-dimensional cargo, heavy vehicles, for every 20 kilometers or part thereof, 1 day validity will be given. What is the validity period of e-way bill, ma? In relation to over-dimensional cargo or a multimodal shipment where one leg involves transportation by ship, in those cases, what is the position, ma? For every 20 kilometers or part thereof, 1 day validity period will be given. Let's say Guntur to Vijayawada is 30 kilometers distance, ma. If at all it is a over-dimensional cargo, what is the validity period of that e-way bill? 20 kilometers or part thereof, 1 day. So 20 plus for 10 additional kilometers are there, na? For that also 1 day, ma. Total 2 days will be there if at all it is a over-dimensional cargo. And other than over-dimensional cargo, that is with respect to normal cargo, for every 200 kilometers or part thereof, definitely 1 day validity period will be given. Simply, if at all it is a over-dimensional cargo or a multimodal shipment where 1 lakh involves transportation by ship for every 20 kilometers or part thereof, 1 day validity period will be there. If at all it is a normal cargo, for every 200 kilometers or part thereof, 1 day validity period will be given. So that means every person is required to generate the e-way bill, or there any exception to that? Yes, ma, there are few exceptions like these notified goods, gas, kerosene, postal baggage, perils, jewelry, currency, packers and movers, used household and personal effects. With respect to them, generation of e-way bill is not required. And when the goods are transported in a non-motorized vehicle, then also e-way bill requirement is not there. And in the same way, exempted goods, with respect to exempted goods, you are not required to pay the GST. When you are not required to pay the GST, there is no need to generate the e-way bill also. Same point, non-taxable supplies like liquor, crude petroleum, diesel, petrol, natural gas and ATF. With respect to them, even though involved, all these things comes under non-taxable supplies now. Therefore, there is no need to generate any e-way bill. In the same way, Schedule 3 items which are covered under 7 subsection 2 negative list of GST, they are treated as out of scope supply. On those items also, you are not required to generate any e-way bill. In the same way, physical movement is caused by Defense Ministry. And in the same way, where the consignor is government and the goods are transported by train, then also e-way bill is not required. When empty cargo containers are being returned, those cases also e-way bill is not required. And in the same way, from the factory to weighbridge, if the distance is only 20 kilometers, in those cases also e-way bill is not required. These are the cases where e-way bill is not required. Next point is blocking of e-way bill. When e-way bill generation can be blocked by the department. So what is when the e-way bill generation will be blocked, ma? Once e-way bill generation was blocked, then definitely they are prohibited from generating the e-way bills, ma. When it will happen? With respect to a person who is following section 9, that means normal scheme, then he did not file GSTR 3B for a continuous 2 months. GSTR 3B was not filed for a continuous period of 2 months. If at all you are following a composition scheme, then for continuous 2 quarters, CMP 08 was not filed. And whereas GSTR 1 is not filed for any 2 months, in those cases, your e-way bill generation can be blocked by the department. With respect to GSTR 3B, it was not filed continuously for 2 months. And CMP 08 in relation to composition scheme, it was not filed continuously for 2 quarters. And GSTR 1 was not filed for any 2 months. In those cases, e-way bill generation can be blocked. Then, if at all the commissioner feels that sufficient cause is there, then definitely can unblock the generation of e-way bill. So, these are the concepts you should remember in respect to chapter number 8. So, in chapter number 8, you should keep more focus on debit notes, credit notes and e-way bills. Okay, then an invoice also. These are the important areas in chapter number 8. They ends chapter number 8. Okay, ma. Now we need to discuss about the topic of payment of tax, ma. Whereas with respect to payment of tax, first things we need to remember is what is meant by the word output tax and what is meant by the word input tax. What is meant by the word output tax, ma? The tax that is needed to be paid on the taxable supplies, either by the taxable person or by the agent of the taxable person, is known as output tax. In simple sense, the tax that is needed to be paid on outward supplies is known as output tax. But it excludes the tax that is needed to be paid under RCL. Because under RCM, who is liable to pay the GST, ma'am? Recipient. That's why it will not be included in the output tax of recipient. It will be excluded from the output tax of recipient. And next one is input tax. What is meant by the word input tax, ma'am? What is meant by the word input tax here? The tax that is paid on inward supplies. The tax that is paid on inward supplies. What is meant by the word inward supplies, ma'am? Purchases in our simple language. Sir, whether it is CGST or SGST, what can be treated as input tax? Whether it is CGST, SGST, UTGST, whatever the GST you just pay on inward supplies, it is allowed as input tax. Sir, even the tax that is paid on imports is also allowed as input tax. Yes. Even the tax that is paid on imports, IGST, is allowed as input tax. In the same way, what is the tax payable under RCM is also input tax to the recipient. The one and only tax that was excluded from this input tax will be the tax paid under composition scheme. The tax paid under composition scheme. That means the tax which you will pay as per section 10 composition tax will not be treated as input tax. Why, sir? The tax is not collected from the recipient. Therefore, that amount is not allowed as input tax to the recipient. Next point is, okay, the tax that is needed to be paid by the taxable person on outward supplies is known as output tax. The question arises here, what is meant by the word taxable person? The taxable person means the person who is registered or liable to be registered is known as taxable person. What is meant by the word registered person? That means the person who is registered either under section 22 or under section 24. That means a normal registered person, as well as it covers voluntary registered person also. Even though he is not liable for registration, but still he applies for RCMA. Those type of persons are known as voluntary registered persons. So whether he is a normal registered person or he is a voluntary registered person, he is a registered one. And the person liable to be registered means, what is the point, ma'am? Even though he is liable for registration as per section 22 or as per section 24, but he does not apply for RC. Those type of people are also treated as taxable person. Even though you are not registered, but still you are liable to be registered, then also you are a taxable person. This is the point, ma'am. And what are the modes of payment of this particular GST means here? Under GST regime, we need to pay so many number of taxes, ma'am. CGST, SGST, IGST, UTGST, like that. Okay. For the payment of this, in our GST, there are three types of ledgers are there, ma'am. There are three types of ledgers that are there. Electronic cash ledger, electronic credit ledger, and electronic liability register. Or electronic liability ledger, generally it will be called as electronic liability register. So for the payment of GST, there are the three mechanisms. Generally, electronic liability register will reflect the total tax liability. And whereas electronic credit ledger will reflect the ITC balance. And after setting of this particular ITC balance, what is the remaining amount that will be there? It will be paid through electronic cash ledger. This is the process how the things will happen with respect to this electronic ledgers concept. So what is meant by the word e-ledger here? Generally it will reflect the output tax liability as declared in either GST or 3B or any show cause notices are issued by the department. Then the demands that are there from the department, all these amounts are debited in the electronic liability register. Generally, electronic liability register will reflect the payables and the credit side will reflect the paid amounts. So now we are discussing about e-ledgers. Whereas with respect to e-liability register, generally it will reflect the output tax liability as declared in GSTR 3B or as per 73 or 74 if the department issues show cause notice, all those amounts are reflected in electronic liability register. Generally, the debit side will reflect the payables in the electronic liability register and credit side will reflect the paid amounts. The amounts will be paid by using either electronic cash ledger or electronic credit ledger. So what does this electronic credit ledger deals with? IDC availed on self-assessment in GSTR 3B shall be credited. What is meant by the word assessment? Determination of tax payable is known as assessment. Self-assessment means, what is meant by the word self-assessment? That means how much amount of the tax that is needed to be paid by the, how much amount of the tax that is needed to be paid by the seller. Sorry, how much amount paid by the seller means supplier. That amount will be self-determined by himself. It is known as self-assessment. Generally, with respect to IDC, self-assessment will be done in GSTR 3B. Based on GSTR 3B, how much IDC that can be claimed by him will be reflected in electronic credit ledger. And next one is electronic cash ledger. We can compare this electronic cash ledger to the Paytm wallet, because there can't be direct amount that will be there in the Paytm wallet. We need to transfer the balance from our bank account. In the same way, in order to deposit the money in the electronic cash ledger, the amount is needed to be deposited. The amount is needed to be deposited. Okay, ma'am. The amount is needed to be deposited by the concerned taxable person, ma'am. When the amount is deposited by the taxable person, it will be shown as a debit balance or a credit balance in the electronic cash ledger, ma'am. When the amount is deposited in electronic cash ledger, whether it shows a debit balance or a credit balance. Credit balance, just like our Paytm wallet, that is the point. Okay. So when the money is deposited by the taxable person, the amount is credited to the electronic cash ledger. In the same way, whatever the TDS or TCS that was deducted will be also be credited to the electronic cash ledger. And after that, whatever the amount that was utilized for the payment of taxes, that amount will be debited. That amount will be debited. But whereas with respect to electronic cash ledger and electronic credit ledger, there is fundamentally a difference. Electronic credit ledger balance, that is ITC balance, that can be used only for the payment of taxes. But in the GST regime, not only the taxes, but also sometimes you need to pay interest, penalty, late fee, like payments. But your electronic credit ledger balance can be used to make only the tax amounts only. But whereas with respect to electronic credit ledger balance, it can be used to pay tax, interest, penalty, late fee, or whatever the amount that is in relation to GST, that amount can be paid through electronic cash ledger. What is the difference between electronic cash ledger and credit ledger, ma'am? Electronic credit ledger balance can be used to pay the output tax only. But whereas electronic cash ledger balance can be used to pay tax, interest, penalty, late fee, or whatever the amount in relation to GST, you can pay by using electronic cash ledger. That is the point. Our next point is here. Sir, how to deposit the money in the electronic cash ledger? How to deposit the money in the electronic cash ledger? The money can be deposited in the electronic cash ledger either through internet banking, debit card or credit card, NEFT or RTGS, or OTC, over the counter. Whereas with respect to internet banking, debit card or credit card, NEFT or RTGS, without any limit, you can deposit the money. But whereas with respect to OTC, over the counter, you can deposit only up to 10,000 rupees per challan per tax period. Up to 10,000 rupees per challan per tax period. That is the point. Okay. So, sir, that means whether it is internet banking, debit card or credit card, NEFT or RTGS, you can deposit any amount in the electronic cash ledger without any limit. But whereas with respect to OTC, over the counter, you can deposit up to 10,000 rupees per challan per tax period. What does this mean? Per tax period means if at all you are following section 9, in those cases, what is the position? Tax period means the monthly. If at all you are paying tax under section 10, tax period means the quarterly. It depends upon normal scheme monthly, composition scheme quarterly. You can deposit over the counter up to 10,000 rupees only. Sir, are there any exception to this OTC, over the counter 10,000? Yes. First point is tax that is to be paid by the government departments itself. Say for example, AP tourism was there, ma. With respect to AP tourism, generally resorts will be there in relation to AP tourism. When you stay in those resorts, you need to pay the rent along with GST. Here the rent is collected by the AP tourism department, which is a government department, and it will be paid to the GST department. Here tax is going to be paid by one government department to another government department technically. That's why in those cases, even though it is more than 10,000 rupees over the counter, that is allowed. That is the first point. And second one, during recovery proceedings, any movable or immovable properties are sold by the proper officer. Those amounts can be deposited over the counter even though it is more than 10,000 rupees. During the recovery proceedings, the business assets as well as personal assets of the registered person will be sold. Okay, if at all those items are sold, then that particular money which was realized by way of sale of those assets can be deposited over the counter even though it is more than 10,000 rupees. In the same way, during investigation, any amounts are needed to be paid, or any ad hoc deposits, means temporary deposits that are needed to be made before the appellant authorities or like that. In those cases, even though it is more than 10,000 rupees, but still it can be deposited. That is the point, ma. You should remember. Okay. So these are the exceptions. What are the exceptions, ma? For over the counter payment, what is the first one? When GST is needed to be paid by the government departments. Second one, during recovery proceedings, when movable or immovable properties are sold, that money can be deposited OTC more than 10,000 rupees, or during any investigation or any ad hoc deposit is made. In those cases, even though the amount is more than 10,000 rupees, but still it is allowed. So, whereas with respect to electronic ledgers, so in the electronic cash ledger, the major heads and minor heads are like this, ma. Whereas with respect to electronic cash ledger, there are four major heads, ma. IGST, CGST, SGST, and cess. And in the same way, every major head is divided into five minor heads, ma. Tax, interest, penalty, late fee, and others. In electronic cash ledger, there are four major heads, ma. IGST, CGST, SGST, and cess. And whereas with respect to every major heads, there are five minor heads, ma. Tax, interest, penalty, late fee, and others. Whereas with respect to this, say for example, we deposited 10,000 rupees in IGST, ma. We utilized only 3,000 rupees. Now, is it possible to transfer that particular 7,000 rupees to CGST? Previously, it is no. At present, it is yes. That means cross utilization of funds across major or minor heads. Now, it is possible. Previously, cross utilization is not possible, ma. But nowadays, cross utilization of funds between minor and major heads is now possible. That is the point you should need to remember, ma. And whereas to deposit the money in the electronic cash ledger, no physical chalanas are allowed, ma. It is mandatory to generate the challans online. So there is only one challan for all taxes, late fee, penalty, interest, and other payments. Definitely it will bring somewhat of convenience to the taxpayers, ma. There will not be different forms. For CGST different form, SGST different form, late fee different form. It will not be like that. So there will be a single challan for all types of taxes, late fee, penalty, and etc. Whatever the amounts you need to pay in relation to GST, for all those payments, a single challan is prescribed. And next one is, once a challan is generated, it is valid for 15 days. In these 15 days, you can make the payment to the government. Okay. The question arises here, Say for example, sir, we issued check on, say for example, September 29th. But whereas the money was credited to the government account on October 3rd, the question arises here, what is the date of payment to the government? The date that is issued, the check was issued September 29th, or the amount that was credited to the bank account, that is October 3rd. What will be the date of payment, ma? October 3rd will be the date of payment. The amount that is the date of credit of amount in the account of government. That is the point we need to remember, ma. And already I told you that ITC balance can only be utilized for the payment of output tax liabilities only. It can't be used to pay interest, penalty and late fee. But whereas with respect to electronic cash ledger balance, that amount can be used to pay any amount in relation to GST. Once the amount was paid, CPIN will be generated, ma. Common Portal Identification Number. After that, CIN, when successful a credit of the amount, CIN will be generated. That is a Challan Identification Number, which is a 17-digit number. That is a CPIN of 14 digits plus 3. Total 17 digits it will be there, ma. That is the point you need to remember. And next point is here, what is the order of discharge of tax? That means in the electronic credit ledger, definitely what is the position, ma? So many number of output tax liabilities will be there, na? In that case, what is the order of discharge of those output tax liabilities? The order of discharge of these output tax liabilities will be, first point, whatever the self-assessed tax and other dues for the previous tax periods, self-assessed tax and other dues for the current tax period, any other amount payable including the demand determined under section 73 or 74 are to be discharged. This is order of priority, ma. That means while making the payments, first of all, say for example, we are there in September month. So in the September month, first we need to see whether any August month payments are pending. August month GSTR 3B payments are pending. Then we need to make the payment with respect to previous tax period amounts. That is in our example, August. So still there is a surplus balance. In that case, what is the position? If at all there is a surplus balance, in those cases, that amount can be used to pay current month. September month, GSTR 3B self-assessment taxes. Sir, still surplus amount is there, sir. In that case, if the demand amounts that are there by the department, by issuing show cause notices either under section 73, normal cases, 74, fraudulent cases. Whatever the amount that is demanded by the department as per 73 or 74, those are needed to be paid, ma. So what is the order of priority, ma? First one, previous tax period amounts are needed to be paid, self-assessed taxes. What is meant by the word self-assessed tax, ma? The tax that is declared in GSTR 3B is known as self-declared tax. Whatever the self-assessed tax or self-declared tax in the previous tax period, that means whatever the taxes you just shown in the previous GSTR 3Bs, that amount is still pending, then what is the position, ma? Definitely we can use it. Okay. So we need to pay that amount. After paying that amount, any surplus amount is there, you need to use that amount for current tax period. Still any surplus is there, department demand amounts are there, by issuing show cause notices, we can use that amount to pay the department demand amounts. This is the order of discharge of the tax. Our next one is here, interest on delayed payment of tax. This is the one and only section that was important from the examination point of view in this payment of tax. With respect to section 50 here, interest on delayed payment. Generally, what is the due date of payment of tax, ma? What is the due date of payment of tax? With respect to due date of payment of tax, what is the position, ma? If at all you are paying GST on a monthly basis, on or before next month 20th, if at all you are making payment on a quarterly basis as per section 10, in those cases, quarter ending next month 18 is the due date of making payment of taxes. If the tax is not paid on or before those due dates, then definitely as per section 50, you are liable to pay the interest amount. Previously 24% is also there. At present, only 18% rate of tax is there. Interest on delayed payment of tax, 18% per annum for a period remaining unpaid. Okay, ma. Generally, you need to pay the gross amount, ma, but delayed return, you need to pay the net amount. Say, for example, what is the rate of interest, ma? 18% per annum. From which date up to which date you need to pay that amount? From the after the completion of the due date, next day onwards, up to the date of payment, you are required to make the interest payment. Okay, ma. And second one, sir, interest is needed to be paid on gross amount or interest is needed to be paid on net amount. What is the answer? What is meant by the word gross amount and what is meant by the word net amount, ma? Let's say, for example, 10,000 rupees is output tax liability, ma. 10,000 rupees is output tax liability. Sorry, output tax liability. And 2,500 rupees IDC balance was there. Okay. In that case, what is the gross liability, ma? 10,000. What is the net liability, ma? 7,500. The question arises here is interest at the rate of 18% is needed to be paid on 10,000 rupees gross liability or 7,500 rupees net liability. What is your answer, ma? It depends upon when the return was filed. Say, for example, return was filed on or before due date, but tax payment was not done. Return was filed, but no tax payment was done for that period. In those cases, you are liable to pay the GST on the gross amount. But whereas return was also not filed, that means tax was not paid. Along with that, return was also filed belated. In those cases, what is the position, ma? You are required to pay the interest on net amount. That is the difference. I am telling you once again, what is the point, ma? Return was filed within the due date, but the tax payment was not done. In those cases, you are liable to pay the GST on gross amount. Okay. And along with tax payment, return filing was also delayed. In those cases, you are liable to pay the interest only on the net amount. I am repeating this sentence once again. That is the reverse scenario what the government takes. Okay. I am repeating this sentence once again. Return was filed. Okay, but payment was not done. In those cases, you are liable to pay the interest on gross amount. Return as well as payment, both are delayed. In those cases, you are liable to pay the interest on net amount. That is the thing you need to remember, ma, with respect to section 50. There ends chapter number 9. Okay, ma. Now we are going to discuss about the last chapter in our GST marathon. That is 10th chapter, ma, returns. So with respect to returns, what is the purpose of GST returns, ma? Or why the GST returns are filed? GST returns helps in the determination of tax liability of the person filing the return, as well as the person with whom he enters into taxable activities. Those tax liabilities can also be determined by using these returns, ma. So returns helps in determination of tax liability of the person who is filing the return, as well as the person with whom the farmer has entered into taxable activities. Okay, to determine their tax liability also, returns are needed, ma. Let's say, for example, X sold some goods to Y, ma, whereas X is required to file GSTR1. When X is required to file the GSTR1, his sales data will be auto-populated in recipient's GSTR2A, thereby enabling to get the ITC based on the statement that is GSTR2B. Okay. With respect to that, so GST return helps in the determination of tax liability of the person who is filing the returns, as well as with whom he enters into taxable activities. Okay. Those tax liabilities can also be determined by using the returns, and we are discussing the example with respect to Mr. X sold the goods to Mr. Y here, and Mr. X files GSTR1. Thereby, his sales data will be revealed to the department. How much output tax liability he needs to pay can be verified based on the data that is there in GSTR1. When this data is auto-populated in recipient, that is vice account in GSTR 2A, thereby what are the eligible purchases, how much ITC that can be claimed, can be generally determined by the department, except in few cases. So how much ITC is claiming, based on that, how much amount you need to pay cash can also be decided. Okay. Our next point is here. These are the list of the returns here with respect to these returns. First one, you need to file this GSTR1. Whereas with respect to GSTR1, it is a monthly statement of outward supplies. In our simple language, sales data, but we can't call them as sales in our GST language. They will be called as outward supplies. But in simple sense, in order to make you understand those terms, I am telling you in simple terms there. So monthly statement of outward supplies of the goods or of the services. And who is the person that is required to file the GSTR1? Every registered person as per section 9, including CTP, casual taxable person, is required to file the GSTR1. Sir, what is the date of filing this particular GSTR1? 11th day of the next month. That means, say with respect to September month, what is the due date of filing GSTR1? Next month 11th, that is October 11th month. October 11th. And sometimes, if at all you opted for QRMP scheme. What is meant by this QRMP scheme? Quarterly return monthly payment scheme. Here, you need to pay the GST on monthly basis. But whereas you can file the returns on quarterly basis. That particular scheme is known as QRMP scheme. With respect to QRMP scheme, GSTR1 can be filed on a quarterly basis, that is the 13th day of the month succeeding the quarter. With respect to first quarter, April, May, June, you are required to file the GSTR1 on July 13th. With respect to second quarter, July, August, September, you are required to file it on October 13th. Whereas the third quarter, October, November, December, you are required to file it on January 13th. And Jan, Feb, March, with respect to that, April 13th. If at all you opted for QRMP scheme. And next return is here, GSTR 3B. If at all you have not opted for QRMP scheme, then monthly return is filed. If you opted for QRMP scheme, then quarterly GSTR 3B is needed to be filed. And who are the persons that are required to file GSTR 3B? Every registered person, including the CTP. What is the due date of GSTR 3B? Next month, 20th. With respect to September month, what is the due date of GSTR 3B? October 20th. If you opted for QRMP scheme, then you are required to file GSTR 3B on a quarterly basis. That too, quarter ending next month, 22nd or 24th, depending upon the state, those dates may change. Next return is GSTR 9, which is the annual return. Generally, with respect to the financial data, you are required to file this annual return. Every registered person except these ISDs, TDS deductors, TCS collectors, and NRDPs, generally these people have some special returns with respect to them. That's why they are not required to file this annual return. And what is the due date of filing this annual return, GSTR 9? 31st December of the next financial year. 31st December of the next financial year is the due date of filing GSTR 9. Let's say, for example, with respect to this GSTR 9, current running financial year is 22-23. With respect to 22-23 financial year, GSTR 9 is needed to be filed on or before December 31st, 2023. Okay, ma'am. And with respect to composition dealers, they are required to file 3 returns, GSTR 4, CMP 08 and GSTR 9A. Initially, you will start with the CMP 08 because under composition scheme, you are required to make the payment of tax on a quarterly basis. Along with that, you are required to file a quarterly statement ma. That statement is known as CMP 08. And this is needed to be filed 18th day of the month succeeding the quarter. That means what is the position ma with respect to that? Let's say for example, with respect to first quarter, April, May, June, July 18th is the due date ma. Second quarter, July, August, September, October 18th is the due date, October, November, December, January 18th is the due date, and Jan, Feb, March, April 18th will be the due date ma. That is the thing. And you need to file GSTR 4 also. With respect to GSTR 4, it is nothing but a summary of all these CMP 08s practically. It is needed to be filed on or before 30th April of next financial year ma. Okay, and one annual return is also required to be filed by this composition supplier, that is GSTR 9A. Just like GSTR 9, the due date of filing this GSTR 9A will be 31st December of the next financial year. For others, generally GSTR 5 and GSTR 10 ma. With respect to GSTR 5, it is a monthly return, and every registered NRDP is required to file this GSTR 5 ma. And what is the due date of filing this GSTR 5? 20th day of the next month or within 7 days after expiry of registration, whichever is earlier. Let's say for example, on April 1st, with 15 days validity, RC was granted to you. In this case, what is the due date of filing this GSTR 5? So, next month 20th, with respect to April, what is the next month ma? May 20th. May 20th or from the date of expiry of RC within 7 days, that is 15th, 22nd, April 22nd, or May 20th, whichever is April 22nd or May 20th, whichever is earlier ma. April 22nd is the due date of filing this particular GSTR 5. Okay ma. GSTR 5 is a monthly return which is needed to be filed by NRDP, non-resident taxable person, and it is required to be filed on next month 20th or the date when the RC was expired from that particular day 7 days, whichever is earlier. Next one is GSTR 10, and you are required to file the final return when your RC is surrendered or cancelled by the department. Okay sir, from which date you need to file this particular GSTR 10 final return? If at all, what is the effective date of cancellation? That effective date of cancellation or date of order of cancellation, whichever is latter date, from that particular date, within 3 months, you are required to file this final return. What is the point ma? From the date of cancellation, that means effective date of cancellation, or from the date of order of cancellation, whichever is latter date, from that particular date within 3 months, you are required to file this final return GSTR 10. And some forms are there for the payment of taxes ma. GST PMT 06. Every person who opted for this QRMP, quarterly return monthly payment scheme. What is the form number ma? PMT 06 with respect to first 2 months. By using this particular GST PMT 06 is required to pay the GST ma on or before 25th of the next month. And PMT 09 is a challan that will be used for transferring amount available in the cash ledger between the multiple heads ma. There is no due date as such. That means already I told you that cross utilization of funds across major or minor heads now possible. For transferring money from one head to another head, what is the challan that will be used ma? PMT 09. And next statement is here GSTR 2A. A system generated read-only statement of inward supplies for the recipient updated on real-time basis. That means when the seller enters the data in the GSTR 1, that data will be auto-populated in GSTR 2A of the recipient. And GSTR 2B. It is also a read-only document containing the details of ITC made available to the recipient every month. It is a static statement, ma. It is available only once a month, that is 14th day of next month. Okay, ma. That means whatever the purchases you have made in this month, based on that, one static statement, it will not change, ma, unless next month on of a particular date. But whereas GSTR 2A is a real-time basis one, that means when the seller updates the data, it will be automatically updated. GSTR 2A. But whereas GSTR 2B is a static statement, ma, generally it is available once in a month, that is 14th day of next month. And some in-depth analysis of few returns here. Furnishing of details of outward supplies, that is GSTR 1. Who are the persons that are required to file the GSTR 1, ma, generally? Every registered person, including the CTP, is required to file GSTR 1. But these people are excluded from making the outward supply, from filing this GSTR 1, ISD, NRDP, composition supplier, TDS deductors, TCS collectors, and supplier of OIDR services. These people are not required to file GSTR 1. Except these people, remaining all the registered persons are required to file the GSTR 1. Sir, here in GSTR 1, what are the details that are needed to be uploaded? The details that are needed to be uploaded here will be invoice details, ma, not the scanned copy of invoices. You are required to upload the invoice details. Here supplies are divided into two types, ma, B2B supplies and B2C supplies. B2B supplies means supplier is a registered person as well as recipient is also a registered person. B2C means supplier is a registered person but recipient is a unregistered person. If at all it is a B2B supply, and in that case, whether it is interstate supply or intrastate supply, separate invoice-wise details are to be uploaded. If at all it is a B2C supply, and with respect to intrastate, consolidated invoice details can be uploaded. And if at all it is interstate supplies, then depends upon value. Value less than or equal to 2.5 lakhs, consolidated details can be uploaded. If the value is more than 2.5 lakhs, then separate invoice-wise details are needed to be uploaded. So, whether separate details are needed to be uploaded or consolidated details are needed to be uploaded in GSTR 1, we need to check it here. If at all it is a B2B supply, whether it is an intrastate supply or an interstate supply, separate invoice-wise details are needed to be uploaded. If at all it is a B2C supply and intrastate supply, consolidated details can be uploaded. And if at all it is an interstate supply, it depends upon value. Value less than or equal to 2.5 lakhs, consolidated details can be uploaded. Value is more than 2.5 lakhs, separate invoice-wise details are required to be uploaded, ma. That is the things. This is the point what I am saying. Scanned copy of the invoices are not required to be uploaded, ma. Only certain informations from the invoices are needed to be uploaded. Sir, in this particular month, we did not make any supplies, sir. But still, we are needed to file this GSTR 1. Yes, even though no supplies are made in this month, you are required to file a return. That return is known as nil return. A nil GSTR 1 can be filed even through your registered mobile number as a SMS nowadays. Sir, I did not file the GSTR 1 for the previous month. Is it possible to file the current month GSTR 1? Answer is no. Unless you file GSTR 1 for the previous month, you cannot file the GSTR 1 for the current month. That is the point you should remember. Sir, are there any revised returns in respect of GSTR 1? No. There is no concept of revised return in relation to GST returns, ma. But by using amendment tables, definitely we can modify the data which is wrongly entered. Sir, what is the maximum time limit for making modifications or rectifications in GSTR 1? That time limit will be, which is specified in 16 subsection 4, the maximum time limit for claiming the ITC. That time limit will also be applicable to rectification of mistakes in GSTR 1. Then what is the time limit? Next financial year, September month, GSTR 3B filing date, that is October 20th, or date of annual return, whichever is earlier. Sir, in this particular month, say on the September 21st, our RC was cancelled. Then with respect to September month, is it required to file any GSTR 1? Yes, ma. Definitely it is required to file GSTR 1 for the active period. That means from September 1st to September 20th, because your RC was cancelled from September 21st. Therefore, the active period will be from September 1st to September 20th. You are required to file this GSTR 1. Next one is GSTR 3B, ma. With respect to GSTR 3B, it is a consolidated statement, ma. Like what are the outward supplies during that particular tax period, what are the inward supplies, which actually some supplies may be covered under RCM, and what is eligible ITC, how much amount you need to pay. All these details will be uploaded in GSTR 1, ma. Okay. Sir, even though no supplies are made, but still GSTR 3B is required to be filed. Yes, ma. A nil return is required to be submitted. Same concept will be applicable to GSTR 3B also. If the nil GSTR 3B can be filed through SMS. And next point is, what are the due dates of payment of taxes, ma? With respect to composition dealer, he is required to make the payment on a quarterly basis, ma. Quarter ending next month 18th. Whereas with respect to normal person who is not opted for QRMP scheme, he is required to pay the GST on a monthly basis on next month 20th. If the person opted for QRMP scheme, with respect to the first 2 months, he need to pay GST on or before 25th of the next month. But whereas with respect to last month of the quarter, he is required to file on or before 20th. And whereas you know that CDP and NRDP is required to make the advance payment of tax, ma, then only they will get the RC. And next point is here, first returns. With respect to this first return, do you remember the concept of revised tax invoice, ma? Whereas with respect to revised tax invoice, when your revised tax invoice is needed to be issued, the effective date of registration and the actual date of registration are different. In those cases, whatever the supplies that affected between the effective date of registration and the actual date of registration, we need to again issue a invoice, ma. That invoice is known as revised tax invoice. So whatever the supplies that happen between effective date of registration up to the actual date of registration, definitely you can file all those details in your first return, ma. That is a concept you need to remember. So fee for delay in the returns, ma. That means GSTR 1, GSTR 3B, GSTR 10, annual return. Any delay happens in filing these due dates. Then what is the quantum of this CGST late fee, ma, here? With respect to annual returns, 100 rupees per day or 0.25% of turnover, whichever is lower. And whereas with respect to GSTR 1, GSTR 3B and GSTR 10, the registered person having no outstanding, that means no output tax liability in the tax period, or the total amount of tax payable is 0. Simply, if at all it is a nil return, in that case, what is the position, ma? Definitely 10 rupees per day or 250 rupees, whichever is lower. Whereas other than the persons who are filing other than nil returns, it depends upon the aggregate turnover, ma. If the aggregate turnover in the preceding financial year is less than or equal to 1.5 crore, then 25 rupees per day or 1000, whichever is lower. If the aggregate turnover is more than 1.5 crore, but up to 5 crores, per day 25 rupees or 2500, whichever is lower. If your aggregate turnover is more than 5 crores, then per day 25 rupees or 5,000, whichever is lower. That is the point, ma. These are the fees here. Actually, as per the provisions, it is 100 rupees, ma. But recently, due to a special notification, it was reduced to 25 rupees. So, whatever the late fee you are paying above is a late fee that is needed to be paid as per CGST. Equal amount of SGST late fee is also needed to be paid. Okay, ma'am. Already I told you that there is no concept of revision of returns. So, there is no concept of revised return in our GST, ma'am. Only the thing we are having is here with respect to that is modifications by using amendment tables. So final returns, already also we discussed that when your RC is cancelled or surrendered, in those cases you are required to file the final returns. Why? Because when your RC is cancelled, whatever the closing stock of raw materials, semi-finished goods, finished goods that were there in that particular proportion, definitely you need to reverse the ITC. For that sake, you need to file this final returns. They are required to be filed within 3 months. That 3 months should be counted from the effective date of registration or the date of order of effective date of cancellation or the date of order of cancellation, whichever is latter date. From that particular date, within 3 months, you are required to file the final returns. Okay, my last but not the least, QRMP scheme. What is meant by this QRMP scheme? Quarterly return, monthly payment scheme. Who are the persons that are eligible for this QRMP scheme? Any person whose aggregate turnover is less than or equal to 5 crores in the preceding financial year, he is eligible. Okay, ma. When his aggregate turnover exceeds 5 crores, he is not eligible, ma. Okay. Sir, is it possible to withdraw from this QRMP scheme? Yes, withdrawal is available from the first day of the second month of the preceding quarter to the last day of the first month of the next quarter. Say, for example, with respect to April to June quarter, ma. So, withdrawal of the scheme is available to you from May 1st up to next quarter, first month, last day, that is July 31st. So, on or before these dates, you can withdraw from the QRMP scheme. And what are the returns that are required to be filed under QRMP scheme? Return names will not change, GSTR1 and GSTR3B. But this GSTR1 and GSTR3B will be paid on a quarterly basis, will be filed on a quarterly basis. GSTR1 filed quarterly on or before 13th of the succeeding month, whereas GSTR3B is depending upon the state on a quarter ending next month on or before 22nd or 24th is required to file the GSTR3B. But whereas here GSTR1 will be filed on a quarterly basis. In those cases, buyer will lose the benefit of IDC for the first 2 months. In order to overcome this practical difficulty, the concept of IFF was there, invoice furnishing facility. You can upload the invoices by the 13th of the succeeding month. These details will be auto-populated in recipient's GSTR2A, thereby enabling those persons to claim the IDC. But with respect to B2B invoices, only this facility is there. That too, there is a value limit of 50 lakhs. And in which way the tax will be paid? Under QRMP scheme, there is a methods, 2 methods are there. One is fixed sum method. Another one is self-assessment method. With respect to fixed sum method, every month you will pay 35%. That means if at all you just file the return on a quarterly basis, then what is the tax you paid in cash in the preceding quarter? In that, 35% is needed to be paid for each month in 2 months. Let's say, for example, in the preceding quarter, you just paid 10,000 rupees in cash. In that case, in that 35%, that is month 1, 3,500, month 2, 3,500 is required to be paid. If at all you follows fixed sum method. Sir, we are following fixed sum method, but we did not make the payment on a quarterly basis precedingly. We just made on monthly basis. In that case, what is the position? then how much tax you just paid in cash in the preceding month? 100% of the tax is needed to be paid in cash. Next one, self-assessment method. In that, definitely considering what are the outward supplies, what are the inward supplies, you have to self-assess on an estimated basis how much tax that is needed to be paid, and you can pay that in that self-assessment method. So, this is QRMP scheme, and there ends chapter number 10, returns. I hope you enjoyed this marathon very well, and anybody who is actually watching this particular video, this is applicable for November 2022 only, and if at all you are preparing for May 2023, then soon we will release the amendments videos whenever the statutory updates are available with respect to ICAI. So please combine this particular marathon videos along with those amendment videos in order to make your study effective. I hope all these marathon videos that are done by our Masterminds management will be very helpful to you. So I hope I hope that you definitely will give a positive feedback for the effort that is put by me as well as put by our management, our Masterminds management, to make it happen true. So by your appreciation in future, definitely we will do more of these things in order to benefit the student fraternity. So thank you and all the best to all of you for your exams. God bless you.